You're live.
All right. Good morning, everybody. Thanks for coming. Thanks for joining us. It's great to see you today. You look amazing. Thanks for coming in. To kick us off, I want to say thanks for being here. If you're watching us on YouTube, hit like, hit subscribe. It helps a great deal. We appreciate all that kind of good stuff. I'm going to start. My name is Jeff Gibby. I'll be here all week. I'm going to start by reading you a legal disclaimer. So let's go ahead and kind of batten down. Get ready. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse a purchase of a security, nor are they paid for the purchase of a security. No information contained in the presentation should be construed as investment advice or the solicitation to buy a security. So let me go ahead and pause YouTube. It's just kind of distracting me over here. And in a minute, it would actually kind of give me a lot of noise too. So anyway, thanks for coming. Before we get started, I want to say thank you to all of our great sponsors. We've got a bunch of them, and so I'm going to go fairly quickly. And as we kind of go through the day, we'll talk a little bit more about what they all do and that kind of stuff. AAII, you can find more information about AAII at AAII.com. Great nonprofit. You've heard about the sentiment surveys and all that kind of stuff. We appreciate all the work that they do and the support that they do for the conference. Technical analysis of stocks and commodities, you can find them at traders.com, www.traders.com. They've done 17,000 trading articles over the course of since 1982. They've got 1.3 million subscribers. It's a great magazine. I get it every month. It's just delivered, and you should too. It's a really, really good magazine. The Traders Forum. The Traders Forum is a partner of ours. You can find more about them and more about that at thetradersforum.com. There's live market chat. There's a lot of educational stuff that's up there that help you learn about the markets. And, it's a community of traders designed to help traders. CMT Association, another hugely well-respected company, cmtassociation.org. They do a great job. If you want to have a CMT designation at the end of your name, go to cmtassociation.org. And last but not least, Trade Thirsty. Trade Thirsty is a partner of Metastock for a number of years. We do a lot of business with Trade Thirsty. If you want to get the income generator ETF report, you can go to www.tradethirsty.com/free. So there we go. And of course, we're Metastock. I almost forgot, we're Metastock. We've been actually rated #1 in our software, in our price category for 31 years in a row. We're going to be talking a lot about Metastock, but I love it. It'll help you scan the markets, test trading ideas, find probable price movements with the forecaster, get real-time alerts, commentary, signals, and all of that starts at $75 a month. We'll actually give you 3 months if you want to do it. You can go, if you want to take advantage of any of the offers that we're doing today, you can metastock.com/conf promo, and that includes the 3-for-1. So without further ado, our first guest today is Daniel Sinnig. Daniel is a mad scientist when it comes to trading. I absolutely love him. He does a really, really good job in terms of self-optimizing indicators and kind of taking a new look at things and kind of just a very, very smart when it comes to trading. Hello, Neil. Good to see you. Hello, Revenus. It's good to see you. Daniel, let's go ahead and get you started. I'm going to go ahead and kind of make you the presenter now, and it'll kind of allow you to share your screen and do all that good stuff.
Hey, guys.
There you are.
Good morning, everyone. How is everyone today? I'm good. Thanks, Jeffrey. Always good to be here. All right, so let me go ahead and share my screen if I can find the button. There we go. All right, perfect. So you guys should be able to see my screen now. Jeffrey, can you please confirm this real quick?
I can confirm that real quick. It's confirmed.
It does? Okay.
All right. I'm going to go ahead and get out of your way. It's all yours. Go.
Perfect. Yeah. Well, once again, good morning, everyone. Welcome to this amazing week of Metastock. Lots of amazing speakers throughout the week. And I have to say, I'm very humbled to be allowed to headline this event of the Metastock multi-speaker for 2 times in a row. So thanks Metastock for this, for giving me this opportunity to come on Monday morning. Boy, what a week it was last week with the markets getting very volatile. Of course, all the indexes are up in the aftermath of the election. And now we have to see what's going to be happening this week. And I have one exciting thing to announce is that we are going to have a trade idea of the week. We're going to find this one live in this presentation. And in order to do this, we're going to use a tool which we internally call Supertrend on steroids. It's a new version that we created in our lab of the classic Supertrend indicator, which has amazing features such as odds prediction and auto optimization. So we're going to use this tool today together with another trend trading tool of ours to find our trade of the week for this week. And the best thing is that everyone in this room will be able to replicate these steps because they're very straightforward, actually quite mechanical. And so that's the objective of today's session. All right, but before we get started, a quick review of what happened when I came on the last time at the Metastock event on October 9th. In this event, we did something similar. We're also looking to find our trade idea of the week. And at that time, we called out to go long chop CB at current market levels with a target of 292. So that was the idea back then. And luckily, this trade worked out beautifully. And on October 17th, just 1 week later, or maybe 10 days later, we did hit our target. And actually, the price went even a bit higher. The target was at 292. The stock went up all the way to 300 before it retraced a bit. So that was a beautiful trade, worked out nicely. And today, we're going to try to do the exact same thing, but with a new symbol. So this is today's trade of today. A long trade of Linde PLC, a long entry around market levels, around 460, with a stop loss of 449. This is a little mistake here, and a target of 485. This would give us, if it works out, a reward to risk ratio of 2.27. And what we're going to do today is we're going to build up towards how I was able to find this trade. In fact, I found it yesterday when I did my weekly scanning, my weekly preparation for the week ahead. So in this presentation, I'm going to share with you how exactly I picked this trade and why I picked it. And of course, the idea is that we're going to have a similar success story as the previous trade of the day that I announced in my last Metastock webinar. Okay, but let's back up just a little bit. You may ask, okay, who is this guy? Who is Daniel Sinnig, who's trying to, talk about his trade of the week? Well, so my name is Daniel Sinnig, and I'm one of the founders of tradingindicators.com. We've been in business for almost 10 years, and we've built almost 1,000 different trading indicators and automated strategies for clients all over the world. But you know what? Becoming a trader was not always my career objective, at least not at first. Back in the day, my objective was to actually become a professor in software engineering. So I went through all the levels. I did my master's, my PhD, I did a postdoc. I started to teach at various universities. But you know what? During all these years, I was always fascinated by the world of finance and the markets and how they work. So I started trading on the side. But guess what? As most of you perhaps, if you start off trading, you make a lot of mistakes. And so did I. So I overtraded, I revenge traded, I took too much risk, I traded when market conditions were not right. And after donating quite a bit of money to the markets, I came to the hard realization, trading is not as straightforward as I thought, and I need help. And for me, needing help meant I need better tools which help me make better trading decisions. So as a software engineer, I then started programming. So I rolled up my sleeves, I started programming, and the very first tools that I have written were solely for my own purpose, to help me make better trading decisions. And once I realized, these tools are actually quite helpful. Then we decide, let's make them available to the public. And this is really how the story behind tradingindicators.com started. All right, so this is a bit of a backstory about who I am, but now let's get into today's topic. And just a quick reminder also from my side, when you trade, keep in mind that trading does contain substantial risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is capital that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, so with this out of the way, let's go back to our trade of today. So this long trade of Linde PLC at current market levels. Before I tell you how I found this trade, we need to back up a little bit. Let's talk about something which is a real classic. Let's talk about an indicator which has been out there, I believe, for at least 20 years. This indicator is called Supertrend. It is one of the most influential trend trading indicators. It was invented by a trader called Olivier Seban. He even wrote a book about this indicator, and it's available for most trading platforms. And it specializes in early detection of trend reversals. And the way it works is as follows. So you get these buy entry signals when the indicator senses, hey, a long trend is developing, and you get these sell entry signals. And these are always reversing. So a buy entry signal is replaced by a sell, which is replaced by a buy and a sell, and so forth and so forth. So these are always alternating. But then again, entering into the trade is really just one half of the story. Because once you're in a trade, what do you need to do? Well, you also need to get eventually out of the trade. And this is where the trading stop of this indicator comes in. You can see it here by means of this green line for long entries and this red line for short entries. And this is a true trading stop in the sense that it's only being tightened. So for a long entry, you can see the stop line is always going upwards. And for a short trade, it is always going downwards, never in the opposite direction. That's always tightening. And eventually, you can see here, this trading stop is broken. And when this happens, we reverse our position. Let's say from long, we're going to go to short, or if the short trading stop is broken, we're going to go to a long trade. So this is basically how this Supertrend Bullseye Supertrend indicator, the classic Supertrend indicator is working. Okay, that's the gist of it. And one key element that you may guess is the trading stop. And here the question is how far or how close to the price this trading stop should be. Or in other words, how much room should we give our trade? And in the classic Supertrend indicator, there are two parameters used to adjust this trading stop. One is called the ATR period, and one is called the multiplier. And in fact, the most important of these two is the multiplier period, because it basically tells the indicator how far, based on the current market's volatility, the trading stop should be away. So 1 time the ATR, 2 times the ATR, 1.5 times the ATR, and so forth. And you can imagine, depending on how you choose these parameters, the trading stop will be at a certain level, which is either too tight or too loose, and it might be at the sweet spot. But it's not as easy to find this level to be ideal. And this is exactly where we came in, because understanding what are the best settings for these two parameters is absolutely crucial. And it used to be up for guesswork. It used to be up to the trader to manually figure this one out. So we found this as a bit, in quotes, problematic. So what should be these best parameters for this ATR period and this multiplier parameter? So this is not easy to determine, and oftentimes, it was just either you just kept the default settings or you were just randomly playing around with these settings to find some good ones. So not ideal if it's manual. But the other problem was, how do we even know what the performance of this indicator is? So you could, I guess, eyeball the signals and see, okay, this seems to be working out quite nicely, or perhaps it's not working out so well, but there was no hard evidence. So this also was a problem. So we took this away and we decided a couple of years back, let's try to find a solution for these two problems. Entering our Supertrend Bullseye indicator, an indicator designed to overcome exactly these two problems, which are to automatically find the best parameters for a given symbol and time frame, and to indicate directly in the expert commentary in terms of MetaStock or directly on the chart for other platforms how well this indicator is actually performing. This may sound a bit cryptic, so let's be very concrete right now. Let's switch over to MetaStock and check out how this indicator is actually working. So let me quickly open up the MetaStock platform. And by the way, guys, if you have any questions, please don't be shy by all means. Put your questions into the questions dialog in your webinar tool. And Jeffrey and also Niklas, they will keep out an eye out on these questions and bring those to my attention as they see fit. Okay, so this is, and let's just only focus on the chart component for now. We're going to talk about this indicator below here a bit later in this webinar. Okay, so, and in fact, let me just make this chart just a bit bigger so we can see it a bit easier. All right, so what do we have here? We have Tesla on the daily time frame, and they went ahead and applied our Supertrend Bullseye indicator to the chart. So let's walk through it together. Let me just make this a little bit bigger so we can see it. Okay, all right, so first thing that you can directly see on this chart is that every buy signal eventually is replaced by a sell signal, which is then again replaced by a buy signal, a sell signal, and so forth. It is very clear that these signals are always alternating. Okay, so that's very clear. And we can also see where's our stop loss. Because once again, it is so important to know where your exit level is. This is a key ingredient in any trading decision. Let me explain to you why. Why is this so important? Well, this goes back to risk management. Imagine you decide to go long Tesla, maybe at this level here, 235, around this level. Okay, that's good. You made already, you set up your mind, okay, I want to go long Tesla. But what else do we need to decide on? It is not sufficient to just decide, hey, let's go long. We also need to know what should be our position size. How many shares of Tesla in this case should I purchase? The answer to this question is, it goes back directly to your risk management. How much money am I willing to risk on this trade? And in order to answer this question, we need to know when to get out of this trade at the worst case. If everything goes against us, when will we get out? And this is where the trading stop or stop loss comes in. It is so important to know when to get out at which level in the worst case, because you can use this information then to determine, okay, if I get stopped out at this level here at 202 around, my entry price is at let's say 230 or 235. So if Tesla goes against me at 30 points, I'm going to get stopped out. So then I can use this information to position size so that if I get stopped out, I don't lose more money above my risk tolerance. So I don't lose too much. Okay, so this is so important to have the stop loss. So this is where our trading stop comes in. It will tell you right at the entry signal, where should I get out? Okay, so now you may say, all right, this seems pretty standard. I've seen Supertrend before. There's nothing new here. That is true. Right now, there's nothing new to be seen. But let me open up the expert commentary. So I'm going to go to Expert Advisor here and open up the commentary subpanel. It will open up directly below your price chart, or in some cases on the left-hand side, depending on your layout. And what we can see here is, first of all, currently, this is going back to current market action, Tesla is in a long trend, a long trade. You can see we are currently long, and the long entry signal actually came right here a couple of days before the election. So a nice signal, which of course, in the aftermath of the election worked out beautifully. So Tesla is up by quite a bit, and actually jumped up this morning once again. So we are long, and our trading stop is currently at level 277. So we already locked in, or had we taken this trade, we would have locked in quite a bit of profit at this point. All right, but now the interesting part comes in. If I scroll all the way to the end, Look at this one here, our performance statistics. Here, the indicator is showing to you what has been the performance had we taken every single trade. So every long trade and every short trade. And the most important factor is this one down here, profit factor. So a profit factor of 1.88. So let me quickly back up a little bit. A profit factor is a metric which we use a lot internally in our trading room, which shows you, independent of your position size, how profitable a trading system is or how unprofitable it is. And as a rule of thumb, everything above 1 shows a profitable trading system. Everything below 1 is not profitable. Okay, in this case, we have a profit factor of 1.88, which is, quite good. This shows you, okay, well, we had a very nice profit factor over 28 trades, yeah, which would give us a win rate for long trades of 35% and for short trades of 50%. Now you may say, okay, 35% win rate for long trades, that doesn't sound very exciting. And I agree with you. It doesn't sound that good, but keep in mind, for this indicator, for Supertrend, it's a trend indicator. So it rides the trend as long as possible. And this is why typically a winner with this indicator outpaces a loser by quite a bit. So our winners are much, much bigger than our losers are. So even with a win rate of only 35%, you actually can be quite profitable, as shown here by the profit factor metric. Okay, so this is good to know. Come and see what is the performance, what has been the performance of this indicator so far. So this is one thing we've added to the classic Supertrend. But there's one more thing. Let me scroll up a little bit. Look at this section here, settings used. You can see here that the indicator had automatically determined that for the multiplier and the ATR period, a setting of 3 and 100 are the best settings for this particular symbol and time frame. So for Tesla, on the daily time frame. But guess what? Whenever I change time frame, whenever I change symbol, these settings will change. They will change to the new optimized settings. So let me just demonstrate this to you. Let me switch Tesla from the daily to the, let's say, the 5-minute time frame. So I'm doing this. It's recalculating. It takes a little second. With our new signals on the chart, as soon as this is done, you can see our trading stop and so forth. And if I now scroll down here, we can see that for the Tesla on the 5-minute, the best settings, the optimal settings are now 4.5 for the multiplier and the period of 100 for the ATR period, giving us a new profit factor of 2.29. So it worked even better on the smaller time frame. And this is exactly how this indicator works. It will automatically find the best settings for you so that you as a trader, you don't have to. So now imagine how much time you will save by not having to adjust these settings every time you're on a new symbol or a new time frame. All right, so let's move on. Let's go to a different example, Oxy. So here we have Oxy, and for Oxy, you can see here that the indicator determined that a very wide stop loss is the best settings for this particular one. You can see how far the stop loss is away, meaning that in this case, we're going to give our trade much more room to play out because Oxy, for some reason, we don't question why that is, requires such a wide stop loss. And if you go all the way down here, we can see that, here in this case, our multiplier is set to a setting of 8, which is very far. So the higher this number, the multiplier, the further away your trading stop will be, the more room you will give your trade. All right, one more example, Google. All right, so back to Google. Once again, now we have Google loaded. And if you go down here, once again, on this case, the multiplier is by chance the same as we had for Oxy. Once again, a wide trading stop, giving our long and short trades more room to play out. You can see here how well this has worked out for Google. So this brings me back to my original point. Every single symbol on every single time frame has its own characteristics. They're all behaving differently. So the one size fits all methodology that every indicator should be configured the same way for every symbol, to me that's outdated. because symbols are not the same. They behave differently. They have different volatility, different characteristics. So wouldn't it be a better idea to have, customized settings for each symbol and time frame? So I believe the answer to this is yes. And if we have a tool which will automatically find these customized settings for us, even better. This is where our Supertrend Bullseye indicator comes in. Okay, one more example, Bitcoin. See, let me open up Bitcoin. Of course, this also works, and this brings me back to another point. This indicator works on any asset class. It doesn't matter if you trade stocks. We had some stock examples here, trade ETFs, trade cryptos, or FX, or futures. It will work on any asset class and also on any time frame. It doesn't matter if it's the daily time frame, or perhaps the 50-minute time frame, or perhaps the tick chart. It doesn't matter. It works on all these time frames. So we have Bitcoin. In this case, the best settings for Bitcoin is 6.5 for the multiplier and 20 for the ATR period, giving us a great win rate. This is a daily chart of 100% for our long trades in recent history and 33% for the short trades. And of course, currently, Bitcoin also went long. And by the way, this happened before the election. Of course, it would have been easy to go long once we had this big move in the aftermath of the election, but the indicator actually picked this move quite a bit earlier on, on October 27. All right, so let's change it up. Let's go to a futures contract. Here, the S&P E-mini futures, and we have the 10-minute time frame. All right, so what do we see here? We see once again our classic super trend signals applied to the chart. And if I zoom in a little bit, we can see that this indicator actually went short this morning at 7:40 a.m. And what a great decision that was. If you're a day trader, you probably would be very happy right now to be short the S&P 500 because the market has been quite bearish the entire morning, and this bearish move is currently continuing. So we're currently short. Our entry was at this bar here, and our trading stop already has been adjusted a couple of times to lock in some profits. And if you scroll down to our win rate, we can see that over the last 16 trades, we won 50% of the short ones, 75% of the long trades, which gives us a whopping profit factor of 4.06, which is really, really high. Okay. Perfect. So I hope this gives you an idea of how this indicator works on the MetaStock platform. And guys, if you have any questions, let me just quickly see if there are any. Nicholas, do you see any questions? Let me just quickly. Oh, Nicholas, he said you were muted. Yeah, we were good. Perfect. Okay, no questions for now. And I can see some of these questions have already been answered directly in the questions pop-up. All right. So let me summarize real quick what we have seen so far. Okay, so we have seen how our Supertrend Bullseye indicator works on the MetaStock platform. And we've seen that it comes with an auto optimization feature, which will find the best parameters automatically for you. We've also seen its performance statistics. What we have not seen yet are two additional features which are built in. One is called the reversal mode, which is kind of be either set to on close or on touch, and the trading style feature. And especially the second one here was really important to us because imagine you are a stock trader. And if you're a bit like me, for stocks, I always have the upside bias. I believe that stocks, at least over time, they are more likely to rise than to fall. So you have a bit of a bias to the long side. And if you have this bias, and if you already know, hey, I only want to trade stocks to the long side. I don't really care about the short side. I don't want to short a stock. I only want to trade stocks to the long side. Wouldn't it be cool if we could configure the Supertrend Bullseye indicator to optimize itself for only the long signals and not for both directions, longs and shorts? Because if I'm only interested to trade long anyways, the optimizer should be, perhaps only optimized for the long trades. And this is now possible also with this indicator. There's a setting, which I may touch on a bit later, where you can actually say, hey, optimize only for the long trades. Let's not care about the short ones. All right, perfect. But let me, change topic just a little bit. because seeing how the indicator works on a particular chart is one thing, but wouldn't it be nice to be able to find out which symbols actually currently have entry signals? Which symbols on the most recent bar currently have either a long entry signal or a short entry signal? Well, that's a valid question to ask. Well, with Metastock, the answer to this question is actually quite simple, because one of my favorite features of the Metastock platform is its very powerful scanner, which makes it so easy to find symbols which currently have the setup that you are looking for. All right, so how does this work? Well, actually in Metastock and with our indicator, we can do something which is called Generation 3 scanning. Okay, what is that? That sounds weird. What is Generation 3 scanning? Well, let me walk you through it real quick. Generation 1 scanning is your plain old scanning process. You scan through perhaps, I don't know, 500 symbols, maybe the S&P 500s, to see which symbols currently have signals. But you use the same settings, the same parameters throughout every single signal, and you have no idea which of the signals are better than other ones. There's no way to rank them or to sort them in any way. You just find out which symbols currently have signals. Okay, that's plain old Generation 1 scanning. With Generation 2 scanning, you can actually rank your signals by their quality. And we can do this by showing you directly in the scan results what is the profit factor and win rate for each of these signals, therefore allowing you to sort and rank them and focus only on the ones which have been proven to be most profitable. This again saves you a lot of time. But we can push it one step further. Generation 3 scanning not only shows you directly in the scan results how profitable the signal was, but it also uses optimized settings on a per symbol basis. Instead of using one size fits all, we are using different parameters for every symbol we're scanning through. So for Tesla, we're using the optimal parameters. Then for Microsoft, we're using different optimal parameters. For NVIDIA, we're using different optimal parameters, and so forth and so forth. And this makes Generation 3 scanning so powerful because it will always use optimized settings on a per symbol basis. All right, time to see how this works in real life. So once again, I'm going to switch over to our Metastock platform. Just 1 second if I can. Oops, I have a pop-up here, just a second. So I'm going to switch to Metastock. And the scanning in Metastock is initiated through your power panel. So you kind of click on this little P here. This opens up your power panel. And scans in Metastock are called explorations. You're going to go down here to the Explorer tab. All right. And the first thing that you will pick in your list of explorations is the one which scans for Supertrend Bullseye. We call this STBE. Supertrend Bullseye is the abbreviation, buy and sell signals. So this one here. So this one is selected. I already pre-selected it before. Okay, that's step number 1. Step number 2 is you configure the time frame that you want to scan through. So in this case, let's keep the daily time frame, but there are many different options. I'm going to pick the daily time frame. And step number 3 is you will pick through how many symbols do you want to scan through. And this is really where Metastock stands out, because you can literally scan through 324,000 symbols. That's crazy. That's a crazy amount of symbols that is available in Metastock, which makes it so powerful for its scanning. Of course, today in this webinar, we're not going to do this. That's way too much. We're going to focus, for the sake of this demonstration, only, in quotes, only on the S&P 500 symbol. So I selected down here. I can see it. Come on. Yeah, there we go, the S&P 500, which are actually 503 symbols. So once you do this, you will click on Start Exploration and the scanning process will start. I'm not going to do this right now because I believe I do already have my scan results saved, because I don't want to bore you with this scanning process. It takes about maybe 3 or 4 minutes. Still too long for the sake of this webinar. Let's just open up the report right now. But just believe me, once you click Start Exploration, it will show you exactly what I'm going to show you right now. So this opens up the scan report. You can see it here. I ran my scan. It actually took, how long did it take? Does it say here? Runtime. It doesn't say, but I believe it took about 5 minutes to run. Okay, so we can see here that we do have 7 symbols which currently either have a buy entry signal or a sell entry signal. You can see it here. If it's a buy signal, the value in this buy column is different from 0. So these first 5 ones are buy signals, and the last 2 ones are sell signals because the sell column has a value different from 0. So it's very easy to see. All right, but what makes it really powerful is this column here, the profit factor, because it allows you to sort your signals by means of the profit factor. Isn't that cool? So now you could say, for example, for your buy entries, the ones here which have a non-zero value, the best one with the highest profit factor is this one here, Train Technology, with a profit factor of 1.83 or 1.84 if you round this. A long win rate of 71%. You can see it directly in the scan result. Which of my hits, and this could be a lot of hits, because if you scan through thousands of symbols, you may have a list here of hundreds of symbols with signals. You can't trade all of them. You can't even look at all of them. It's going to take too long. You need to have a way to rank them and sort them. This is exactly what we've done right now. We sort them by profit factor. And if I open up this symbol, I'll click on this little icon here to load it onto the price chart. You can see that for Train Technology, just move this out of the way. Actually, let me just go to this tab here. It's the same tab. For Train Technology, we indeed do have an entry signal on the last close bar, which was Friday's bar. Oops. Oh, I clicked the wrong button. I know what I did. I wanted to zoom in a little bit, but let me quickly go back. I may have to reopen this. Oh, there we go. Okay, so it's loading one more time. What's going on here? I think my template just got, just 1 second, guys. Bear with me for 1 second. Actually, let me just go here. This will happen when you accidentally push a wrong button. Okay, back here. So we are at, just give me 1 second, scaling. There we go. Okay, so here, now we are back in business. We can see that we did have a long entry signal at the last close bar, which was Friday's bar. In fact, this makes it so easy to use on the weekends. On the weekend, I actually ran the scan, and I was able to find this trade, which was still valid this morning. So we have this signal here, a nice long entry signal. We see exactly where our trading stop would be if we take it, and we can already see that today we are already a little bit, above our entry price. So the market already went a bit up. If you scroll down here in our expert commentary, you can see that in terms of performance statistics, it is confirmed that we did indeed have a profit factor of 1.84 for this symbol, and perhaps more importantly, our long win rate is at a whopping 71% over 14 trades. That's pretty good, especially if you consider that our winners typically outpace our losers with this indicator. You can hopefully see, how easy it is to find interesting setups using a combination of Metastock scanner and our Supertrend auto optimizing indicator. All right, perfect. So this was the scanning process, but I have to go back one more time to our slides because there's one piece which is really important. Okay, and don't be scared of what you're gonna see right now. Let's optimize Supertrend Bullseye. But you may say, oh my God, how can I optimize an auto optimizing indicator? Isn't this a contradiction? Actually, it is not. Let me walk you through it. Okay, there are actually a few things that you can do to further improve the signal quality of this indicator. So the first thing that you can do is you can tell the indicator or the optimizer in the indicator how exhaustive or how loose the optimization process should be. So how many different combinations of parameters should be tried out to find the best ones? That's one thing you can adjust. The second thing that you can adjust, and I touched upon this a bit earlier, is you can choose which trading style you want. Once again, if you are only interested in trading long, you could tell the indicator, hey, only optimize for long signals. We don't care about the short ones. So you can do this. And the third one, we're gonna expand on this a little bit is you can combine Supertrend Bullseye with another indicator of ours, which is called Trend Radar. Let me explain to you why this can be so powerful. So Trend Radar, you may have already seen it below the price chart on the examples that I pulled up, is this little heat map just below your chart. It doesn't start your chart, it's just this little area of green and red stuff in it. So how does this one work? It shows you basically at a glance what your short-term trends, medium-term trends, and long-term trends are doing. So short-term trends are these rows on the top, the medium-term trends are the ones in the middle, and the long-term trends are the ones at the bottom. And why is this important? Well, as a trend trader, and we'll talk about trend trading today, Supertrend Bullseye is a trend trading indicator. So as a trend trader, there are good moments to enter into a trade, and there are not so good moments. And as a trend trader, a good moment, for example, would be when the trend takes a little bit of a break, a little bit of a retracement from highest levels to a lower level. Like here, it went down a little bit, which is a great moment to re-enter into this long trade. Or here when it goes down, or here when it goes down. And Trend Radar actually shows you directly in this heat map when we have such a healthy pullback scenario. You can see it here when we have a little red patch at the upper levels of Trend Radar, which are red, but the lower ones are still green. That's a healthy pullback. The short-term trends are pulling down while the long-term trends are still bullish. Same here and same here. And these are great opportunities to re-enter long into this trade. Okay, so this is what this indicator does, but how would this work together with Supertrend Bullseye? Let me explain to you. All right, so if we were to combine Supertrend Bullseye with Trend Radar, we could do it in the following way. We could use Supertrend Bullseye to determine our overall trend direction. As you know, the indicator is either bullish or bearish, either in a long trade or in a short trade. So Supertrend Bullseye could determine the trend direction, and then we could use Trend Radar to find these healthy pullbacks within the trend that we're currently in. Okay, and best of all, we can use the Metastock scanner to do all this for us. So we can just lean back and let just the scanner run while it is finding all these interesting long or short entry setups within a strong trend. Okay, so let's go back one more time to Metastock. So let's go to there we go, to Metastock. Now, the first thing I'm actually gonna do, I'm gonna configure just a little bit how Supertrend Bullseye works. I'm gonna go to our, let me just drag this in just a second. I'm gonna go to our indicator list here and I will select the settings indicator, set it Supertrend Bullseye settings. I'm gonna click on edit. And one thing I'm gonna do here is I'm gonna change my trading style from long and shorts to long only. Because we're a stock trader, at least for me, I only like to trade stocks to the long side. So I'm gonna tell the optimizer, hey, optimize only for long entry signals. That's the first thing I'm gonna do. And the second thing is I'm gonna, tweak a little bit how exhaustive my optimizer should work. And you don't need to do this, I'm just gonna do this as an example here. I'm gonna change, I'm gonna tell the optimizer, try out all combinations for the multiplier parameter from 3 all the way up till 6 in increments of 0.5. And you can pick whatever values you want here, but this is one way to tweak the optimizer. I click OK. All right, I'm gonna close this. And once again, you can just use the default settings. It will work just as well. So don't be scared by this. All right, then I'm gonna go to our power panel and let's run a new scan. And this scan we're actually gonna run live right now. So what do we want to scan for? So first of all, we want to scan through our S&P 500 symbols to find out which of these symbols are currently long and which ones are currently short. For this one, we can use this exploration here. Supertrend Bullseye Trade. I'm gonna pick this one as our first point. And the second one I'm gonna pick is this one down here. Trend Radar long setups with a pullback of level 4. Basically where we have 4 rows, you can see it here, 4 rows red. That's the pullback. A great opportunity to re-enter long. So I'm gonna look for all these ones. And now this is where the magic happens. I am going to combine these two scans together. I'm going to tell the Metastock scanner first, run this pullback scan, because it's typically better this way because it's a faster scan. And then, based on the results, run our Supertrend Bullseye open trade scan. Sounds complicated, but let me just start it and you're going to see what's happening. So I'm going to start this exploration. I'm going to drag this one in, and this should take perhaps 40 seconds to complete. So once this starts, you can see it's fairly fast. And while this is running, I'm going to look at some questions. Nicholas, do we have some questions?
Yeah, so we have a question down from Michael. He wants to know, what is the backtesting percentage win rates on this product? I think he means like across most symbols. And how many years is that calculated over?
Yes, okay, so you can actually adjust this in the settings for Supertrend Bullseye. There's another setting, I didn't go over it in this presentation, which is called look back period. By default, it's set to 1000 bars. So if you're on the daily time frame, that goes back on average maybe 4 years, or maybe 3 to 4 years, okay? But you can change it to whatever you want. And in fact, we do have a bootcamp video recorded where we detail all these different things that you can adjust for the indicators. It's a 2-hour bootcamp. I believe we recorded this one maybe 4 weeks ago together with the Metastock team. It's quite comprehensive and it walks you through every single thing that you can do with the indicator, including running system tests as well. So if you decide to use our indicator, you of course will also get access to this bootcamp.
Yeah, and Michael, the win rates change with every chart and time frame as well. And Dan, we have a question from Dan. He wanted to know, how come sometimes on the chart it looks like price crosses the trailing stop, but the trade doesn't stop out?
That's a great question. In fact, remember when I said in the beginning there are 2 reversal modes. One is called on close and one is called on touch. So on close means that the bar actually needs to close below the trading stop for a reversal to happen if it's a long trade, or above the trading stop for a short trade. It needs to close there. Wicking down just below it is not sufficient if the on close policy is chosen. If you choose on touch, then it will reverse right when price just touches the trading stop, the reversal will happen. So you actually can control that. Perfect. Okay, so thanks for these questions, really good questions, by the way. And let's now see what is happening here. So our scan finished. It took 1 minute and 34 seconds. Once again, thanks Metastock for providing us with such a powerful scanner. One of my favorite things. So we can see that of our 500 symbols that we scanned through, because we scanned the S&P 500s, we can see that Trend Radar found 27 symbols which are currently in a pullback scenario like this, where we are in an uptrend, but we do have a level 4 pullback. Okay, and of those 27 hits, 9 of those, you can see the 9 here, are currently also long in terms of Supertrend Bullseye. Remember, we set the trade direction to long only. So 9 of those are currently long. And these 9 stocks are shown right here. Perfect. So these are all long. You can see it here. There's nothing in the short column because that's what we're scanning for. And now is where the magic happens. I'm going to sort these 9 symbols by their profit factor. And once it's done, I can see that the first one that comes up is GE. All right, so let's open it up. So GE with a profit factor of 999. It's actually we only had winners so far. That's why it says 999. Okay, there's no loser. That's why the profit factor is so high. In theory, it would be infinite, but since we cannot show this value here, it's 999. All right, we can see that. All right, with our stock here, we do have a long trade open, and currently, look at Trend Radar, we have this nice pullback scenario, which I was mentioning about, which is your best friend if you're a trend trader. You don't want to enter when you're up here, that's overextended. You want to enter into your trend trade all the way down here. And there are 2 good reasons for this. Reason number 1 is you're going to get a much better price. So imagine here you would have ended at, I don't know, 92 versus now at 86. And reason number 2, look how close your stop loss would be. You have much less risk on the table. And if this trade works out, you are in for a real great treat because you have a very tight stop loss, but a lot of upside potential. All right, so this is would have been a really interesting stock to trade for my trade of the day, of the week. But I decided not to use this one because it's a bit sideways for me. I'd like to see overall this is going to be a bit more bullish. So I decided not to use this one as my trade of the week. Instead, I picked the second one, the runner-up in my list here. This one here with a profit factor of 6.4, still amazing, which is Linde PLC. So let me open up this one. All right. So opening up Linde. All right, this is loading. So I'm going to use this chart here, so it's a bit faster, but it's the same chart. And we can see that, look at this one. It actually looks really nice. It's a very bullish stock in general. If you go back even further in time, you'll see that this stock has been trending up for a long time. It's very bullish. And we currently had this beautiful pullback after being super extended. So we were almost up to 480 here. Now we're pulled back to 459 around this. We're trading around 460 right now. I really like this one because for various reasons. So let me now walk you through my decision process. Reason number one, we do have this healthy pullback scenario as per Trend Radar within a strong uptrend. You can see that it's mostly green, but every once in a while we get these red patches, which is a prime opportunity to re-enter. Reason number two is Supertrend Bullseye works amazing to the long side with a 66.6 win rate to the long side and a whopping profit factor of 6.43. That's amazing, very high profit factor. And reason number three, and this goes back to a bit of fundamentals, is that we did have recently an earnings gap. You can see here earnings came out on October 30th or maybe the 31st. We gapped down. We get all the way down. This gap is not yet closed. And if you study a bit about gaps tend to be filled over time. So I believe this gap fill is in the books in the near future, as we're going to see more upside momentum to at least fill this gap. But I believe we're going to actually see all-time highs for this symbol. And this is reason number three why I picked this particular trade for my trade of today. Long entry, Linde PLC at around 460 current market levels. Your stop loss just below your at 449. It's very tight, and your profit target just below the all-time highs at 485. And that's a conservative profit target. I believe this stock will go even higher than this, but this would give you a 2.27 reward to risk ratio. And you could see that how easy it was to find this setup using a combination of Metastock and our Supertrend Bullseye and Trend Radar indicator. All right, now you may ask another question: are these indicators for me? Should I be using them or not? Well, let me help you a little bit with that, because it doesn't really matter whether you are a day trader or a scalper or a swing trader or even investor. These indicators, Supertrend Bullseye and Trend Radar, they will work on all time frames and chart types. It doesn't matter. It also doesn't matter whether you trade stocks or FX or futures or cryptos. The indicators will work on any asset class and any symbol. It doesn't matter what it is. And if you are also wondering, of course, if you are Metastock, you can use everything that I've shown you today with Metastock, and it works so nicely, especially with the latest version of Metastock, which is Metastock 19. It's a beautiful combination. But if you're on a different platform like MetaTrader or NinjaTrader or TradingView or Thinkorswim or ModifWave, you can use these indicators in a similar way. And if you are a bit of an engineer like me and who believes that good tools can make your life easier and good trading tools can make your trading life easier, then these indicators are definitely for you, because they will do most of the heavy lifting for you. They will auto-optimize the parameters so you don't have to. You can scan for setups, so you don't have to manually go through symbol and symbol. And you can even rank your scan results by means of the quality. So all of these are huge time savers to make your trading life easier, so that you, as a trader, you can focus on what really matters, which is to make the final trading decision, whether you want to pull the trigger or perhaps stay on the sidelines. This is what you want to focus on as a trader, not the other tedious stuff. Okay, now we have put together a great special for you. First of all, to thank you guys for joining this Metastock event today and to listen to me speak. So thank you so much for this. I know your time is precious, and this means really the world to us, but also to celebrate the arrival of Supertrend Bullseye at Metastock. It's a new addition to the Metastock family. We only released it about a month or 2 months ago. And to celebrate this, we have put together a special offer, which will get you the Supertrend Bullseye indicator. First of all, for life. You're gonna get these indicators for life. You never have to pay a single dime again. And this includes the Supertrend Bullseye indicator with its auto optimization feature and the win rates, the estimated odds of winning your next trade. So you're gonna get all this. But and this is for life. But we decided to also add in a couple of bonuses. And bonus number one is an exclusive membership to our weekly live trading sessions and our Discord channel. Typically at $9.97 per year, we're gonna throw this in for as long as we're having the session without you paying a single dime. So you're gonna get all these as well. And you may have guessed it, you will also get our trend radar indicator, the perfect companion to Supertrend Bullseye, also for life. And we're going to also throw in our ebook, Mastering Trends with Patterns, which will tell you everything you need to know about this trend radar indicator. So you're going to get all these bonus offers. But there's one more thing. We have decided to celebrate the arrival of this indicator for Metastock to also slash down the lifetime offer for all this to only $5.97. That's another $200 savings. And if you want to take advantage of this offer, all you need to do is to go to tradingindicators.com/bulls. This will redirect you to a Metastock page where you can take advantage of this, I believe, a very nice offer for you, including Supertrend Bullseye, the Trend Radar Indicator, our ebook, and the exclusive membership to our live sessions, which happen every single Tuesday at 12 p.m. Eastern. And of course, the next session being tomorrow at 12 p.m. So you're gonna get all this if you want to take advantage of this offer. All right, so we have 3 minutes left, and I believe there's some time for some questions. Nicholas, do we have any questions at this point?
Dana, we had a question from Mohammed. He wanted to know, does this work for options?
Yes, it does, because for options, just like for any trading, you need to decide or predict what's going to happen in the future. And Supertrend Bullseye is, an indicator which is designed to do this because it shows you early reversals of trends. Let's say if you, want to get in early to an options trade where option prices are still reasonable, we can use Supertrend Bullseye by its early trend reversal detection exactly for this purpose. And just follow Supertrend Bullseye, its signals, and by also consulting its performance statistics to see how well have these signals worked out in the past.
Thank you, Daniel. And we had a symbol request, if you can open up a chart. We have one for Amazon, and we also had one, let me find it, for NVIDIA as well.
Okay, let's check it out quickly. So let me go here to our power panel, and we have 2 more minutes. Perfect. So let me go back to the chart here. Let's start. What was the first Amazon? Okay, so Amazon.o, I believe, on the Metastock. Come on. This, by the way, is not because of our indicator. It's my computer is a little bit slow. Come on. It's gonna, I think it's calculating something in the background. But as soon as this is done, I will open up the symbol. Nicholas, are there any other ones? There we go, open chart. Yeah, we have any other questions?
Yeah, Daniel, we have one from Art Jacob, who says, is the discount, he's asking about a different platform. Art, I'm gonna answer you in the chat. And Mohammed wanted to know, Daniel, if we take installments for payments.
That's a question you need to take up with Metastock support. And Jeffrey, I believe you would be in a better position to answer this. My guess tells me perhaps not, because it's already very discounted, but yeah, Jeffrey, perhaps you can take this one away.
But we do offer money back guarantee on it.
Say that again?
I say we do not.
Oh, you do not? Yeah, okay.
We do offer a 30-day money back guarantee on it.
Ah, perfect. So that way you can try it out risk-free. That's actually good to know.
And,
so that's a 30.
And we'll throw in a copy of Metastock if you need it, like a trial copy.
Oh boy,
nice. Be clear.
So this is, I'm not sure why this is stalling, but this is Amazon. And you can see here that Supertrend Bullseye actually took quite a few nice signals here, which followed very nicely the swing of the Amazon symbol. So up, down, and they pick these reversals quite nicely throughout the way. And if I were to go down here, okay, here, we can see that a nice profit factor of 1.6, and this is actually for long only. Don't be shocked by this 0% win rate for shorts. Remember, at the beginning, a while back, we configured the indicator to only optimize for long trades. This is why it says 46% here for the long win rate. Keep in mind that our winners, you can see it very nicely, typically outpace our losers by quite a bit. So even 46% is a good win rate for Supertrend Bullseye, especially when the profit factor says 1.6. All right, I don't think we have time for NVIDIA, but guys, if you have any simple requests, you can always reach out to us at tradingindicators.com. Send me a quick note, go to our homepage, there's the contact form at tradingindicators.com where you can send any question to me, and we're gonna answer these as soon as we get them. All right, well, thanks Jeffrey, and thanks everyone for listening. I hope to welcome you guys on board with this great offer, and Jeffrey, please take it away.
You bet. Thank you. Oh man, I got some light right on my face. Thanks, Daniel.
Perfect.
All right.
Thanks, guys. Have a great rest of the conference. Bye-bye.
All right. Yeah, we will. Let's do this. And we're just going to go ahead and kind of switch over real quick here. Okay. All right. We did have a question. I'm going to go ahead and leave this up. Let me go ahead and show my screen and make sure it's the right screen. All right, cool. Very cool. We'd have a question on how to get a hold of us. You can call us at 800-882-3040, metastock.com/saleschat. Or if you want to email me, it was actually specifically a question about how to get in touch with me. Always welcome to email me, jeffrey.gibby@metastock.com. I'm just going to send that into the chat. So, Mohammed, I'll thank you for your interest. I'll have somebody get in touch with you right away. Do you want to message in your information? And then that way I can send it straight to one of our reps. Thank you for being interested. Let me see here. All right. So you can get all that with the Trend Radar. I love all the stuff that's actually included with it. You get the weekly lunch and learn sessions, which I love the title of that. The 30-day money-back guarantee will give you a trial to Metastock. So if you're kind of wondering, how can I get that great scanner that Daniel and I like so much? That's a great way. I feel like, with the tools that are available in Metastock, they do such a great job. Metastock.com/conf promo to take advantage of that. Call us 800-882-3040, metastock.com/saleschat. All of those are great ways to get in touch with us. If you have any questions, if you want to do that, if you want to talk to someone right away, it's a great way to do it. So thank you very much, Daniel, for joining us. Well, starting after the next presenter, I'm going to go ahead and say that we're going to start giving away prizes. I've got a ton of prizes to give away. If you haven't, if you're watching us on YouTube right now and you haven't registered for the event, go to metastock.com/traders-conference and register, because I'm about to pull the list. So if you're watching a GoToWebinar, you're registered. So don't worry about it. In any case, we're Metastock. You can take advantage of that at metastock.com/conf promo, metastock.com/saleschat, 800-882-3040. Our next presenter is actually from the AAII. You can find out more about the AAII, American Association of Individual Investors, if you go to AAII.com. It's a nonprofit. They've been in business, or in nonprofiting, I guess, since 1978. They do a lot of education, they do newsletters, they do sentiment surveys, they do research, start portfolios, commentary, grading of stocks, all kinds of stuff. Hugely well-respected, well-reputed. I'm going to look up and see if that's a word here, because maybe I'll take it out of my vocabulary if not, but AAII.com, you can take a look at all the services that they offer to the individual investors. So Rondeau is actually with the AAII. He's our next speaker. He's their investment strategist, their senior market technical analysis. They do video education suites. He's done 160 plus seminars over the course of the years. And here's all of the information for him. One thing that I like about Ray quite a bit is kind of the factors that he uses when he's looking at kind of evaluating systems and kind of the way he looks at things. So without further ado, let's go ahead and get you started. Raymond, I can see your mic's on. How are you doing?
I'm doing good, Jeff. I'm doing well. If you can help me get showing here, we like to get up.
Yeah, I should have just asked you.
I see
If
it.
you want to share your screen?
Yeah.
Now, I do see the slideshow view.
Okay, are you looking at my percentage view?
I'm seeing the presenter view too. Yes, correct.
We don't want to do that. So how do we change that, Jeff?
If you go right there where it says display settings right above the slide, you can just swap them. Right there, yeah. And then set presenter view and slideshow. And that's all you have to do.
Yeah, that's not good though. Because now I'm on the wrong one.
Oh, okay. Well, if you want to swatch it back, what you can do is where it says show your screen in the console, you can change it to the other screen.
Okay, if you could help. We've never had trouble with this before. I'm trying to do it from your console right here to pick this.
Yeah. So you see where it says sharing?
I do see sharing, yes.
Click on the triangle.
Yeah, you got it. Show my screen.
I
got it. Let's try
There's
another
a
one.
little down arrow next to show screen.
There we go.
Success. Yes. First try.
Sorry about that.
Do you want your camera on today?
I do. You cannot see me?
Not yet. Let me go ahead and I can actually send you a webcam request too. They give me all kinds of control over here.
Wow, it's saying that it's not in use. It can't be used.
Oh, sometimes like if you've been on like a Zoom call or a meeting or something where it's used it, it'll occupy those resources and it makes it hard to do. And I can't help very well.
Can you send it to me one more time, please?
Yeah, for sure.
Thank you. Give it one more try here. Should be good, right?
There you go.
Yeah.
Handsome as ever.
It was a Bitdefender blocking it, so that's.
Oh, I gotcha.
Yeah. Okay.
All right, I'm gonna get out of the way. It's your
turn. So Jeff, I have about 50 minutes, 52 minutes. We're getting off a little late, but we'll make it up. Happy Veterans Day. I wanted to put a note here on this to make sure that we thank everybody who has served. And believe it or not, it's right at the 11th hour of the 11th day of the 11th month, which is a very special time if you're familiar with that. So welcome to today's presentation, Trading and Investment Strategies to Improve Returns. And I'd like to thank you for attending, of course, and Jeff for his introduction. He does a great job, but it's over 200 presentations live now, Jeff, so we need to update that. This is a fun presentation, and it's one that can help all investors and traders. For this presentation, we have kind of a good news, bad news scenario here, and I just want to touch on this. Because this presentation is evergreen, it doesn't use specifically MetaStock slides, okay? Most of this material is in general applications, and it really can assist people everywhere, not just with MetaStock. So as we go through the presentation, don't worry about the views and the charts. Everything can be applied through MetaStock. It's a great platform with great people, okay? I've been on the road 6 weeks this year, literally, and it's just not feasible for me to update all my charts on all the different topics that I lecture on for each group or audience. So these are the 4 primary areas that we're going to be covering today. And other than a few slides of material providing you a conviction strategy performance update, we're not even going to mention conviction because I've done a lot of lecturing on that. But just to put conviction in perspective with some other speakers, conviction targets an 80 to 90% hit rate, and we're looking at like a 4 to 1 profit factor. And these results are certified, and these results are not on 1 or 2 stocks. These are results on every stock in the S&P 500. We'll touch on it, but this presentation is not going to focus on that. To get us going, I'm going to start with a quiz. And I run this slide a lot, so you may have seen it, but it's a critical concept. And it talks about the importance of trying to hit singles instead of home runs all the time. So the question is, how much do you think saving only 5 cents on a buy execution, we'll say on 200 shares of a stock, would improve your returns? And for this example, we'll say 35 years out, we'll say towards our retirement at an 11% annual return, which is the average return of US equities as measured over the last 90 years. So how much do we think saving 5 cents on a buy execution of 200 shares is? Well, the answer is that you would have an additional $375 for every $10 gain on an entry or an exit with these parameters due to compounding. Think about that. That's $750 on each trade, round trip, 35 years out at 11% return. Very small improvements. We're talking hundreds of thousands of dollars over the average stock investor's lifetime. And it's this type of attention to detail that can help us as traders and investors to improve returns. And really the purpose is to grab your attention before we get to the strategies. And we're going to cover a lot of strategies here as we go. We're going to start with orders and executions. It's a way to improve returns that all traders certainly and investors can use. So I'm assuming many of you have read the book or at least heard of the book, Michael Lewis's book, Flash Boys, or you're familiar with the high frequency trading. So this next slide, and really this, we're going to get into this area starting with that. Now, this is not my video, and I rarely use anything that's not mine, but this is an exception. And what we're seeing here is the orders between various exchanges on Radio Shack, and each box represents one exchange showing the national best bid and offer. And you can clearly see the amount of flash orders and attempts at front running that's going on. But here's the kicker. This action has been slowed down not 440, 400, but 4,000 times. What you're looking at here is in milliseconds. So we know that flash orders exist. And now I'm going to show you a video that will be my video in the next slide from a live trading performance. But just to get everybody on the same page here, I want to make sure that we all know what we're looking at. This is called a matrix. And here we can see the bids. You'll see the bids, and here you'll see the ask prices. This is the last trade, and this would be the spread. Okay, and the spread is what we're obviously trying to avoid because we just talked about how saving just a few cents down the road will make a big difference. So here you can see me placing and moving an order to purchase 50 shares of gold, the ETF GLD gold. But what do you notice? Every time I'm moving my order, the market's reacting. They're shadowing me up to a certain point, and then they're backing off. And in truth, this goes on for minutes. I'm not going to run this the whole time. And you need to know that I recorded this at a slower time for clarity. But we know that this exists. And if you question this, I don't think many people do, but if you do, you'd have to ask yourself, well, how do brokerage firms now make money with no cost transactions? They're making money somewhere, but it's just in a less transparent way. And in fairness, brokerage firms have to, and they do tell us that they do partake in order flow practices, but they don't tell us how to counter it. And that's what we're going to look at. We're going to start with basics and go to some very advanced material here. That's my presentations, okay? I try to cover the gamut. Start real easy, order types. Now, I won't say that you should never use a market order. And a market order is simply an order to buy or sell an investment out without specifying a price, right? I want to buy 100 shares of stock ABC, and you hit the order button. It's a market order. So why no to market orders? Because as you saw, you're likely going to give up the entire bid-ask spread, and very likely more as prices move away from you. On market orders, there was an old belief that market orders, yeah, Ray, but they guarantee me my fill, but not my price. And that's simply not true, right? I mean, we get delayed openings, we get haltings, we get cross markets. In fact, the only time I would say you'd want to use a market order is the very time that they're not going to let you. So if not market orders, then limit orders. Again, very basics, we will build advance. And with a limit order, you're telling the market the most you're willing to pay to buy an investment, or the least that you're willing to accept for the sale of your investment. For example, if you want to purchase a stock that's trading at $95, you can enter your order to buy at $94.95 or lower, or sell at $95.05 or higher. Now, limit orders are not perfect either. It was an old belief of limit orders that they guarantee your price, but not the fill. And we know that's not true, right? Why? Because of gapping, right? With a stop limit order, the market could close at 95 and open the next day at 65. If you have your limit order at 90, it ain't going to make any difference. So we have to be aware of these. And there's ways to compensate for gaps that we're not going to cover in this presentation. And if you don't think that losses on the bid-ask spread can make a difference, Here you can see the amounts that you could theoretically save on stocks by simply joining the bid or the ask instead of sacrificing. And you can see this is a video right here. And I grant you, this is the NASDAQ 100, and these are high price stocks, but look at the amount that you would save just not sacrificing the spread right here on 100 shares. And let's face it, you're likely to lose that same amount on the other side when you're looking to sell. Now, this tool is a tool that AAI has, and it assists investors in order execution to kind of guide you if you should choose a market or a limit and at what price you might want to consider putting it in with the probability of getting filled. And this is part of AAI's essential investing course, which I'm going to talk about. Now, we've already looked at how much saving just 5 cents a share adds up down the road, but here's another example. Let's say a stock's trading at $10 with a 20-cent spread. That's a big spread. But even if you got a mid-fill value of 10, which is highly unlikely at the moment, a dividend investor could theoretically be giving up 2% on the buy and the sell. They could be sacrificing the entire year's dividend just to execute. And we don't want to do this, so we want to compensate. Now, limit orders are not perfect, but they're more practical, and they give us a lot more control and flexibility as they allow us to set orders at strategic locations at better prices off into the future and let prices come to us. And we use the technical landscape of the charts to determine that. Okay, and this is certainly a better option than just happening to click the button when you were sitting there. And again, all this is covered in the EI course, just so you know. So we take this a step further to some intermediate level execution tools and techniques, and then we'll go advanced. We have bracket orders. It's amazing to me how many people don't even know about, never mind use bracket orders. With bracket orders, we can combine and attach orders together. With these orders, we can really control order flow and price locations based on the technical landscape of the charts now and into the future. The first one we'll look at is called an OSO, order sends order. And these orders consist of a primary order that will send one or more secondary orders out to the market after your primary order is filled. There's no delay when you get filled for the others sent. It's sent automatically. And these could be all called different, like Fidelity calls these OTOs. They call them order trigger orders. Now here's an example. We're going to use this swing trade setup from a show I did in Long Island like 10 years ago. I don't know. Well, we're looking to buy off support here. Now, let's say we like this pattern and we want to go long and formulate the price targets based on the technical landscape of the chart. We'll say our out or our stop is right here at 44.95, and we want to get in at 45.95. And I hope we all know where we're going to cut our losses and where our profit targets are when we take a position. So with the OSO, we would set a limit order to buy 100 shares of the stock, IMO, at 45.95. Okay, and then when filled, have the OSO immediately send our stop order to sell 100 shares of stock if the price drops below 44.95. So we're protected. We're not even if we're not sitting at the computer. And again, there's no delay in there, and that's what the order would look like. Now, the next order type that we're going to look at is an OCO, order cancels order. This order consists of a group of 2 or more parallel orders that are linked together in a way that if one is filled, the other parallel order or orders are canceled automatically. OSO sends one order after the first order is filled. OCO cancels a parallel order once the other order is filled. And again, these cancellations happen automatically, and there's no execution fees for the side that's not filled, and there's probably no execution fees anyway. So back to our example, with the OCO, rather than just putting a single stop at 44.95 below support, or a single sell order at our profit target at 48.83, we'll say we're fading resistance here, we would set up a bracket order and have both orders sitting in the queue simultaneous waiting to be filled. It's not an either or. This is what the order would look like. This way, if price drops below support, we get out minimizing our losses at our calculated expected risk before we place the trade, minus gapping. And if price rises to our profit target at any time, we don't have to be sitting there. we attain our desired profits on the position. You see the advantage. So then, of course, we're going to combine OSO and OCO orders. The classic example would be setting up a primary order to open a position and then coupling that with a secondary OCO bracket order, where the OCO bracket order contains both the stop and the profit targets together, which I just showed you. And these are very powerful and easy to use. You just fill in the template that your brokerage firm provides you, and it looks something like this. And there's a reason that essentially all brokerage firms have them, although they don't push them. Why? Well, one reason might be just because of order flow revenue in the spread. But anyway, if you inquire, all firms have instruction guides how to use their particular version. My purpose is to make you aware of them. This will be the last slide on this. So this is what the order would look like. We'd set up a limit order to buy 100 shares at $45.95 or better on top. And instead of an OSO order to send just our stop, like we did in the first example, we OSO and OCO bracket order with our stops. And in this case, I'm going to use two profit targets at 47.62 and a higher one at 48.83. And both of these profit targets will be coupled with a stop limit order at 45.95. I am not a fan of layering stops. Okay, if I'm out, I'm out. But I am a fan of layering profit targets, as I like to get into the money quickly and then let some of that money or our profits run. And it kind of counters the negative human biases. We want to grab profits too early. We want to feel good about ourselves. So this keeps green screens across the board. You can see how this can be a very effective tool. I'm going to dive into a little deeper here, order books. And this may be unpopular. I don't know if some speakers are going to be talking about this, but I'm going to share my opinion, and I'm going to produce some convincing evidence, I think, that may make you think twice about using order books. A quick explanation what we're looking at here. This is market depth. You probably know this, and it shows the market depth of all orders, level 2 and total view. NASDAQ total view is just where we see the full order book depth of the bids and the ask, and we see each individual price level of each exchange, at least the ones that are being published, right? There's no ATS or alternate trading systems or dock pool activity here, but it does show this information. And to the right, we have time and sales, or the print, which shows a record of the trades, supposedly, as they happen. And again, there are many exceptions to what shows up here. Right? We got filtered trades, canceled trades, delayed trades, dock pools and odd lot accumulations, form T trades, and OSTs. But this isn't in OSTs, just out of sequence trades. But this is an area where our charts are created from, and there is some value with looking at these trades if you're a day trader to see if executions are constantly occurring at the bid, which is bearish, or at the ask, which is bullish, because it's showing us which side is hungrier and willing to sacrifice the spread. So there is value here, and you can see how I color code my program to reflect this in the time of sales window. So why is market depth, in this trader's opinion, not only useless, but potentially harmful? Because big money market participants are not stupid, and they have the tools to deceive you. What tools? I'm going to show you some of them. The first order that we'll look at is called the show only order. And this order is going to allow a market participant to lie about their intentions on how many shares they really want to transact on. And you can see me entering this order. I'm entering an order to buy 200 shares of ACOR at 1949. But when you look at market depth, after the order is shown, I'm only showing the outside world my deception of 100 shares. There's the order, and you'll look down right where the arrow is. I'm saying it's 100 shares. It's really 200 shares. If you're a large investor looking to transact on a large share amount relative to the issue's volume, or working on thinly traded issues, this can be a helpful practice, because you don't want to move prices away from you. But from our perspective, it distorts the information on this screen. If you're not convinced, here's another deceptive order type example, and this is called a non-display order. And guess what it does? Exactly what it says. In this case, I'm not even going to show it to you. Here's my order to buy 100 shares at 1949, right? I'm going to click it, Look down at 1949. That's not even there. Deception. People are not going to really show you their intentions on market depth. That's just too simple of an approach. All right, I think I got one more here. The last one we'll look at, believe it or not, we can even lie to the market about the price that you're willing to pay. Here you're going to see me enter and show the same 100 shares of Acor at 1949, but with this order, I've set it up so that I'm actually willing to pay 26 cents more for the issue with a more competitive and realistic hidden bid at 1975. And I'm not sure if that video ran right. You're just going to have to trust me. I can lie about anything on level 2, other than the fact if I say I'm going to do something, I do have to do it. That's the one exception to that. The point here is that no matter what people try and tell you or sell you, never trust what you're going to see in the order books. What you see here is a facade and more likely to hurt than help. So don't waste your time learning about this area of investing. Keep the process simple, but not too simple if you're a professional trader. And that's going to lead us to some more advanced concepts and techniques. And if I can do this, anybody can do this, by the way. If you're a professional trader, I'm going to skim these really quickly. You may benefit from MITs. These are market if touched orders. And it's beneficial if you're looking for a guaranteed fill at a very precise trigger price that has been met, but you don't want to show it. Lits are very similar. The same thing. You want to play your cards close to the vest. You don't want to send the market, you don't want to send the order out there until it's actually been hit, but you don't want to be sitting at the computer for it. Buy on minus, sell on plus. Buys only occur on downticks and sells on upticks. All you do is click the button with your order. It assures that you're going to be buying on a downtick or selling on the uptick, which is very useful on a large price graph, especially early in the morning, where price just keeps jumping back and forth. It assures you get filled at the better price, at least a better posted price at that moment. Last one, peg orders. Again, similar. Peg orders will peg to the bid and move up to a desired, peg to the bid on a buy, move up to a desired level, and then it'll cut out. So it protects you just in case it starts to get away from you. And because I wrote it in the promotion, I'm not sure how many people will ever use this, but if nothing else, it'll help you understand how to use orders and how to use them to your advantage. For more advanced traders that are not only looking to protect and get fair prices, but to exploit the system and perhaps get better prices, there is a method that can work in certain circumstances, but it takes a while to get a feel for, and you have to set up multiple accounts in either the same platform or with different firms, as we can't box orders or positions, even if we have no intention of taking both sides. So our goal here is to try to get better prices, building off how the market reacted to my gold ETF order that I showed earlier. So what we're going to do is we're going to flash small counter orders to move the market into where we want it to go. In this example, my intention is to buy 100 shares of Acadia Pharmaceuticals at a lower price. So I'm going to flash short orders over the ask because I don't want to get filled for the purpose of moving orders down so I can buy the issue at a lower price. Now this video is slowed down dramatically and it still happens quickly. And just so you know, I'm displaying the buy order so you can see it, but you wouldn't do that in real practice. I'll tell you how to really do it. So hopefully this runs. And here you go. You can see I have double accounts here. I'm going to flash the order right there to sell. Bang, right away, of course, the bids move. And then I would come over. I'm just showing this to you. And I would try to buy it because the price moved. Now, again, this wouldn't work, but I'm going to show you how to do it. So that's the theory. We flash orders to move the prices the way we want. To set yourself up for this trade to work for success, you would display a non-displayed order to buy. You wouldn't show the market, so they didn't know where it was. And you would start flashing these over here. So when price drop, bang, they get hit, and they're like, what happened? So this is just a method to approach the markets kind of in a more advanced way. Now, it should be obvious these techniques offer potential value with stocks and ETFs, and this is amplified for option, becomes more important on issues with low open interest and lower trading volume, and the further you get from the ATM. Never hit the bid or ask with an option. We know statistics say that even splitting the spread, about 2/3 of the time you're going to get filled right away. Now, there are many other types of orders. and you can see them here. We could spend hours talking on these. Actually, I have a class on this. One order that I just want to touch on is activation rules. With activation rules, you can set the precise time, the day, or time of the day when the order can be filled, which is never at the open. And you can even set price triggers on orders on other issues or indexes, including the VIX. Or so your timing, if something breaks on a major index, then your orders would be tacked to that. My purpose here again is just to make you aware of these. Orders are important. They're often overlooked by traders. Sloppy order executions can cost an investor and a trader a lot of money down the road. And so please keep that in mind. The next section is a second way to potentially improve returns, and it's with position sizing. How many shares should I buy or rebalance to keep position influence relative to the other positions in my entire portfolio? The negative of this section, it's not really a negative, is just make sure you understand with short-term trades, you always find the appropriate stop area based on the technical landscape of the chart, as we just covered, and then determine your acceptable level of risk, and that determines your number of shares. My stop's $2 away, I only want to risk $100, I buy 50 shares. That's the correct way to do that. So in this section, we're going to use an investment tool that AAI and Metastock has to assist investors with this, but you can do this on your own. To improve returns, our goal here is to initiate and maintain position sizes, the number of shares to buy or rebalance, so that each stock position will have a projected similar end effect on the stock position's performance of the portfolio. We want to prevent any one stock, NVIDIA, from becoming overly dominant or risk-heavy, skewing the median's position's overall performance. This makes sense. So position size is a confusing area for investors, which some try to ignore and more simply oversimplify. Some investors, not a few, but there's still a few old-timers out there to try the equal share approach, which is ridiculous, right? In this slide, we can see that the approach and with this approach and the Dow 30 components, that an investor's position would range on 100 shares would range from $2,800 to over $49,000. So I don't think many people do that, but you never buy equal shares. The quote next level investor often tries the equal dollar approach. Here in this slide, we can see that a fixed $10,000 equal dollar amount of the same Dow 30 components, that with Johnson & Johnson, you would have had a maximum 5-day loss of 5.95%, but with Intel, you would have had incurred a maximum 5-day loss of 21.26% over the last year period at the time of this slide. So although better, the equal dollar approach is still missing one key ingredient, and you can't dismiss this. What is that key ingredient? It's volatility, right? How much the issue typically moves, or more accurately, the inconsistency in those moves. Do you really want to purchase the same dollar amount of a security that's 3 times as volatile as another? Or one that moves 2% a day as compared to an issue that moves 6% a day? It's simple, but it's probably not in your best interest, right? When we're charting the volatility, it's reflective in the patterns because we know patterns are fractile. So that guides our actions. But for position sizing, there's no visual reference frame, so we need to do it mathematically. Now, there are many ways to calculate volatility for balancing: standard deviation, beta, ATR, or average true range, and many others. What AAI's tool proof does, again, it's in Metastock, is it measures and uses downside volatility only. More accurately, it measures the percentage loss of an issue on an average down day. I don't hear many people complaining it's so volatile to the upside, I'm making money too quickly. We're concerned about the risk, how fast it drops. And here we have a little humor here. Right? Again, we just want to focus on the downside aspect. That's the most important, at least to me, the developer of this. And it makes more sense than symmetrical standard deviations, which looks at both. So here's an example of adjusting position sizes with volatilities of mutual funds, how you could do it on the web if you wanted and not use a tool. This is with mutual funds. Morningstar lists annualized standard deviations for fund. It tracks on the rating and risk tab. And it's not pure downside volatility, but for funds, at least it's something. You're incorporating volatility. These values are old. They're not updated. but we see what you would expect to see with incorporating volatility with position sizes. To have an equal effect on your portfolio, you'd have to purchase less dollars of the small cap, right here, to compensate for the higher volatility, and more dollars of the large cap for their lower volatility. Pretty straightforward. Now, if you don't want to do the math as mentioned, you can either create or use a tool. AI's version in Metastock is called Prove. And I believe I have a video on this. Yes. And to use this, you'd start the exploration, and this kind of just shows you how to run it. You select it from the exploration tab, and then you go down and select the securities that you'd like to analyze. In this case, the Dow Jones 30 components. In a few seconds, the program generates and displays the output for each security. How many shares should you buy or rebalance to? So all my stock positions are in proportion. Now, Metastock has an entire webinar on this and how to use this tool. I'm only going to show you one more video here. But this is what you would do to change the amount of risk that you're comfortable with. You would just go in, edit it, and it's set at 50 right now. If you're comfortable with an average downside day of losing $100, you would enter 100, click OK, and bang, it would update all the amounts for you in proportions and tell you how many shares you would want to buy at the $100 level. Now, here's some more recent Vanguard small cap, large cap, and mid cap fund values for Prove. So in this case, if you were willing to invest $260 per fund by changing in the method that I just showed you, we would see the same exact relationships. You'd buy 23,000 of the small cap and 31,000 of the large cap. The important point here is that you can use this for stocks, ETFs, and mutual funds as long as your data provider provides them, and you can even mix them to keep everything relative in proportion. And then, of course, you could not only buy them that way, but you should also rebalance them. This is pretty straightforward. Once you get it set up, you would just rerun the scan every couple weeks or every month or even every quarter. And right here, this was an original one. We reran it, and it would just say, hey, look, some stocks have done good. Some stock, you got too little of one, too much of another. The volatility has changed. So you would just add 35 shares of 3M. And you would take 3 shares of American Express, and you'd bring everything right back into proportion, and you can sleep at night. So now a quiz. On this screen, you can see all 30 Dow components plus the Dow 30 Index ETF DIA. The list has been sorted from the least volatile issues on the top to the most volatile issues on the bottom. The blue highlighted section right here shows that DIA, the ETF, is the second least volatile position in this list with an average down day of only 0.73%. Now I ask you, how can what would we assume to be the average volatility of all the components, the index ETF, be such an extreme relative low, with only Johnson & Johnson actually being less volatile? How can that be? The answer is one word, and everybody should know this. The answer is diversification. This is a classic example of when individual correlated components have more risk of volatility than the weighted average of its constitutes, the index. You're seeing the advantage of diversification in numbers. Sometimes we hear the term, but we don't really process it. Anyway, everything is pretty straightforward here. If possible, always rebalance position sizes to the calculated number of shares that you need or desire. Do not use round lot methods. It's not required. And if appropriate, especially with high price issues, you can use fractional shares, right? We don't want to limit ourselves here. Risk control and position sizing for investment portfolios is critical, and Prove can be used for this in many other approaches, and I'm just going to touch on these very quickly. It can be used to theoretically remove market directional risk or influence by keeping your positions equity market neutral by being equally long and short on a volatility adjusted basis, not a dollar adjusted basis. Here you can see a simple example with 6 securities, all being set to the same downside risk. And with this approach, you're looking to generate alpha with returns on the long positions, making more than on the short positions, or the short positions losing more than the long positions. A similar approach to this is when an investor is confident they can pick stocks and they can consistently beat the market and index but want to remove or lessen the market directional component. Here, an investor would take all long individual stock positions and then simply short the index that they're most correlated to, effectively creating a volatility-adjusted hedge or a market-neutral portfolio. And a good example of just this occurred when people had a lot of winning long positions, but they didn't want to hold the risk overnight with the election result. So they just ran proof, seeing, okay, I got a short X amount of shares on SPY, I'll do it for a short period. They do, they're neutral, and they mitigated their risk, or at least the market directional risk, until the dust settled. Last example, this tool can be used to calculate the number of deltas required to hedge a portfolio with options. How many puts and what strikes should I purchase? Again, to protect my portfolio, because I'm a little nervous right now. And an advanced investor can set up inverted spreads, meaning as opposed to buying puts that cost you money, okay, with negative theta, they would set up bear call spreads to get the same required numbers of delta protection to neutralize, but then turn their theta positive. Now, this becomes more complex and you have to watch gamma and stuff, but in this case, you're essentially getting paid to protect your own portfolio. And this is covered step by step, at least in the EI course and in the MetaStock webinars that I'm sure Jeff can lead you to. Okay, strategies. This area is going to be quick. But strategies are the backbone for success for a trader or an investor. In this table from the class, we see the projected returns differences at various percentages right here from a story that I'm going to cover in this last segment. But for right now, just look how critical the return percentage is when factoring in compounding to an investor's overall returns. Small increases in the annual percentage returns changes lives. So we're going to look at one of the strategies that we currently have with MetaStack. And because I'm going to show back-tested theoretical performance results, I have to run these slides. This slide says don't steal our stuff. This sign tells you all the reasons why the material may be not accurate, and there's exceptions to every rule. And the material may not be suitable to all investors. And Jeff makes me run this one. So put all questions in the chat box to him on that one. Okay, AI's first product with MetaStock came out in May of 2023, and it was called Conviction Plus. And it challenges the conventional use of volume as an intensity-based measurement. And I'm giving you some very convincing data that you should never use volume, by the way, as normally constituted. And it proposes the use of something called conviction. Now, if you're interested in learning about conviction, MetaStock has these webinars, so I'm not going to cover that as I promised you. Upon release of the conviction tools and strategies, we provided back-tested performance results if an investor followed the strategy for a 10-year period from 2013 through 2022 on every single stock in the S&P 500 at that time of study. And these were very sophisticated programs that created factors, and then these factors were synergized into efficient trading systems. At the time, with our first release, the back-tested results of the conviction profit factor system were as shown in the table right here. Again, over 10 years, every stock in S&P, I can pick one stock or two stocks showing you 40 winners in a row. Anybody can do that. Okay, we're talking about something that works universally. Results were impressive: 81.7% hit rate, 3.7 a profit factor, and a non-compounded return of 2.78% per 26.5 days. That non-compounded equated to over 38% a year, non-compounded. That's if you just took the gains after each trade and spent it. You weren't even compounding the results. And these results didn't even include dividends. It was only price appreciation. And we know that 40% of the total return of the S&P 500 is related to dividends. These results were actually, in reality, much better than what was shown, but this is what I had to show. It was a long-only strategy. I couldn't filter it out. But this is the equity curve of that strategy. It's called profit factor system. And these are not hand-drawn lines or return lines showing the returns of only one or two securities. This is what the computer generated, the actual accumulated returns. It was effective in good times and bad. And just so you know, this system was designed with a lot of help, from a lot of smart people at MIT and traders groups. etc. And it took years to develop this. And we had all 3 system performance reports and results certified by an independent third-party company called QuantKey, a leader in system design, development, appraisals, and evaluations. So for fair disclosure, what you see here is now me running the same back testing starting on 5/8/2023 when the program was released, okay, through September of this year. And we didn't want to bring it to the current date because I'm not interested in new positions that are just being held for a few days or a couple of weeks. It would distort it. So you can see me actually running the program here. And I'm going to give you the results as you are because we're about fair disclosure. I need to produce evidence back them with a nonprofit organization. Results, as you would expect, because the market's been going up a lot since then. 87.5% hit rate, a profit factor of 10.85. That's distorted. That's unrealistic. 3.5 to 4 to 1 is more probable, and a non-compounded return of 3.42% per 22 days. And again, doesn't include dividends. Consecutive wins, 13 wins, and it's never lost more than once in a row. As you remember from the previous 10-year study, 10 years, 500 stocks, it never lost more than twice in a row. I don't expect that to continue. If you're interested, Jeff will give you some information at the end about how you can get this. We provide you instruction manuals, all the detailed performance reports, the certifications of all the systems, and we even have VES classes with testing and certification if you want to do that. And for those that purchase conviction, they also get prove the program that I showed you earlier. And as a sneak preview, we have a new product coming out with Metastock in December called Reversion, which is somewhat similar to Bollinger Bands, but it incorporates conviction with the volatility. And it separates the measurements for up and down price movings, creating asymmetrical bands that are much more responsive and representative of the price action by incorporating the intensity of those moves. Now, the strategy's results are not as impressive as conviction, but for a single buy-sell indicator to be combined with other technical approaches like patterns, it's vastly superior to all the first-generation indicators. How can you say that, Ray? This table shows you the comparative results with various performance metrics between our reversion, right here, okay, in Bollinger Bands, stochastics, and RSI. Again, this is a 10-year study, every stock in the S&P 500 from 2014 through 2023. With our reversion, if you buy when price touches the lower boundary and you sell when price touches the upper boundary, it was that simple. No ambiguity, right? Very simple, clean signals. And as you can see, it improved essentially all the common performance metrics and hit rate right here. If it's green, it improved it over the other indicators. It did it hit rates, profit factor, run-ups, drawdown. It was universal. Of course it is. It's an indicator that's made for today's market environment, not something that was designed 40, 50, and 60 years ago when we were using pen and paper. Okay, the indicators were good. I'm not making fun of them, but there's better alternatives. And you can see, this is the money line right here. Essentially, our reversion improves efficiencies by over 20% as compared to these 3 first-generation indicators. So we're excited about that coming out. We hope Jeff is excited about marketing it for us. So last section, perspective and knowledge. Jeff, just so you know, I'm a little bit behind. I have about 8 minutes left, so I'll be ending about 5 of. Final section on improving performance, and part of that is because I started 6 minutes late. Okay, as a trader, I'm often asked, what are some of the most important aspects to be a successful trader? Well, certainly a strategy, right? That's evidence-backed, that's third-party results certified, and one that you understand is important, and that works over a large number of stocks over a large number of periods. Not only because the effect of the returns, but because if you understand the strategy, you're more likely to follow it, as discipline is critical. But in my opinion, education is the second most critical component, because each trader or investor ultimate approach in their selected best trading system has to be based on or in line with their own personal situation, some of which you see listed right here. And an investor needs to be able to adapt those strategies to themselves in the changing market as time goes on. Successful traders and investors, like any area in life, are constantly looking to improve. So what is the most important component to be a successful investor and trader? In my opinion, it's the belief that you can be successful and that you can build wealth through investing. Without that belief, people won't even try. With respect to that, AAI has a new area of development called active investing, which I lead, and a new series of investing education video classes and investment tools. And don't tune out. I'm going to show you some strategies, okay? I'm not a salesman. I'm a tool developer. I'm a trader. I'm a designer. I'm just going. I'm not. That's not who I am. Okay. It's AAI's flagship offering, and we call it AAI's Essential Investing course. And here you're going to have the opportunity to learn from some of the best names in the business, as you can see here. I am going to tell you a little bit about the course because I believe education is critical. And you can see a video on it here. The course has certification exam, and it has 17 classes right now with over 12 hours of material. The classes in this course are not simple recordings or a single instructor standing in front of a camera or the repackaging of a webinar or some live event like so many, quote, top-end educational products currently being offered. The classes are professionally produced, full-featured, interactive, multi-camera, studio-grade audio engineered recordings that focus on essential investing principles and strategies. And they're taught by people like Christine Benz, Paul Merriman, Fidelity Mutual Fund legend Bruce Johnstone, Ken Fisher, etc. The course is housed in a professional learning management system, the gold standard for online learning, which costs us a lot of money, but which is a lot better for you. The course contains dozens of instructional and navigational documents and videos. If you have any questions, the course includes an exam, and if passed, EI course certified participants receive a certificate of completion and an extensive list of AAII certification benefits, and it is extensive. The presentation videos are full-featured scorer. They have jump to a table of contents. You can search keywords. They have interactive hyperlinks. They're ADA closed caption compliant. This is a high-end course. Now, this video shows you what each class contains, and I'm just going to show you. And why show me this? Because we're going to give you a free class, basically. And the first tab shows you the information about it, how long it's going to take, the content. The second tab shows you right here information about the instructor, so you can contact them if you have any questions. We give you preliminary learning documents, key terms and definitions that you should know before taking the class. We give you all the slides in each class. We also give you articles that you should know the basics before moving on to the class. Here you can see the video. This is what they look like and all the features of the video. Once you pass the class, you have to take a test. If you pass that test, believe it or not, on each class, you get a benefit, a free book or some type of free service or complimentary service. We give you words of wisdom document, the single most important piece of advice related to the content. There's the benefits. Sometimes we give you a free book. These are from the actual instructors, by the way. And then, of course, you get your certificate of completion. There's also some other areas here. After you're done, we give you more documents to continue your learning. Sometimes, in some occasions, we actually give you included tools with those. You get a survey, a discussion forum, etc. It's an incredible course, especially for the price. And whether you believe this or not, it took a team of people over 5 years to produce it. And I guess I should add even better, if you do take the course and pass it, you're going to get future classes also included. Louis Navalier just cut one on how to pick stocks. Marty Friedson, the youngest man ever elected to the Fixed Income Hall of Fame, has a 2-hour class on fixed income investing, etc. So even if you don't want to purchase the course, which is fine, and get certified, we believe it's so important that we're going to give everybody a free class. And in this class, we share the 20 most important investing and trading concepts and components from a group of advanced traders, developers, and educators with over 700 years of investment experience that met regularly at MIT. And this includes actual strategies. And just so you know, this class covers a true story about a graduating student that wanted to bequeath his newborn son $1 million at his retirement through investing. Okay, but he had no money to invest. He didn't want to generate any. He wanted no additional effort, and he didn't want to change his lifestyle or sacrifices in any way. And the group came up with a lot of interesting ways. And spoiler alert is, one of those ways to generate a 7% risk-free annual return with $0 up front. And they easily met the $1 million goal. It's a fascinating story. And if you don't think that investment education is important, then everyone can improve returns. I hear many people say, I'm a fund investor. This course is chock full of fund strategies. Look at this slide from the class and the story. In this table, you can see the differences in returns with investing in mutual funds, ETFs, and a no-fee theoretical investment at the respective average fee levels. We're talking $1 million return differences over a fund investor's lifetime by making a few simple adjustments. And just so you know, these fees are from the ICI, the Investment Company Institute, in a study they did in 2022. Allocation strategies and strategies with funds can make a huge difference. And this course, it contains strategies adapted for today's market. This strategy that you see here has 2 trades per year and uses a modified approach to the sell in May seasonal cycle by setting up a simple spread arbitrage to exploit backwardation and contango relationships. And it reduces your equity risk by 50% because you're in the markets 50% of the time. On the left, you can see the classic sell in May strategy, and by going to T-bills over this period, which I believe started in 1945, and you can see the amount. On the right, you can see a modified version of this as opposed to going to T-bills to setting up the spread arbitrage, and you can see the potential difference, or at least theoretical difference, in returns. Don't sell yourself short. You don't know everything. I don't know everything. Always look to improve. Last slide in this, going back to a previous slide. In this table from the class, we see the projected return differences at various percentage returns with the parameters of the story. Returns are not only critical when factoring compounding, they're not linear. Look at the difference on a 3% improvement in returns from 2 to 5%. I don't know, $300,000 change. Look now at the difference in a 3% change from 8% to 11%. You're talking over $10 million more. Education for investors and traders is critical. Small changes make a big difference. And I don't want to hear anything about old timers buying pullbacks to a rising 20-period moving average. Okay, we're talking about advanced investing strategies here and evolving and adapting to the market and exploiting inefficiencies in our current market environment. If you'd like to get the free class and sample the EI course, just go to www.aai.com/ I don't think that's right, VES education. I think that's wrong. You can go there though. It's completely free, no questions or obligations. And for those that want to jump right in, you can also get the affiliate discount rate for the entire EI course, supporting our friends at Metastock from the same website. Jeff, I have to give you that correct website. I apologize. I forget what it is right now. Okay. But you can get it there also, but I'm going to give you the correct website to Jeff as soon as I hang up here, and he's going to post it. So please use that website because it's specifically for Metastock affiliates. And I believe that's my last slide here with one gaffe. My sincerest hope is that you learned something in this presentation and that you can use it to improve your trading and or investment returns, and that you consider expanding your investments and trading knowledge. The best investment you can make is an investment in yourself, and the rest takes care of itself. My name is Ray Rondeau. I'm an investment strategist and senior technical analyst with AAII. I thank you for your time, and I apologize for not having the correct URL on my slide. Jeff, if you want, we can try a few questions, and I am going to try to get that exact website that you need.
Hey, Ray, let's do just one question. How long does it take to go through the course?
The course, it's 12 hours of material. I would say probably, to give it a good, honest effort, they're pretty thorough. I'm going to say 20 to 30 hours.
And what would you say is the biggest advantage to going through the course?
The biggest advantage is what I say. Building fundamental principles so you can build your own strategies and adaptations and adjust to the market as the market is changing. Forget about a lot of old outdated strategies, techniques, principles, and tools that just don't work. And it can really just make a big difference.
All right, perfect. Thank you very much, Ray. I appreciate you coming
Jeff,
in.
can I give you that website, and will you please post that?
Yeah, you can.
Okay, if you take me off, I'm going to jump to it and grab that for you. If
Okay.
you leave my voice on and just my screen, I will get it for you in 1 second.
All right, no problem.
Thank you.
All right, while he's doing that, I do want to talk. Oh, here, let me turn on my camera here. I do want to talk a little bit about the add-on there. Oh, that's pretty low. Hi. I'm from Phil. Okay, let's do this a little bit like this for a minute. All right, I apparently need to angle it down just a little bit or adjust my thing. I'm sitting down. I was standing up before. In any case, I do want to talk a little bit about the AAII methods that Ray Rondeau put together. They include the LT, the ST, and the PF. They're all built around. Ray talked a lot about kind of the indicators that he uses as part of this. And oh, thank you, Scott. What's that guy's name? Wilson, the guy? Anyway, all right. The LT system has an average trade length of about 82 days. It's perfect for investors who have a longer term horizon. Up a little bit. He's got the convection ST, just a little bit more. All right, perfect. Don't touch it. This is fine for now. It's got an average trade length of about 35 days. And then you've got the PF, which is an average trade length of about 27 days. So all of those are included as part of the systems that he's created into Metastock. And we are doing a special with them today. You get 7 indicators, 4 explorations, 6 expert advisors, and 7 templates. You get a detailed training course, the year of AAII membership, access to all the LRM portals. All that's normally $14.97. If you do it here at the conference today at $747 as the conference special, comes with a 30-day money-back guarantee. You can do that at metastock.com/conf-promo. You can call us at 800-882-3040, and you can also give us a call at metastock.com/saleschat. So any questions about kind of the built-in methodologies, let us know. All right. Very cool. Ray, did you find the right link?
You would hope I would have, right? I do have it, and I can tell it to you, Jeff.
You emailed it to me before. I'll find it.
What is it, sir?
You emailed it to me before. I'll find it in a minute.
I do. It's pretty quiet. I'm not sure what happened there.
No worries. Stuff happens. Bill says, first time attending and so far very informative. I have been semi-trading one portfolio and building income another. I may have to jump off. Will the rest of the day be recorded and sent out? Yeah, youtube.com/metastock, Bill. You can get all 6 days right there. Ray, I do want to say thank you for joining us. Thanks for being part of the thing. If you want to go get the course, just go to aaii.com/veseducation.com. If you want to get the add-on, go to metastock.com.
I just sent it to you, Jeff, in an email. I don't know if you see it. I'm so sorry about this.
That's okay. No worries. 800-882-3040 or metastock.com/saleschat. So, and here, if I can grab it under all these windows, here's the link. There you go. All right. Either one of those will work. All right. Thank you very much, Ray. Now, if I can find you again, I will send you. Thanks for coming in.
Thanks. Have a great day, guys. Good luck in your trading.
All right. Okay, let me go ahead and do this. Okay. All right. Very cool. Of course, if you do get that AAII conviction add-on for Metastock, we'll give you a free trial of Metastock. Metastock's been rated #1 in its price category for 31 years in a row. I love, like Daniel said a little bit earlier, I love the scanning. I love the ability to go through and identify those trades when they come up. So if pricing for Metastock starts at just $75 a month, if you buy a month, we'll give you the second and third month for free. That means your cost is going to be like $25 a month, and you'll be running it for those 3 months for that evaluation period, and you'll be running it well into next year. So give it a go, metastock.com/conf-promo. metastock.com/sales chat, or 800-882-3040. So I do want to say thank you to Stocks and Commodities Magazine. They've been a great sponsor of Metastock in the events that we've been doing. They've been sponsoring for, I think it's 11 or 12 years that we've been doing these big events, and they've been a sponsor ever since the beginning. We appreciate it. You can find out more about Stocks and Commodities Magazine at traders.com. All right, very cool. And while you're visiting around different places, go to the Traders Forum. You can live chat with traders, share ideas, talk about stuff, learn about the markets, lots of educational resources and materials up there, completely free. thetradersforum.com. No cost, go up there, get set up. Scott Brown is our next presenter. I'm gonna go ahead and turn on, and Scott's gonna actually help me out. Let me go ahead and send him an unmute request so we can hear him. Scotty.
Yay, how are you guys?
Good, your audio sounds good. We were a little bit worried about that. Thanks for the camera adjustments as well.
Yeah, fine. I am kind of technical support today, Jeff.
Yeah, for sure. Let me go ahead and send you a webcam request. I did warn you that you're going to help me with the project. We're going to give away a prize.
Yes.
Now,
let's do this.
Anybody watching on GoToWebinar, you've already registered. Don't worry about what I'm about to say. You're already registered. If you're watching this on YouTube, there's a couple things that you should do right now. Like, subscribe, and then also get registered, www.metastock.com/traders-conference. And Greg is going to put that link in the YouTube chat right now. Thank you, Greg. And as long as you do that, you'll be part of the list. Scott, do you want to guess what the prize is? It's this book. This book is called Candlestick.
Ooh, nice.
Steve Bigelow.
I think there's a retail value there of $1.2 million on that book.
High Profit, that's not all. High Profit Candlesticks Patterns by Steve Bigelow. So we're going to give away, and Steve had a mouse pad that has all his major signals on it. So we're going to give away all three of those books. Steve Bigelow was a great friend of Metastock, an awesome technician. Oh. We love him. And what I need from you, Scott, to help me with that prize is I just need a number between 1 and 7,547.
Well, I can guess the perfect number because this is a person that just liked us on YouTube, and subscribed to us. So it's going to be number 4,712.
Okay. Oh, I did something wrong. Hold on.
Do we need a different one?
No, that was my fault. 4712, right? Okay.
Yep.
It's Scott from Virginia.
What did I say? Let's go, Scott from Virginia. We have the same name. He likes Metastock. It's going to be unbelievable.
He's also got an email address that ends in pm.me. So that's very unique too. So if that sounds like you, Scott, it's not you, Scott, but if that sounds like, if you're Scott and you're in Virginia and you're watching, you probably just won a prize. So
you definitely won an awesome prize from our late friend, Steve Bigelow.
Bill wants to know if he does a subscription to Metastock, can he cancel anytime?
Absolutely, you can.
There's no lifetime commitments. You may not want to, but you should give it a go, because $25 a month, you can try it out for 3 months. Let me go ahead and make you the presenter, Scott. I'm going to go ahead and introduce Scott. Scott is somebody that's been with the company. How long is it now?
Going on 25 years.
Very cool guy. We love Scott. He does such a great job. I don't have any. I can't say things that are good enough. He's just he's so fun to be around. He's great as part of he's in charge of everybody here. He's the president of Metastock, and it's been great to work with him for a number of years. So that's what I'm going to say about you.
I'm going to give you that $20, Jeff. If that works.
I can tell you that I can see you. You sound great. You're well centered in the frame.
Good.
I'm
trying to get in front of my camera here.
Right on. Your turn. Go.
And by the way, you look great too in your camera. Whoever fixed it really did a good job.
Yeah.
Okay. So can you see my screen okay, Jeff, the Armo trading system in Metastock?
Yeah, we can.
Okay. Let me get that going like this. That probably looks a little better. Is that right?
It looks perfect.
Okay. Let's get started. First off, we need to thank Mr. Jeff Gibby. I don't think anybody quite understands how much work these are. And Jeff puts the time in consistently. One of our hardest workers and best employees at Metastock. He's been here longer than I have. I'm going on 25 years. I'm sure Jeff is going on, 28 years, something like that. So, a big thanks to him. He's putting together, somewhere around 40 speakers each time that we do this, getting it all organized, and it's free. Are you kidding me? You're getting 40 expert, speakers and traders for free, by tuning in here. And so, Jeff Gibby, I guarantee everybody's applauding you right now. We thank you. You're amazing. So we'll go ahead and dive in onto this. As Jeff said, my name's Scott Brown. I've been with Metastock for about 25 years. Started out just right out of college and was a sales rep. Me and Jeff were entry-level telesales reps together for a few years. I moved into our large account sales, and then I moved into doing product management. Back in the day, I helped create Metastock 9, 10, 11, and 12. And then after that, moved into all of our events globally, and then in charge of all of our partners and dealers around the world, and then became director of sales and marketing, and then moved into the role of president. And then in 2013, about 2012, my new boss was from Deutsche Bank, and he asked if I could meet with him, and I flew into New York and met with him, and within 15 minutes, he had told me that he was, that at the time, Thomson Reuters needed to be focused on their core business. And by the fourth time he said that in 15 minutes, I said, well, are you selling us? And he goes, yes, we are. And I said, instantly, he's probably the smartest thing I ever said, well, can I buy it? And he goes, sure. And it took us about a year to close the transaction, but we did. And so I've been the owner of Metastock since 2013. So I've owned it for the last 11 years, which is so crazy to say that out loud. The older I get, the more that this time thing it's a thief, right? I think we all still think we're young and at 25, and it just doesn't work that way, does it? So, that's just a little bit about me. We're going to spend the next, 45 minutes talking about the Armo trading system and Metastock. This is going to be something that will definitely pique your interest. This is an incredible 45 minutes that we're going to spend. I feel one of the best trading systems. You got to remember, being with Metastock, we're a massive toolbox, right? And we do all kinds of different things. We have hundreds of indicators. You can create your own indicators, your own trading systems. And this is one of the best trading systems, hands down, that we have in Metastock. So if you are listening to this, you're lucky, because coming from someone that has seen hundreds, if not thousands, of different trading systems and indicators, that this is one of the good ones for sure. So let's dive in. The first thing that we're going to do is we're going to talk quickly about a disclaimer. I know our attorneys will be happy that we always put this on, and also I'm happy that you're going to see this as well, because there is no guarantees out there, and we want to make sure that's very clear to you. And if someone's out there trying to tell you they can guarantee results, you should probably not listen, right? Because anything that's too good to be true probably is. And so let's talk a little bit about this. And I'm just going to read the first few paragraphs because that is something that is important. This demonstration is designed to instruct you on using Metastock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Metastock does not endorse the purchase of any security, nor is it paid for the promotion of any security. No information contained in this presentation should be construed as investment advice or as a solicitation to buy any security. Okay, so let's go ahead and dive in here, and we're going to talk a little bit about Metastock and then dive into the RMO. Metastock was founded in 1982, over 40 years ago. We were purchased by Reuters in 1996. Reuters wanted us to create charting and analytics for all their institutional clients. We released the real-time quote center data feed back in 2005 and upgraded and released it to Metastock Zenith in 2012. We've sold several 100,000 units, and we divested from Thomson Reuters in 2013. We've won with Task Magazine 30 straight years. The best analysis software, actually I think it's 31 straight years. They're the readers of the magazine, actually they have a Reader's Choice Awards, and the readers have selected us as the best analysis software. And it's been great to receive that award every year. So we're going to be diving in and talking about the RMO trading system. So here's a picture right here of Rahul Mohindar. Rahul is a very good friend of mine, and it's pretty amazing how this came about. What happened was when I was in charge of all of our large account sales, Rahul was one of our dealers, our only dealer, in fact, exclusive dealer in India, and they have offices all over India. And you know, I was talking to him one day and I said, hey Rahul, you know, there's, you know, it's the second most populous country in the world. Why are we not getting more sales out of India? And he said, hey, look, back then, you got to remember, we were on a CD, right? And for some of the younger people watching this may not even know what a CD is, but you could take that CD and you could pass it around, right? And that you could install it on your machine, and then you would have Metastock up and going. And so with that, Rahul was like, you know, you have millions of copies over here of Metastock, but they're all, you know, pirated copies of Metastock. And so I was like, oh, geez, okay, well, what could we do to, you know, try and make this easier and better for our partner? And he actually had a great idea. He says, look, I'm going to create a really good trading system. And this trading system is going to be password protected. And if anybody wants it, they're going to have to buy the software from me. And I said, oh, that's a great idea. You know, let's move on forward with this. Now, remember, Rahul's dad is a gentleman named Dheeraj. Dheeraj has traded for decades and decades. Rahul grew up under watching Dheeraj trade, and they would actually draw charts by hand. That's crazy. And if you ever listen to our Rahul and hear the stories, it's amazing. And so, you know, I'm going to give you just 30 minutes of the RMO. Remember, if you go up to our YouTube page, which is youtube.com/Metastock, we have thousands and thousands of hours of different experts giving out free, trading videos, and we have millions of views. So make sure you like our YouTube page and subscribe to it. You can watch Rahul in person or in a video talking about how to trade it. Well, when he put this trading system inside of Metastock, some amazing things happened. His sales doubled every year for 3 or 4 years in a row. And it was so good, they came over to America to visit with us. I was like, Rahul, this trading system is so good. We want to put it inside of the general version of Metastock for every trader. He was kind enough to negotiate a deal with us, and we've had that inside of Metastock now for probably over 15 years, which is great to hear. So a lot of people, when they trade, you hear the term, a rising tide lifts all ships. And that same, concept goes into trading stocks, whereas, if the stock market is up, then most of the stocks obviously are lifted up as well. So, something interesting to look at. The RMO, it's a very easy trading system. It's objective and rule-based. It employs solid money management, works on all time frames, works on many, many different instruments or securities to trade, and it's a simple 3-step process. Step 1, we need to identify the primary trend. If we do believe in that concept of a rising tide lifts all boats, then what we need to do is find out where that primary trend is. So let's go into Metastock, and we're going to go through each one of these. So, let's look here at Microsoft. Or no, we're looking here. This is Boeing. We'll look at that one here in a minute. Here's, fine, we'll look at Walmart. If we right click on the chart and we click apply template, we can come in here. Here's all the templates that you're going to have access to as a Metastock user. Everything I'm doing today is based in Metastock 19, okay? So we come in here and we go RMO trade model, and we double click on that, and it's going to pull up the RMO trade model. Okay, we're looking at this on Walmart on a daily chart, and you can do this on a minute chart, 60-minute chart, daily, yearly, whatever you want to look at. So as you look at this chart, you may be like, oh, there's a lot there. It's confusing. We're going to make this so simple. So the first thing we're doing is looking at the big trend here, okay? This is what we call our RMO oscillator, and this is going to show us our overall primary trend. Now down here, you can see this ribbon, and what we can do is expand this a little. And what it's going to do is it's going to show you where our trend is. Now, right here, it's showing us that when it's above 0, it's bullish. When it's below 0 in the red, it becomes bearish, okay? So that's a way to kind of look at that. Okay, let's go back into our PowerPoint. So we've already identified on Walmart that it's a bullish trend right now. Step 2, we want to identify the short-term trend. If the primary trend is bullish and the short trend is bullish, we can put in a buy signal. You're still not allowed to short the stock, and it's not a trigger every time. So we come down here, and this is a histogram, and we're looking at 2 of them. And when the pink or purple, change here with the blue, that's when we're getting these different trends. So right here on the medium term trend, you can see right here that histogram overtook it, and we have some red bars. Right here, as you can tell, we are still in a bullish trend here, okay? Look at that. So we've identified the primary trend as bullish. The medium term trend is bullish as well. So we've identified easily, and the way that this medium trend is identified is the color of bar. So if it's a blue color, then it's a bullish trend. If it is a red color, then it is a bearish trend. So again, right here, blue color, moving up, it is considered bullish. Okay. So step 3, to identify the trigger. What we want to do is figure out how we're going to structure a trade, manage our stops, and wait for an exit signal or stop it out. So now what we're doing is we're getting buy signals, okay? So we're on to step 3, and this is what we want to see is a buy arrow. If we have a buy arrow, if we have a blue bar, and if we have the RMO above 0, we can buy. So right here, even though we get a red sell arrow right here, we can't buy, we can't go or sell it and go short, because to sell it or go short, we need to have a red arrow, a red bar, and we need the RMO right here to be below 0. To go long, we need a blue bar, a blue arrow, and the RMO above 0 to go long, right? So those are the different things that we need to happen to enter that trade. Now, it doesn't have to happen on every single bar, the same bar. So for example, right here, there's a blue bar, but there's a blue arrow to go buy, but we don't buy on that bar because there's not a blue bar. So then we come in here, and our first blue bar is right in here at about $53. And right there is when you could buy because the RMO is above 0. Okay, so let's give an example here. This is one of the best examples of a buy that we could do. So right here, we have a blue arrow, a blue bar, and the RMO is above 0. So when we have all 3 of those happen, when the last one occurs, then we can purchase. So we get in here. Let's do this. Let's get the trade price. Okay. Let's do this. Let's select the vertical line. We're going to delete that. So right there, let's say we buy at $51. Okay. So this is on December 21st, 2023. The RMO gave you an early Christmas present on December 21st with a buy of $51.33. As we come up here, we get a red arrow, but do we sell? No, because the RMO is still above 0. Now we get another blue arrow with a blue bar, and the RMO is above 0. If you wanted to continue to ladder your position, you are welcome to do so. If you are a new user to the RMO, I would recommend going only with the first buy signal after a short opportunity or a sell opportunity. So that would be right here. As we get up here, you say, oh no, the medium trend is bearish right here. And we have a red arrow and a medium trend bearish. Do we sell or go short? No, we do not, because we come up here to the primary trend. The primary trend is bullish, okay? We continue to come up here. We get another one, right? The medium trend is bearish. We have a red arrow, but do we sell? No, because look at that primary trend. So you are still in a trade, what, let's say 10 months later, 11 months later, and right now you're at 84.56, okay? So 84.55, you bought in at 51, you've made $33 on that trade. That's a great trade, right? That is something that all of us would like to be a part of. So let's go back to the PowerPoint. We're going to summarize it. The RMO, step 1, identify the primary 2. Step 2, identify that short-term, medium-term trend. Step 3, identify the trigger, meaning when can we get in the trade and when should we get out of the trade. So let's go back in and we are going to have some fun. This is the best part of presenting MetaStock. We're going to dive in here and we're going to look at all kinds of different charts, okay? So why don't we take a look here? We've already looked at a stock. We looked at Walmart. How about we look at the E-mini, right? So we come in here and we go to apply template. Again, here's all of those templates that are provided to you as a user of MetaStock. Click RMO trade model, double click it, and let's see where we go. We're going to look first off at step 1. Step 1 is identifying the primary trend. The primary trend is above 0, so we can go long. Okay. Step 2, let's go ahead and back this out just a little bit. Let's get to where there was a short opportunity. Wow. E-mini all the way back to here. That is insane. Look at that. So right here, we have an RMO bullish trend. Right here, we have a blue arrow and we have the blue bar. So right here is where we would buy. And you would have bought on November 6th, over a year ago. Over a year ago, you bought at 4.379K. Where are we at today? Over 6K. How much money would you have made with this trade? Now, let's go through the trade just to make sure you understand. So we have a blue arrow, a blue bar, and the RMO above 0. Now, we bought back here on November 6th, and we follow this trade. Now, you're saying, hey, I'm getting red arrows, but these red arrows are not going to let us sell or go short because we use multiple indicators to confirm our buy and to confirm our sell in this trade model. So you need 3 things to buy. We need the RMO above 0. You need a blue arrow and a blue bar. We get up here, okay. Now we're having maybe an opportunity to get out of this trade. We get a red arrow. The short-term medium trend right here has gone red, but look, we're still above 0, so we don't sell. And we've done that all the way in. Now down here, this ribbon also identifies where the trend is. The primary trend is bullish. Now you're going to say to yourself, hey, now you're showing me 2 really good examples. Where does the RMO get caught? Let's look at this. So right here we have a short opportunity or an opportunity to sell and get out. So right here we have a red bar and we're below 0 in the primary trend. So that red arrow comes into play, and we can sell at 4.346. Okay. Now we take this down, and it comes back up. We get a blue arrow, and we can buy right on this bar. So we sold, or if you went short, you would have lost just a little bit of money in here. So sometimes in that whipsaw, that's kind of the weakness of the RMO. Now, was that a big loss there? No, it wasn't a big loss. Okay, let's go into another one. We looked at the E-mini. Let's come in here. Let's look at the Bitcoin. Bitcoin, because what you're going to probably say is, hey, look, we looked at Walmart and the E-mini. It was in a really easy trend. It was going up. Boy, this Bitcoin looks a little bit more all over the place. So let's try that one. We go to apply template, and we're going to jump into the RMO trade model. We're going to click apply, and let's get into it. Do you know, this is my favorite part of my job, hands down, is when I get to present meta stock. It's my favorite thing because I'm showing traders like you know, how you can be successful trading inside a meta stock and using, you know, the different tools that we have. And for a software that's been around for over 40 years, you know, we are seen, you know, as kind of the highest end software that there is. So right here, we come in and let's look for our first trade opportunity, okay? So we look in here and we say, okay, RMO above 0. We come in here and say, oh, we got a blue bar. We need a blue arrow. There's our blue arrow, right? And we're going to be buying in at about 65,000. And look at that. You have ridden this up to 84,000. You know what's surprising to me is I haven't checked Bitcoin in quite a while. I didn't realize Bitcoin has jumped up to 84,000. That's pretty amazing. Obviously, since the election, I mean, you look at that, it opened at, you know, around 69. There's been a 15,000 move since the election there. Wow, look at that. So that shows you a little bit of the latest buy. And right in here, you can tell we get in a little bit of that whipsaw, don't we? And that would have been a losing trade, not a big losing trade. Right here, let's show another trade, going short or selling. So right here, you can tell that there's a red arrow, a red bar, and the RMO is below 0. So let's say we get into a trade here at, you know, the open, there's a high, low there. Let's say we get in about 60,000. It comes all the way. Let's see when we could get our first opportunity to buy. Looks like about that bar. There's the blue arrow. We're reversing and the primary trend is becoming bullish. And it's at 60,000. It looks like you probably break even on that trade, okay? So, you know, I'm not just gonna sit here and show you these unbelievable, you know, trades that go, but if you can somehow get into that trend, boom, look at that. On the very last trade here, I mean, you've come out 24,000, you know, on this trade of Bitcoin. Let's look at another one. How about we look at crude oil? I'm trying to show as many different instruments and securities that we can. Crude oil. So we come in here, we're going to go to apply template. We're going to come down here to the RMO trade model. And also while I'm doing this, I would love for a little interaction. I'm not interested in just showing good examples, right? I want to show you the tool, what a real trader has to look at every day. If there's a security that you're trading right now, please in the comments, put what stock you want us to look at, and I'll pull it up here in the presentation. I just don't want you to feel like this is a canned presentation where we're just trying to show, you know, good things. And that's why I'm showing so many different securities here. So this one is crude oil. And as you can tell, boy, it's all over the place. This security oscillates like crazy. So we come in here and, you know, okay, wow. Oh, what a great example to show. Look at this. So right in here, crude oil, about right here. That one is right on the, we're moving right below the zero here for the primary trend. We have our red arrow and a red bar. Let's say that we get into this at, it opens at $80 and we have gone short ever since. There's one opportunity here, but let's say we came in here at 81. It looks like you may have gotten out right here for one bar, right? And then you got back in right here. But boy, look at that. It went from 81 to about 68. So there was about a $13 move on crude oil. Now, let's say you want to look at an hourly chart. How do you do that inside a Metastock? So down here is where our interval is. And we come down here and we select hourly. It will change the chart to an hourly chart and it will leave the RMO oscillator on there. So if you were an hourly trader on November 8th, right here, the oscillator goes below zero. We have a red arrow, red bar. We buy at 71 on an hour chart and go down to 68.25 right now. So that tells you a little bit about trading real time and using it with oil, okay? The next one, I actually am flying to London tomorrow and over to Europe. So let's look at the euro. Okay, here's the euro right here. Let's go ahead and click Apply Template. Let's select RMO. We'll click Apply. And let's look at that. I love doing this. It's so fun. Again, ladies and gentlemen, please, I'm trying to look over here at my messages. If there is a security that you want to look at, please type it in there and we will actually bring it up, okay? So what we're looking at right now is the euro, and let's look at our most recent opportunity to buy. So we have a red arrow here. The RMO is still above zero, so we can't go short. Oh, we have a red bar, RMO. So the short term that we're looking at is right here, and we can't get in until it goes below zero. So right here, it goes. And we can come in here and say, let's say that at the around 109 is when we went short. We've been in this trade ever since. Think of all those pips that you just earned going from 109 to 106, right? It's funny, you can see every bar for election, right? And that's a big move for a Forex trader. That is a lot of money that you're seeing that can be made there. Okay, and then let's look at Meta. Well, Meta's been on a tear. Look at that. Let's go ahead and go to Apply Template. We'll go to RMO Trade Model. Now, after this stock, we're going to be looking at the stocks that you guys have selected. So make sure that you go inside where you can type in your comments, and please put what security you would like to look at. Okay, we're going to keep going back here. Wow. Wow. So our first buy opportunity right there. Actually, it's the bar over. So at $51, we got a blue arrow, we got a blue bar, and the RMO is above zero. So again, this is our primary trend. Right here, these colored bars are our short, medium term. Where we're looking at here, it's blue, it's going in a bullish trend, and we buy in at 51. Look at this. We did not exit the trade. This is back a year ago, less than a year ago, and we got that again at December 21st. We went from 51 to 84. I think we looked at this one in the beginning. Oh, that's Walmart. Ah, sorry. I wasn't on Meta. It looks so familiar. Sorry about that. Let's look at Meta. Okay, that will come in, and let's take a look over here at the chat.
Can you see him?
I can't seem to see him.
Okay. Tom would like to look at MSTR.
Okay.
And while you're pulling that up, Verdell V wants to know what the time frame being used is and what RMO stands for.
Okay. So the time frame that we have looked at so far today is mostly daily, and we have looked at hourly charts. Right here, you can see on the bottom of Metastock, right there is our interval. The D stands for daily, and if you click on that, you can actually change any of the intervals right here. Okay. RMO stands for the Rahul Mohinder Oscillator. And as Jeff said earlier, if you'll actually go to our YouTube page, youtube.com/metastock, and like and subscribe there, you can actually see Rahul himself giving training for free on how to use the RMO. But anyway, we're going to quickly go through here. This is Meta, and we're going to say right here is where it goes above zero. But can we buy there? No, because there's a red arrow and a red bar. We need this blue arrow, blue bar. So we bought here at 524, and look at this. Over the last 2 months, we went from 524 to 581, which is a 524, there you're looking at a nice 56, 57 point gain, which is great. So now let's look up the security that someone else wants to look at. And that was MSTR. Let's pull that up. Let's see if that's on the NASDAQ. Okay, MicroStrategy. So right here, let's take a look at it. For the individual that was interested in this, what we're going to do is we're going to right click. Now, I guarantee people are interested in MicroStrategy today because look at that massive gap up. And I'm sure what you're questioning is, was I already in the trade before that gap up occurred? Let's find out. Let's go to Apply Template, RMO, Trade Model, Apply, and pull that up. Okay, let's take a look at this. Our last buy opportunity, and of course your question is going to be, Okay, so when did we get in? Now look, we got to get when this goes above 0. So right here, right here, we see that the RMO goes above 0. We have a blue arrow and a blue bar. So the primary trend, the medium-term trend, short-term trend, and our buy signal all triggered right here for us to buy. Again, it doesn't have to happen on the same bar, but they have to be consecutively happen, without a red arrow, red bar, or the RMO below 0. So we purchase right here at 140. Oh my gosh, look at that. So we bought in two months ago, September, at 140, and it's at 321. That is mind-boggling. Now think about this, guys. This is not a presentation that is canned or fixed. We asked someone whatever stock they wanted to look at, we'd pull it up. Look what we just showed you. That was a stock that more than doubled in the last 2 months, and RMO caught it all the way back here at 140. That one trade pays for a lot of things, especially your Metastock subscription, that you're wanting to use. So now the next question might be, well, we're throwing out all these stocks. Can I make this a little bit easier? You can. We can actually scan the whole market, and we can use the Explorer to find buy and sell opportunities. So if you come in here to the Power Console, now remember, everything I'm doing today is in Metastock 19. So if you're not a current user of Metastock 19, you need to upgrade. If you don't own Metastock, you will automatically get that Metastock 19. So what I'm going to say here in the Explorer is, hey, look, I want to see, first off, the RMO bullish zone, the primary trend. Number 2, then I want the market, after it scans those, I want it to get all of those and then find out if we have a blue color bar. What's our medium term trend? Is it blue? And then I need to find an RMO buy arrow. So I select all 3 of those. As you can see right here, here's the order. And then what I select is use the results from the preceding exploration. So I could wake up literally every day and scan the whole US market and find out which have buy opportunities today. What we're going to do is we're just going to go ahead and scan what we have here on the S&P 500. So if I click that, it will come in here and it will start to do a scan of Metastock, the bullish zone. It's going to be looking at all of the stocks that are in the S&P 500. I'm right here, and let's go ahead and close that. Do you want? Yeah, I'm going to cancel it. I've done something here. And the great part is, if these are already have an R on them, I ran them right before. So the buy arrow, we went through 500 stocks. And if I right click and go to report, it'll show me a report of from the S&P 500, all the stocks that were included in that scan. Apparently I'm sitting here. Okay, let's do this. Anyway, of course, during my presentation, there we go. Let's go back now inside of our PowerPoint here and just highlight again what we have to do. If it's an RMO bullish trade, the RMO has to be above 0. If it's a bearish trade, it's got to be below 0. The midterm trend, swing trend, if it's above, it will show you blue bars. And that's for a long trade, a bullish trade, we want blue bars. If it's a bearish trade, we want red bars. And then the last thing to occur, we need in the long-term trend, we need an arrow. And if you have a blue arrow, that signals a bullish entry point. If it's a red arrow, that will indicate a bearish entry point. So again, we've won the analysis of the Task Magazine 31 years in a row from the Reader's Choice. So you're sitting there, you're asking yourself, wow, well, you're showing me a lot of great things on that micro strategy. We went from, what was it, 140 to 320 in 2 months. And so the cost of Metastock, if you're trading and you're a good trader, it's part of the cost of doing business. If you're interested in only using free tools, well, you're going to be getting free results, right? And that's why Metastock, you know, it's so important. We have institutional traders that use Metastock, retail traders. We have been around for over 40 years. How much does it cost? If you're a real-time trader, you get Metastock 19, you get Metastock Zenith, which includes all that real-time data, market, and news. It costs $265 a month is all, okay? Such a great price. If you're an end of day, a daily chart client, it's only about $75 a month. That includes your software and your data, okay? Now, we have a great offer. So you say, well, I tuned in. We're going to give you something amazing. Buy 1 month and get 2 months for free. It includes Metastock 19, the data that you want to choose. We have our support team. It's just right here in Salt Lake City, Utah with us here in the office. Every month, if you call into our support, we send out a survey. And we have never gone below 90% of customer satisfaction in the 24 years I've been here on a monthly basis. We also have unleashed the power of Metastock. It is a tutorial that will help you show how to use Metastock, and it's worth $99 that we're going to give you for free. So in some cases, if you're doing the end of day, that $99, I mean, you're coming out ahead, right? Girl math. That's how we do things here. To sign up, how can we do it? 1-800-882-3040. 1-800-882-3040. We have sales reps standing by right now that can take your calls, answer your questions. You can go to metastock.com/sales chat. Again, metastock.com/sales chat. You can chat with our sales team and they can help you that way. You can also sign up online at metastock.com/CONF promo. Again, metastock.com/CONF promo. Man, I know that's been the best hour of your life. We only have a few minutes left, so I'll turn that over to Jeff if we have any questions or if anything we need to do.
Yeah, before I let you go, Scott, good job, by the way. Before I let you go, I'd like you to pick another winner for me.
Oh, between 1 and 7,200?
Where did my list go? It's 7547.
Okay, don't forget, if we need you to go up to our youtube.com/metastock. We need you to like and to subscribe. But the winner is going to be 3,287. 3,287. And that's going to be a lucky person right there.
It's going to be Ralph B. in Washington with a Yahoo.
Let's go, Ralph.
Now, you might wonder what he won. He might wonder as well. If you win a prize and you're watching live, let us know in the chat. We'd love to congratulate you. In this particular case, you just won Buff Dormeyer's Volume Factor book, which is going to be signed and sent to you.
Ooh, lucky day.
Right.
Someone's Monday just started out right.
All right. Cool. I'm going to go ahead and dismiss you, Scott. Thank you very much for joining us.
I want you to boot me out.
All right. Prepare to be ejected.
Thanks, everyone. Have a great day.
Thank you, Scott. Okay. I'm going to do this. Let me go ahead and make me the presenter real quick. And I'll show my screen. And we'll go ahead and jump over here. I'm running an exploration. So we'll go ahead and go back into the PowerPoint. I absolutely love the scanner as well. You can see, again, like Scott mentioned before, Metastock's been rated the #1 software in its price category by the readers of Stocks and Commodities, and it's been rated that 31 years straight. So for everybody that's been using Metastock for that long and that's been voting for us year after year after year, we appreciate that. 31 years in a row, #1. Scott said we have 2 different flavors of Metastock, or versions, or however you want to describe it. We have a real-time version, and we have an end of day. And one of the questions we had earlier is what's the difference between Metastock RT and Metastock DC? So I'm going to go through that real quick. Metastock RT includes everything Scott showed you: the scanning, the RMO system, the ability to look at any interval, whether it's 1 minute, daily, weekly, 60-minute, whatever you want. Also includes a news platform that we call Zenith. It's a platform that they developed. It costs over $1 billion for them to make it. And it includes some of the best news and information that's available in the industry. In fact, a lot of hedge funds subscribe to it. It's a competitor to Bloomberg. And so the cost on that's $265 per month. That includes that Zenith newsfeed. It includes Metastock. And you can get a 3-for-1 on that, which means your cost is going to be well under $100 a month. If you just want to be able to run your Metastock scans, you want to see RMO, you want to use our daily charts version that looks at daily, weekly, monthly, etc. It's only, as Scott said, $75 a month. And that includes your market data. It includes any data you want, over 300 different exchanges anywhere in the world. All of that is included. So the offer that we're doing here is if you buy a month, we'll give you the 2nd and the 3rd month for free. The cost on that, if you do the $75 option, is going to be $25 a month. And for basically $75, you're going to be running until February. During that time, we're going to give you Metastock 19. We're going to give you all the data in the world, that's data region thing. We actually just simplified all of our pricing. It's one price. We're going to help you install it. If you have any questions, if you ever need anything from our support team, you can give them a call. They're very, very good. We keep more people in the support team than we put in our sales and in our marketing put together. And they always do a really, really good job. They also help you kind of go through the software. We have what we call our white glove installation appointment. It's up to 2 hours long, and it's designed to kind of just make sure you know how to use the software. It's a toolbox. You want to understand how it works. We're also going to throw in a study course. It's called Unleash the Power of Metastock, normally a $99 value. Our commitment is we want you to use it. We want you to get comfortable with it. We want you to try it. Because we know if you do, and if it's helpful for you, you're going to keep it. And it'll be well worth the cost that you pay for it. So give us a call at 800-882-3040. You can go to metastock.com/sales-chat. You go to metastock.com/conf-promo. And I'd encourage you to try it. There is a reason it's been rated #1 in this price category for so long. I personally wouldn't trade without it. I love running my scans every day, looking at my stocks, seeing all those real-time commentaries, signals, alerts, you name it. Metastock.com/conf-promo, 800-882-3040, metastock.com/sales-chat. So big thanks to Scott for kind of coming in and talking about it. Before we kind of go into the next speaker, I want to say thank you to one of our sponsors, the CMT Association. Tyler Wood is a friend of mine. He does a lot of work with the CMT Association. He's going to come in later in the week. I think it's Friday. And he's going to talk about the benefits of being a CMT member. But I'll just kind of break it down for you. It kind of opened up my eyes when he was kind of going in and talking about, like, if you have money, assets under management, if you want to have a job managing money, if you just want some cool initials after your name, the CMT, all of those things are stuff that they can help you with. And they do a really, really good job. Their accreditation is awesome. It's well respected. You can find more about the CMT organization at cmtassociation.org. You can call them if you want to, 646-652-3300, and great organization. Mike asked the question. Mike, thank you for your question. Does it work on a Mac OS? It kind of does. It is a Windows-based product, so you'll need Windows 11. You'll need to run Parallels or Boot Camp or something similar to that to kind of get it to work. And if you do that, it'll work great. I've seen a lot of people using it on a Mac OS, but it is a Windows-based product. So thank you for your interest in that. And that's what you need to do along those lines. So anyway, all right. Our next speaker is the Mad Hedge Fund Trader. I remember we've had John on a number of times, and I'm sure he's going to have some really good information and insights now that the election is over about kind of like what he expects and what he anticipates. We love having you on here. You're welcome, Mike. Happy to answer your question. We love having him on here. He always has some interesting takes in terms of what's going on. So, John, how are you doing today?
Can you hear me today?
I can.
Hey, well, a miracle of miracles.
Good. Yes, I expected to be able to hear you though, if I'm honest.
Well, you never know with technology. They may decide to upgrade the software right in the middle of your presentation.
Yeah, no, you're coming through. And don't curse us, please.
Oh, I go to church on Sundays. I never curse.
All right, very good. I can't see your presentation, and I can hear you. So I'll get out of the way. I'll let you go.
I think we're good to go. And if anybody has any questions, just put them in the chat box on the right, and I will address them as we get to the end of the presentation. So elections have consequences. How about that? And we just had a big election. It has big consequences, and a lot of stocks are going to get killed as a result. But a lot of other stocks are going to have multi-year moves up. So I'm going to tell you which ones are which and how to play them. And I'm entitling today's presentation, "Get ready for the next market crash," because there is one coming. That is a certainty. Probably won't happen next year or the year after that, but beyond that, look out below, and might be handy to have some skills on how to make money in a down market, which we are also covered today. So take out your pen and paper to take notes or start typing into your smartphone. What I'm about to tell you will blow you away and change your life, for I am in the early retirement business, your early retirement. Learn what to buy and when to buy it and why. So how would you like to earn 350% with Vertex Pharmaceutical in 1 month, 394% with Palo Alto Networks in 2 months, 412% with JP Morgan in 3 months, 421% with Berkshire Hathaway in 4 months, and 811% on good old NVIDIA in 6 months. And that's my own personal retirement fund, NVIDIA. Of course, none of these stocks actually went up that much, but there are ways of legally leveraging your positions in any of these stocks at any time, and I'm going to show you how to do it. So why listen to me? Well, I have 55 years of experience in the global financial markets, 10 years as the Economist magazine correspondent in Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, Marine Corps combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, and now 16 years publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern hedge fund industry who's still living and breathing. And if you ever need a ride in a World War II fighter, I'm your man. And if you don't believe me, just keep watching. So these are the election outcomes. We are going to get higher inflation, higher interest rates, much higher national debt, less regulation, and that's key. The big winners there are brokers and Tesla with their full self-driving, which we'll probably see in the United States sometime next year. Less environmental control, that means more profits for oil companies. Extreme labor shortages at the low end, hitting agriculture, restaurants, and construction. Ukraine withdrawal. Taiwan is put at risk. Retreat from international commitments. Earlier but higher stock market highs. And then an earlier recession. Then earlier but much lower stock market lows. And of course, all antitrust action ceases. So here are the winners and losers. Winners are energy, financials, brokers, domestic manufacturing, crypto, Tesla, and health insurance. The losers are all falling interest rate plays, all bonds, housing, real estate, construction, and exporters. And there are plenty of stocks to choose in both groups. Of course, the reason you're listening to me really is that we've averaged a 52.98% average return over the last 16 years. And that is double the S&P 500. So if you want to earn double what you're earning on your index fund, this is the place to come. And if you don't believe me, just listen to Mad Hedge Follower Wilson. Let's see if I can get it up. Let's see. Nope, that's not it. There we go. Nope. Okay. That is not playing. Come on.
Okay, go for it.
There we go.
Hi, my name is Wilson, and I've been with the Mad Hedge Fund Trader and John Thomas since 2019. I caught the phenomenal returns in 2019 and 2020, somewhere in the order of the 80-90% returns on both of those years. I caught all of those trades, NVIDIA, the TLT, the Teslas, and so many more. And then in 2021, I started trading in some additional accounts, and I have caught almost all of those trades as well, and have been getting almost the entire returns that John has received, and it's been just fantastic.
All right, Wilson, thank you very much for that testimonial. So what did Wilson do? Well, he turned 1.2 million into $92.6 million in 2 years. No wonder he was so happy. And these are the specific trades he did. NVIDIA 482%. Again, NVIDIA again at 811%. Berkshire Hathaway 421. JP Morgan 412. Palo Alto Networks 394. Vertex 350. Silver 113. And JP Morgan again at 87. And this is a copy of his trade sheet, which he emailed me unsolicited. So, and even paid for the lunch. Thank you very much, Wilson. So, okay, let's go here and here. Okay. So this is our secret weapon, our Mad Hedge Market Timing Index. We call it the Profit Predictor. This is my secret weapon. It's an artificial intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators all day long. It took a team of mathematicians 1,000 hours worth of calculations to come up with this algorithm, and boy, is it worth its weight in gold. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. It does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than any human can. Imagine a trading strategy that upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. You're trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading system that will enhance your profits. This is 3 years of market timing index indicators. We get lots of buys at market bottoms, lots of sells at market tops, buy, sell. It's like owning a money printing machine. And I'm not the only one using algorithms. Some 80 to 90% of all current trading is algorithm driven. This is the last 2 years of our indicators. And you can see, again, right now, we went into the election at a high. We sold off down to the neutral level, but never got cheap. And of course, we rocketed right back to expensive once the election outcome was known. It really didn't matter who won the election. The very fact that we had an outcome at all instead of 3 months of litigation was much more important. So market loved it, 1,500 points in one day. I'll take that all day long. So why cover all asset classes at the same time? Well, information about one asset class sheds light on all the others. For example, knowing what the bond market is going to do and therefore interest rates is incredibly useful advantage to have when picking stocks. Some asset classes will be doing great while others will be dead in the water. It will point you to where to trade the winners and avoid the losers. Give yourself every advantage. Know what's happening all the time, everywhere. There is a method to my madness. With the election outcome, we'll get a higher high first and then a lower low later. Lots of volatility, lots of trading opportunities. We simply flip from one type of risk to another. Start lining up your bear market plays now, but don't execute yet. All interest rate plays are looking at big sell-offs. Rising rates will also take the US dollar to new all-time highs. Currencies love high interest rates. Technology stocks will still be attractive for the long term, but have new headwinds. For example, if we do get a trade war, 50% of big tech sales come from overseas. When you impoverish your customers, it's bad for business. Energy will rally on the deregulation, but oil won't. Oil prices will probably go down because of increased supply. So stand by and wait for the initial euphoria to pass and then see where the money flows. So let's talk about bear market plays first, because you need to start learning how to play recessions in bear markets, and there are lots of ways to do it. It turns out that with the markets at all-time high, all bearish stock plays are now incredibly cheap. Some of them are just being thrown away. We'll start with the SDS. That's the traditional way to play bear markets. And we had a great test of this theory last July when we had a 10% decline in the S&P 500 on that day or on that month. The SDS went from 21 to 26. That is a 25% gain. So this is where the 2x part kicks in. A lot of traditional hedge fund managers use this to hedge portfolios, but in bear markets and falling markets, this is your best friend. So you buy the SDS on the onset of any bear market, and the moves can be quite large with the 2x. Stocks, if you're not happy with the 2x, well, there are 3x's out there. That's an ideal day trading instrument because they reset the value of this ETF every day at the close. And let's look at the July test. Went from 25 to 34, or about 40%. So again, the 3x element is kicking in here. Be careful because the dealing spreads are high and the tracking error is high on these. What else do we have? Well, you can buy put options. And I give an example of the January 2025 200 puts. If you buy those at $2.44, which was the price last week, you get a $100 profit for each dollar that Apple falls below 197.56, which is your cost. Or you get $1,000 for each $10 decline in Apple. So ramp up a decent position in this, it can add up a lot of money. However, puts are very expensive in falling markets, and you need pretty big moves. In this case, you needed a move down of $32 down before you hit your profit point. So we go on to better ways to use put options, and that is shorting call options is another way. This is a limited profit means of making money. In this example, if you sold short the Apple 240 calls at $6.80, you collect the full $680 for each option you sold short, as long as the stock stays below 240. And right now that's looking like a safer bet. But there's even better ways to play the downside. You can buy volatility. And let's see how volatility did in July. Well, it went from 11 to 55 just in 3 weeks. So again, you want to buy the VIX or the VXX, which is the ETF, and you can get spectacular returns. But remember, you have to get good timing on this, because it has to happen quickly. If you bought VIX, say back here, you got this little spike up to 22, and then we went sideways for 3 months. Time decay is a killer on these volatility plays. So that means we have to look for even better ways to play down markets, and there are lots of those. You can buy the IPO ETF, and it turns out that IPOs are among the worst performers in any falling markets. You can see here at the beginning of July, we were at 42.5, and it dropped all the way down to 36 on that 10% bear market. So it really outperformed the S&P 500 by 2 to 1 on the downside. And you catch another high like that, we go into a sell-off, you will again outperform 2 to 1 on the downside with an IPO ETF. Guess what else suffers in down markets? Momentum. And there is an ETF that does this, MTUM. And in this case, in July, in our 10% sell-off, we went from 200 to 170. That is a 15% drop in a 10% down market. So again, another way to diversify your risk on the downside. And high beta stocks also do terribly, because your beta disappears in a falling market, because you're reverting to a mean, a long-term mean in most cases. In this particular case, the SPHB dropped from 90 to 76. And that is about a 15% down move also. Okay, we also have hedge funds you can buy who are usually very leverage long. And in this case, there's the HDGE, and leverage longs do worse in down markets than normal longs or unleveraged longs, in that they're borrowing lots of money to buy stock on margin or through other leverage means. So in July, let's give it to the July test, we went from 21.2 down to 18. That's about a 15% down move, another way to play bear markets. So let's look at some of the asset classes we think are going to do better over the long term. Precious metals, top of the list. Gold is the only way the average Chinese now can save money, as they no longer speculate in real estate because it's crashed, copper because it's crashed, and they don't trust their own currency or bond markets in the Chinese yuan. So what do? They buy gold, and they've been buying gold. The retail investor in China has really been buying gold nonstop for 2 years. On top of that, you have central banks in emerging countries also buying gold to bypass sanctions from the United States. Russia and China are the big ones, but in fact, there are quite a number of central banks now buying gold and trying to avoid the dollar. A global monetary easy is at hand. That'll eventually click in. You want to buy the gold and silver ETFs. This is what the gold chart looks like for the last 6 months, and it really has been a buy every dip market all year, and really for the past year, gold is up 40% in the past 12 months, and that's really the only negative with gold. It's already gone up so much, but we're looking for gold to go up to 3,000 sometime in 2025. And if you like gold, you'll like the world's largest gold miner. It's on sale now, down at $17. We're looking at $30 sometime next year. That's a gain of 60%.
And the ISIL Silver Trust, if you like gold, silver will go up twice as fast from demand from EVs, solar panels, and other industrial uses. Gold is no longer an Indian jewelry play. It is now an industrial play. So buy gold, we're looking for, silver, we're looking for $50 in 2025. So to say there was a shakeup in the stock market would be the understatement of the year. I believe it would have gone up huge no matter who won, because people were just waiting for a decision. They didn't care what the decision was. The very fact that it's out of way unleashes $8 trillion of cash on the sidelines and is putting it into the market. The only distinction is the winner determines which sectors it goes into and which sectors the money comes out of. So of course the big winners are deregulation plays. So people are moving money out of falling interest rate plays like housing, like REITs, and real estate, and moving it into deregulation plays like banks and brokers. Banks and brokers are the most regulated industry in the world. I know because I've worked in the industry for 50 years, and I used to spend $1 million a year on legal fees when I ran my hedge fund, just to keep all the various federal agencies at bay. Same is true for everybody else. If you can clip that million down to 500,000, that goes straight to the bottom line. So Tesla, also a big winner. Deregulation means they will be able to bring their full self-driving to the United States much sooner than expected. That is going to be worth about $15,000 a car. Imagine a company that all of a sudden out of the blue is able to raise prices by $15,000 per unit shipped. That is a massive gain. Is why Tesla's gone up 45% in 4 days. Apple says their iPhone sales are using. Hedge funds ramped in risk going into the election, not caring who won, by the way, because they saw the same things coming as I did. Okay, so the election impact, money managers were worried about no election outcome, like 3 months of litigation, rather than who won. A decisive outcome is hugely market positive. Look for stocks to rally into 2025. After the inauguration, we'll see what really happens. Right now, no one really knows. Donald Trump doesn't know what he's going to do, what he's able to do, and what the courts will allow him to do. And of course, the majority in the House, if they get it, will be 1 or 2 seats. So that will be a very difficult reality to deal with because the House controls all spending. So barbell portfolio is what we do. NASDAQ is where the big money has been made this year, had a massive spike gain after the election. But again, you have to be careful on which tech stocks. It's really become more of a tech, a stock picking market. It's not monolithic anymore. And we will tell you which ones you need to buy. One way or the other, we're looking for at least a 20% gain next year to 25,000 in the NASDAQ index, or the dollar comp Q. So winner number 1, Tesla. And there's my Tesla Cybertruck out there. Incredible vehicle, not only 4-wheel drive, but 4-wheel steering. If you turn left, your front wheels go left, but your rear wheels go right, meaning you have you can turn almost in a circle. Of course, Tesla's up 45% in 4 days. Hard to argue with that. We had a double long position in Tesla. It's looking fantastic. One of the big winners. And I think Tesla could go to new all-time highs sometime next year, and then some. $500 a share. The old high is $424. Buy Tesla on dips. And by the way, we just had a $20 dip intraday. It's become a new meme stock, essentially. Okay, Meta, another winner.
Profits have tripled on improving sales and massive cost cutting. Meta knows every social media post you've made for the last 20 years. Do you think that's worth something? We see Meta hitting $700 a share sometime in 2025. By the way, I'm showing pictures on the right, all the various World War II aircraft that I have flown in air shows over the years. This particular one, B-24 Liberator. I'm one of a tiny handful of people alive who can still fly these planes. Try landing a tailwheel bomber. Not easy. Okay, so Amazon, another big winner. They were staring down an antitrust suit. That is now gone. All antitrust actions will be frozen or dropped. And of course, the stock market believes that. And you got a gigantic move off of the bottom at 185 to 212. So that's 24 points. It's about 15% in 4 days. And we're looking for Amazon to hit $250 in 2025, and that's a Mitchell B26 Marauder twin engine. That's probably the toughest twin engine that's ever been made. 850 caliber machine guns in the nose. Ouch. If we only had more of those at the Bay of Pigs. NVIDIA, of course, another big winner. We're looking for 180 sometime in the next year. We got a nice 10% post-election pop in that one. We were long the leaps, long call spreads, long calls, long the stock, long up the wazoo, and everybody was extremely happy about that. Google knows everything you've searched for the last 20 years. It's also incredibly value data, which the market is underpricing. And we see Google going to $250 a share next year. They were also facing a big antitrust risk, which is now gone. And that is a very early generation, a P-51A Mustang, which is the fighter that basically won World War II. Palo Alto Networks, hacking never goes out of style, and you can expect government spending on cybersecurity to increase. We're looking for $400 a share in 2025, and that's the Mitchell B-25 bomber I used to fly over Lake Tahoe, 50 feet above lake level. Yes, it can do that, even though the plane's 80 years old. Of course, the people in the front nose gun were a little bit scared, but what's life all about? Second half of the barbells is more domestic plays and deregulation plays. Of course, JP Morgan, the big winner there. It's a quality value play in the market, hugely overcapitalized, moving into online banking, closing their expensive branch networks. And I would reckon they spend billions of dollars a year on regulatory requirements. And those go out the window or at least get pared down. That is worth a lot of money to JP Morgan and the stock market. And I believe this thing is going much higher. JP Morgan, $300 a share sometime in 2025. Berkshire Hathaway, another big winner. They're very heavy in financials and very heavy in Apple. They also own one of the largest railroads in the United States, another very heavily regulated industry. It's a good rule of thumb that the older an industry is, the more it is regulated. Answer, because they've killed more people. And the railroads industry in the United States is 180 years old. So any kind of deregulation there for Burlington Northern, huge positive for the stock. Oh, and by the way, they have $325 billion in cash. So any kind of market sell-off, they'll be there to add to their portfolios and buy more of their own stock. Berkshire bought $23 billion worth of their own stock in 2023. And if you're selling Berkshire Hathaway, chances are you're selling your shares to Warren Buffett, this guy down here. Goldman Sachs gets a double win on the election. Not only do you get a big cut in costs on deregulation, The elimination of antitrust revives the mergers and acquisition business, which was totally dead this year, but will rocket next year. And this is almost a pure profit business. You make a few phone calls, you get a couple $100 million in fees. I used to be in the M&A business at Morgan Stanley, and the money they used to rake in there was incredible. Bonds. Let's go on to the next asset class. If you expect interest rates to rise, the national debt to rise, the last place in the world you want to be is the bond market. The deficit is the big election loser. The only question is, does it go up by 10 trillion or 15 trillion? National debt is about to explode. Interest payments on the national debt are already 2 trillion. They could be 4 trillion, 2 trillion in the next few years. Government borrowings become so much more difficult. The last time Trump was president, when the deficit was only $27 trillion. So we'll see what the market can take. Even if Trump abolishes the Federal Reserve, which he's trying to do, he can't abolish the bond market or the bond vigilantes, and they could easily take long-term interest rates up to the 10% level. And for those of you who are new in the game, bond interest rates actually hit 18%. And the last time we had very high inflation in the 1980s. I remember my first mortgage interest rate was 17%. My parents told me, you'll never pay this off. But I had also one of the first floating rate loans. And by the time I sold the house, my rate had floated from 17% down to 11. So it all depends on inflation, which is likely to rise sharply in response to increased spending, tax cuts, labor shortages, and trade wars. Best case for bonds, the TLT chops around here. Worst case, we retest the lows at 82 and then go lower. It all depends on how fast inflation returns. If it's a long time, bonds could hold up here. If it's quickly, you could get a sell-off in bonds pretty soon. All you need to do is wait for the first shocking upside move in inflation. And with companies starting to raise prices on Wednesday, the day after the election, I think that inflation turnaround will happen pretty soon. I don't know about you guys, but some of my services doubled prices on Wednesday, Thursday, and Friday because they thought they could get away with it. So here's the TLT, and you can see the impact of the election on the bond market. This is where the Harris momentum peaked and Trump started rising in the polls, and the greater the likelihood of him getting elected, the worse it was for the bond market. So he's now in for 4 years, and I see this downtrend continuing. This is the yield chart. We went from 508 down to 350. Now it's back up to 5% again. So again, we're looking for 5.5% interest rates by sometime in 2025. Currencies, of course, who loves rising interest rates? That is the US dollar. The currency market is totally interest rate driven. The highest interest rate paying currencies get the greatest amount of buying, and that will be the United States. It's already the United States now. We're already pretty high relative to the rest of the world, as long as you don't count places like Argentina, where interest rates are currently around 200%. That means higher for longer interest rates, higher for longer US dollar. Don't sell the US dollar until the next recession, then it'll collapse. So for now, you avoid the Australian dollar, the euro, the British pound, the Canadian dollar, and the yen. So this is what's already happening. The bear market in the currencies, the bull market in the dollar, really started in September when they had that peak in the US bond market. So here's emerging market currencies. That's the Australian dollar and euro looking bad. So avoid currencies for now unless you're playing the short side. Energy and commodities. you know, it's kind of a double-edged sword. Deregulation will mean that the companies will make more money as the cost of their deregulation disappears. You know, all of those flaring pipelines or natural gas flares on the countryside that disappeared under the last administration, they'll come back because it costs money to take that gas out of the system, to pipe it in to the pipeline network. It's cheaper just to flare it on the spot, and that will make a big comeback. Energy was the worst performing asset class this year, and the worst performing asset class under the Trump administration, the last Trump administration. So people have a kind of wait and see mode, seeing how fast increased production will crush prices versus the savings on regulation. So the initial reaction was great for the oil stocks, but I am not a buyer up here. There are in fact better ways to play energy. So here's oil, and you're looking at the greatest double top of all time here, 150, 120. Eventually we go to 10, but it may take 20 or 30 years to get there as it is replaced by alternatives. Of course, there is another way to play energy, and that's nuclear power. And there's a massive global nuclear renaissance taking place. At the same time, the supplies of uranium in the international market are shrinking. They will be down about 7% this year. So we put out a buy on Cameco here. That's the Canadian uranium miner at 35. Got it all the way up to 59. Got a quickie 20% sell off here. We're looking for $100 in Cameco sometime next year. So the harsh truth is you really need my help. The majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easy solution to that for you is to get yourself educated. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why did dead people do so well? Because they never sell. You need a real pro to guard you through the market maze. Market is not monolithic, and 95% of it can be completely ignored. If you look at my trade alerts, you see me following the same 5 or 10% of the market sectors, and those are always the big winners. There are a few great sectors and a lot of awful ones. Get a 10x return from the great ones, but get wiped out by the losers. Let a 55-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. 69.73%. That is our trailing one-year profit as of Friday. We update our books every day, and this is the most recent profit report. Richard made millions religiously following my trade alerts. He now spends his time restoring vintage aircraft and flying them over the California coast. Greg turned $100,000 into $3 million solely on my trade alerts. He bought a new home in Orange County, California, with Tesla solar panels, Tesla Powerwalls, and a Tesla Model 3. Still had enough money to put 3 kids through college. Bob turned $500,000 into $27.3 million in 2 years, and Bob will tell you how he did it.
This is Bob. I live near Denver, Colorado, and I'm hiking on top of the Continental Divide. 9 months ago, I joined John's Global Dispatch Service and was so impressed with the profits I made that 2 weeks ago, while hiking in the Dolomites, I joined his concierge service. And in 2 weeks, it is 100% paid for it, and I couldn't be happier. Life is good. John really helps. The other day I had a text message exchange with him regarding some concerns I had with TLT. Put spreads, he encouraged me to stay in. I did, and today they went out at 95% of maximum potential profits. And that's the way it works for me. I hope you all do well trading yourselves. Thank you.
All right, so what do we do about this? Well, stocks buy the next big dips. Bonds buy dips, but only a really big one, like 10 points. Commodities stand aside, energy stand aside. Buy the biggest dips in foreign currencies, precious metals buy dips. So if you're not up 69.73% in the past 12 months, as I was, you're reading the wrong newsletter or following the wrong trade mentoring service. 52.98% average annualized return can be yours. You get returns like that, you get to do things that other people can't do, like take the owner's suite on the Queen Mary from New York to England. You can then, from England, take the Orient Express from London to Venice. And believe me, that is a vacation of a lifetime. This is the very long view. The 2000s and the 2010s were hard decades for making money. The 2020s and the 2030s will be easy ones as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That will create an economic boom that will last another decade starting in 2023. Up 20 times in 18 years. That's what the Dow did from 1982 to 2000. Are you ready for a replay? That is what happened the last time we had a demographic wave identical to the one that is just starting now. From 2009 to the present, the Dow has gone from 6,000 to 44,000, and it could take us to 120,000 by 2030. If you think I'm crazy, we're already 2/3 of the way there. It's less than a triple to get from 44,000 up to Dow 120,000. Except this time it's different. We now have artificial intelligence as a turbocharger. Technology is hyper accelerating on all fronts simultaneously, and the pandemic greatly sped up the rate of change. AI-based products and services are just starting to roll out. The development of quantum computers means that computational ability is about to increase 1 trillion-fold at no cost. World's major computational challenges will be solved, like weather forecasting and cancer cures. Needless to say, barbell stocks dominate in this scenario, will account for the bulk of stock market gains in our lifetimes. The 90s had cheaper computers, cheap operating software, and a new internet. The 2020s will have 10 times this number of new technology drivers. So who will show you how to play the next 90,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my global trading dispatch. Discover how you can tap into the top performing trade mentoring service in the industry, up 69.73% in a year. Follow my research and market beating trade alerts, and you will rake the profits in. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. This is a typical month. You can see we bought the S&P 500, made 16.3%, sold US Treasuries, made 8.6%, bought the Russell 2000, bought Amazon, bought Apple, bought Biogen, and then stopped out. We stop out of all our losers very quickly. It's easier to dig yourself out of a small hole than a big one. And then every other trade for the rest of the month made money. It's just a matter of time before barbell stocks break out to new all-time highs. Watch this space melt up for the rest of 24 and into 25. Get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. This is an example of a trade alert we sent out at the beginning of the year. Our algorithm predicted a major upside breakout in NVIDIA. So what do? We sent out a trade alert that looks like this: buy NVIDIA at 480 or best, and these are pre-split prices. A $10,000 investment meant you had to buy 21 shares. What happened? Well, NVIDIA went up 45% in 22 days. Do we just sit around and pat ourselves on the back? No, we sent out a trade alert to sell your NVIDIA position. And on this particular position, we made a $4,500 profit, or 45% in just a handful of trading days. So this is a history of our 10 baggers, stocks that went up 10 times or more after we recommended them. We had Zoom, which went up 10 times. We had Lam Research, which went up 10.6 times. NVIDIA up 30 times. Square up 25 times. Moderna up 40 times. And Tesla up 178 times. Our initial cost on Tesla was $2.35. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job for a living and trade full time. Trade anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. And this is me sending a trade alert from the coast of North Africa. With our global trading dispatch service, you get instant trade alerts and at market sweet spots, about 200 a year, and all the reasons to execute them. Live bi-weekly strategy webinars with an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world, more educational videos and webinars than you can consume in a lifetime, and access to a 16-year database on investment ideas, searchable by names and ticker symbols. And I'll even give you the name of a good surfing camp in North Africa. Warning, it's a lot harder than it looks. This is a one-stop shop. It's for individuals who understand what's happening with their retirement funds. It's for people who want to learn how to trade for a living. Get the financial education of a lifetime. It's for smaller institutions and financial advisors who can't afford an in-house research department. Get in before the next melt-up begins. This is what you get: a daily newsletter in your inbox every morning before the market opening, and you get Mad Hedge hot tips every morning, the 5 most important things that happened today and what to do about them. This is what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay because I make them millions of dollars. And I'm not going to charge you $12,000. That's what I charge my concierge clients who get my personal cell phone number so I can act as their investment 911. And I'm not going to charge $3,500. That's the full price of what I'm offering you on my website. Not for you. Creating this product cost me millions of dollars. With the best customer service in the industry running it costs millions more. 6 months for just $997. That's a 71.5% discount to the website price. I only take 25 new subscribers at a time, so it's first come, first serve. I can't wait to make you a top drawer trader. Just click on the chat box on the right. That will take you to the dedicated sales page, which is only available today. Let me make the money for you to pay for your own subscription. You make the trades, discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Just click on the chat box on the right. Buy now and you will instantly receive a trade alert with an extremely high probability of success that you can execute immediately and make some of the most serious money in your life. Don't leave good money on the table. 90% of these trade alerts make money immediately. And I'll even give you a tease. This is the chart for the trade alert that I'm about to send you as soon as you fill out the application available through that link. Who is John Thomas? Well, if you're going to spend the next 6 months with me, it's best to find out who I am. My family origins are very humble. Growing up as the oldest of 7 children on a remote farm in Southern California, I lived the all-American childhood, playing Little League Baseball and becoming an Eagle Scout. There wasn't much to do in the old days, but hunting, so I picked up a job as a paper boy for the Los Angeles Herald-Examiner. There I found the stock pages, bought IBM at 20, sold it at 30, and suddenly found a far better way to make money than delivering newspapers. By the time it was 16, I'd earned enough money to fly to Europe, By the time I was 17, I'd visited more than 50 countries and spoke 4 languages. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see much of a future in that, so the government sent me to Southeast Asia for a few years of intelligence missions, where I learned how to fly and jump out of perfectly good airplanes. As the war wound down, I became a foreign correspondent for The Economist. When they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. And there's my box of medals, what I trot out once a year today on Veterans Day. And I'm going at lunch in the West Coast, I'm going over to lead the local Veterans Day parade. As a foreign correspondent, I covered China during the Cultural Revolution, was the first reporter to visit North Korea since the Korean War, and covered the continent all the way to India. I figured out very quickly you didn't have to be that smart to make money in the stock market. So I got into the industry and joined Morgan Stanley. And there's my original Morgan Stanley ID card from 1983. After 10 years there, I started my own hedge fund. During Desert Storm, I had a brief time out as a tank battalion commander. I also flew the occasional airplane. Rapidly become the top performing hedge fund of the 1990s, eventually bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say when your life goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. I now spend my days pursuing my first love, finding winning trade alerts, but now I do it for my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And there's far more job satisfaction teaching people how to trade. If I can take a 50, let's see, hold on a sec. My cord came out. I got so excited, my power cord fell out. If I can take a $50,000 account to 500,000, that is more job satisfaction than I can get anywhere. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. When you make millions of dollars for your clients, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, free tickets to the Olympics, and dates with movie stars. So it was in that spirit that I traveled to the famed World War II fighter station at the Biggin Hill, England, to meet Mad Hedge concierge member Peter Monk. Peter was a poorly paid pilot for Ryanair when he first signed up for my global trading dispatch. After doubling his money in the first year, Peter upgraded to my concierge service. Then the money really poured in. Peter plowed his Mad Hedge trading profits into restoring a 1940 Battle of Britain veteran, a Supermarine Spitfire Mark IX, in his backyard, begging and borrowing and trading for parts all over the world. He eventually built his fleet up to 16 flying aircraft, which today are worth over $65 million. When Peter invited me to fly one, I jumped at the chance. It was a mild and blustery day when we took off and headed for the English Channel. Even though the plane was 82 years old, we managed a brisk 250 miles an hour over the countryside. The Spitfire could really outmaneuver any plane the German Air Force threw up against it. This particular plane is credited with shooting down 2 Messerschmitt 109s, and it's easy to see how. We found a clear piece of sky over the white cliffs of Dover between 2 big fluffy cumulus clouds, and I commenced a full-on aerobatic flight test. Pilots always want to see what I can do with these old planes, and this time was no different. I executed multiple loops, barrel rolls, chandelles, lazy 8s, Immelman turns, and wingovers, careful never to exceed the 1G limitation or the wings might fall off. Spitfires can dive like crazy. We dropped from 8,000 feet to 2,000 feet in seconds. Then it was back to Biggin Hill for a perfect 3-point landing and a pint of beer. Let me make millions of dollars for you as well as I have done for thousands of other followers over the last 14 years. I look forward to working with all of you. And I'm going to check my store right now and see if any of this sunk in with anybody. And I can see we got an order from Judy in Memphis, Tennessee. Thank you, Judy. And I look forward to working with you in the coming year. We got an order from Peter in Shreveport, Louisiana. Thank you, Peter. Check your inbox for that trade alert. You can execute it now that the market is open, and I look forward to working with you. Okay, let me check the store. Okay. Just click on the chat box on the right. Okay, chat. Okay, Tracy from Grand Junction, Colorado came in. Thank you very much, Tracy. I can see the orders are pouring in now, and if you're just thinking about it and sitting on the fence, better move because we're going to hit our 25 limitation pretty quickly. Okay, let's see what else we have here. Okay. Okay. Okay, Jeff, can you hear me?
I can. I've got a bunch of questions.
Fire away.
Mike says, thanks for your service. Happy Veterans Day, I'll add.
Thank you.
He wants to know, before your stock list targets are hit, do you see the gaps filling first?
You know, they should. You know, we're in a euphoric stage in the market. In a normal market, you would expect stocks to retest their recent lows or give up at least half of the surprise gains. But we're in an unusual circumstance now, and it really has become a buy on market. You know, and look at Morgan Stanley stock today. People who are waiting for the sell-off, the stock is now at higher highs. Look at Tesla. If you're waiting on the dip on Tesla, the train left the station without you. So eventually we may fill in these gaps, but it may not happen until next year.
Okay. He says, thank you. Brad wants to know if you follow Bitcoin or Ethereum.
No, we don't follow those. We did. I wrote books on Bitcoin, but after every expert in the industry failed to see a 95% drop in the price, I lost confidence in Bitcoin. And also, you know, if you look in the newspapers, theft of assets is still a major problem in the industry. And I've had a number of clients have millions of dollars in Bitcoin stolen out of their accounts. That's not going to happen at a Morgan Stanley or a Goldman Sachs. So, you know, I'm too old to lose all my money and start all over again working at Taco Bell. So I'd rather keep my assets in a safe place than anything crypto.
Gotcha. Hubert says, does the service include education?
We have tons of education. Every trade alert we send out has a link to a training video if you don't know how to execute it. And then we also have other training courses like options trading for beginners and so on.
I think you actually said more webinars and videos than you could watch in a lifetime. I think that's what you said earlier.
Well, that is what I said. You know, most people after the first couple of educational courses, which are included in the program, they understand, they get it, and they don't need to pursue the other ones that we sent out.
Timothy wants to know if the Spitfire could really take down the Focke-Wulf.
It did, but you know, the Focke-Wulf had a technology advantage in a very high-speed turbocharger But as soon as the British shot one down, they copied the part and put it into Spitfires, and they were equal after that. So any advantage that they had was temporary.
And last question, Brad wants to know if you'd recommend ETFs in Bitcoin.
Again, the only argument for it to go up is that there are more buyers than sellers. When that reverses, and you have no idea when that's going to happen, it'll go the other way. You know, it doesn't have traditional valuation benchmarks like dividends, price earnings multiples, yields, and so on. There really is nothing you can use except the design shortage of supply, which can change any time. You know, the whole industry is controlled by the miners. So, you know, when you can get something like an NVIDIA that triples in a year, I'll take that all day long over a crypto. At least then I know what I own.
All right.
You know,
very good.
My bet is that 99% of the people who own crypto don't actually know what they have. It's just a price that went up.
Sean wants to know, could a semi-experienced trader learn how to fly on their own after 6 months or 1 year?
Fly planes?
I think they mean trade on their own. but
oh, absolutely. You know, we have college students who sign up for this stuff, and they're trading in 2 weeks. You know, they know what to do, and they're making money in 2 weeks. You know, this is set up. You know, we try to make this system as idiot-proof as possible. We've thought out every possible misinterpretation of the instructions, and you literally, you know, the only prerequisite for knowledge is you know how to turn on your PC and how to get into your online trading platform, and after that, we tell you everything to do.
All right. Well, that's the end of the questions, John. You can click on the link, go to the website, get signed up. John, I really appreciate it. Thank you for Happy Veterans Day. Thank you for your service.
Well, thank you. And we only have 2 spaces left. So again, if you're hemming and hawing out there, go ahead and grab those spaces right now. And I look forward to working with you over the next 6 months.
All right. Thank you very much, John.
Thomas signing off for today. Good luck and good trading.
All right. Very cool. Do this. Okay, let's go ahead and kind of get this moving around. Make me the presenter here. I'll go ahead and show my screen as well. And let's do this too. Oh, Joan, thank you for your question about that. That has, John's gone, but that has come up in the past of what is the fee after the 6 months, and it renews at the same rate, so you get grandfathered in there. Dietrich wants to know, how can I sign up for the service? Lots of interest today. Let me go ahead and click on here. I'll send you the link right now. There you go. Okay, very good. Before we move on, I want to say thank you to our sponsor, Trade Thirsty. Trade Thirsty does a lot of events just like the one we're doing today. They have a bunch of market experts that can kind of come in. Good partner of the Traders Conference. We've been working with them for a number of years. Absolutely love them over there. If you go to tradethirsty.com/free, you can get a free ETF report on Income Generator. So go ahead and do that. It's absolutely free. Why not? Click the link. Here, let me put it in here. All right, Greg, would you let me know if you're around?
I am. It just took a second to find the mic.
It always does. It always does, especially when you're looking for it. Well, let's give away another prize.
That sounds great.
So the next prize we're going to give away is the Jake Bernstein Weekly Capital Market Report. Jake Bernstein's weekly I need to figure out. It's basically a 1-year subscription that's worth $895. Jake's been doing this weekly capital market report. I think, I could be wrong, but I think he's been doing it since the 70s. And you're going to get a year access of it for $895. if Greg makes you lucky.
Okay.
All right. So the number, I need any number from you between 1 and 75.47.
75.47. Okay.
Do you have a random number generator?
I do. And the number is 1. Are you ready?
I'm ready.
1672.
That would be Kathy V. Let me see.
Congratulations, Kathy V.
And she didn't provide a state, but she's in the USA. So if your name's Kathy, that's
I'm sure right now she's in the state of euphoria because she just won a big prize.
Yeah, that's a good one. I'm going to see if I can win that one later. Maybe you can make me random next time.
Okay.
All right. Thank you very much, Greg.
Talk to you soon.
Okay. Of course, we are Metastock. Metastock, as we mentioned earlier, has been rated #1, not just once or twice or just for a decade or two. 31 years in a row, it's been rated the best software in its price category to help you scan the markets, find trade opportunities. Our patented forecaster can help you kind of predict price action. It starts at $75 a month. We're giving a 3-for-1. So if you buy a month, you'll get the second and third month for free. That'll get you going. If you sign up now until February 11th, we're going to throw in some training. We're going to help you get started. Unlimited access to our support team. All of that stuff's included. You can do that at metastock.com/conf-promo. You can call us at 800-882-3040, and you can go to metastock.com/sales-chat. So our next presenter is a great friend of mine, Price Headley. Price Headley has been rated as a top-ranked market timer. Back when he used to do Timer Digest, when I met him, he's been inaugurated into the Traders Hall of Fame. I always say this when I'm kind of introducing Price. I kind of love his presentation style and the way that he talks, but I also like very much kind of the attitude that he brings to trading. I'm going to let him talk more about that this time instead of kind of going through the whole thing with him. But Price has been a friend of Metastock for, gosh, like a long time now. I was trying to remember. He's one of the very first projects that we kind of brought on when I started my role in business development. So it's been that long. So without further ado, let's get you started. Price, how you doing?
I'm great, Jeff. How are you?
Good. Let me make you the presenter.
All right.
Okay. Here comes.
Let's see if this works here.
It's going to work.
See my screen. Should be coming through.
I can see it. How $1 options have been hitting large returns in 2024.
Yes, sir.
All right. I can hear you. I can see your screen, and I'm going to get out of your way. I know we're a little bit late, but don't worry about it too much.
No worries at all. Well, thank you, Jeff, and good afternoon, everybody. Always a pleasure to be with you, and happy Veterans Day. Thanks to all of our veterans out there who served our country over the many years, and lots to be thankful for. It always makes me think about freedom, and of course, we're in the game of financial freedom when we're in the markets, right? Focusing on how do we basically make sure that we ensure our financial freedom. And one of the most popular ways that I've seen to do it in my 25 years here at BigTrends.com, it's actually our anniversary week. I started BigTrends.com November 15th of 1999. So many folks to thank for that 2.5 decades and counting here at Big Trends. But this $1 options, this bang for your buck, that's what we're after when we get into options in the first place usually. And then most people flame out, make mistakes, and say, oh, it must not be a good game for buyers. Maybe I should go do selling or go do something else if you get burned doing the wrong thing, not fully educating yourself. So the good news is that you're in the right place here. Obviously, Metastock with their summit here has a ton of great fellow traders. And my objective is to share with you how this is working in 2024. It's been actually working for us over a number of years through a lot of different markets, bull markets, bear markets, sideways markets, strong trend markets. It kind of doesn't matter in my view because our system is geared at picking up the names that are just starting to get this kind of a strong trend profile. So that's what I'm going to walk you through today. As I get things rolling, just a quick reminder that the information that's provided in today's presentation is based on our proprietary research. It's intended for illustrative purposes only. What we talk about here should not be considered specific advisory recommendations today. As you know, stock and options trading have large potential rewards, but they also have large potential risk. the past performance of any trading system or method is not necessarily indicative of its future results. So see our terms of use on our bigtrends.com homepage for more information here. And with that behind us, basically the beauty of this is that it's a great strategy for not just medium to larger accounts. A lot of people think the trading game is configured to favor the big boys, right? And girls. But basically the reality is, as a smaller account trader, you can still leverage this up and you can still scale it even to a relatively small number of contracts. In the case of what I'm talking about today, you could start with as little as $400 into each trade. So you don't have to commit a lot of capital at a time to let the system prove it to you. Rather than taking my word for it, I'd much rather have you see the system in action and then ultimately be able to implement it and have a great, basically low risk way to try it out without a lot of excess dollars out of your pocket. Keep the vast majority of your money working for you in your trading accounts. Okay, that's why Big Trends has been 25 years and counting, because we don't try to sort of max out somebody's costs on the front end. We try to say, look, start small, scale it, let it build. You like it, you're going to want more of it. You're going to want to tell your friends. Word of mouth is how we've grown the company over 25 years. And thanks to great partners like Jeff and all the crew at Metastock for helping us spread the word. So the small account strategy, we're looking for up to 300% profits. So when you think about, you know, the baseball analogy, right? I should have probably had a graphic up here because my art skills, I'll stick to trading generally. But if you have your baseball diamond, right? You're at home plate, you're batter up. You've got first base, second base, third base, and of course the four bagger is the home run, right? 3 and 4. My 3 would come out there, but you get the idea. What we're trying for is not just for a 1 bagger or a 2 bagger. We're looking to round the bases with the home run. The 4 bagger is 4 times your money. That's a 300% profit. But what we're going to do is we're going to take money out of a good trade gradually. Most people take their money out on their winners way too quickly and way too all at once. And then what they do on the other side is they don't take their losses quickly enough. So we're going to talk about loss control 2 today. Okay, so trade management, it's easy to get a concept across, but to really see where the rubber meets the road, trade management is what we're talking about today. Double confirmation, not 1, but 2. My pointer's going a little crazy, but basically I've got a lot that I want to share with you, so I'm going to keep it moving here. Detailed charts, a bunch of ways you can take advantage of this without a lot of extra costs, without a lot of extra risk on any one trade. Okay, so let's talk about a trade example, because a chart's worth 1,000 of my words. Here's one from back here in late September on Freeport McMillan, copper and gold. Now, it's interesting today what's happening, by the way. Gold's getting whacked while Bitcoin's racing to the moon, right? You've got a lot of different trends happening all the time. And a big part of what you have to do is not get yourself locked in to any view of the markets. Every indicator I use is adaptable, flexible, focused on a very unique pattern that I want to teach you here. So let me actually share with you what these indicators are, because you can plot them on your Metastock platform. It's Larry Williams percent range or percent R indicator here is the one that's our first one here. Percent R, percent range, percent R. Okay. The irony is this converts when it starts to stay overbought, which this one does after we get our buy signal, into what I call percent T. I kind of jokingly call it percent R becomes percent T. Instead of percent range, what do you think I'm talking about when I say percent T? Anybody have a guess? Do you think you'll make more money trading a range or more money trading something that starts with a T? I'm giving you a chance to type it in. Who's going to be first? Trading a trend, right? That's the name of Big Trends, right? So the idea is, look, when you can see something that's moving out of that range bound mode into that trend mode, that's where you're going to get your best bang for your buck as an options buyer, okay? The focus for us is really zeroing in on when is it breaking out. Now, so that was just one of the tools that are there in the red line, breaking out and staying in that overbought top 20% of readings. Overbought, by the way, folks, is not a bad thing necessarily if it's going to stay overbought. That's the key here. So the second tool, and by the way, the second tool in blue breaks out right when our percent R, now percent T phase starts to trend here. It's saying, you know what? The second one is called the CCI. It's the Commodity Channel Index, developed at the start of the 1980s by Gary Lambert. And it was developed for the futures market. That's the name, Commodity Channel Index. I use it on a lot of big name stocks. And the irony is I started to use this and trade well with it. And then I dug deeper into Donald Lambert's work, and he was doing the same thing with the futures market, saying when it breaks out and stays broken out to the upside, those are the trends you want to keep riding higher. We're going to show you some downside breakdowns where they give you opportunities to make money on the put side as well. So one of the other philosophies here is that we're going to buy options that are priced at $1 or less. Now think of what does that mean, $1 or less. Every option contract you buy controls 100 shares of stock typically. So the idea is that if you buy these options, the 47 calls expiring the third Friday of October, or the monthly options as they're called, you buy the monthly options, 47 strike price, right, to own the stock at 47. And you say, why would I do that when it was breaking out back here? It was around 45 and a half. Why would I buy something that's not worth anything theoretically? It's all time risk. Because as it goes from out of the money to at the money to in the money, you're going to see that the leverage and the growth in your option premium can be dramatic. It won't always work. But when it doesn't, we've got a way out. When it does work, though, you can make many multiples of what you invested. Now, our goal is to be sensible always in everything that we do, calling out trades for subscribers, realizing, hey, it's just like, I made my money, cut my teeth to launch big trends, my own capital, continue to trade my own capital, but basically also have a lot of subscribers relying on what I'm doing and what our team is calling out. I've got a team that backs me up, right? It's not just how I woke up this morning, right? It's all based on systems. So the double confirmation starting point here is when both of these indicators break out together. They're both getting fresh breakouts at the end of that first hour back there. That was September the 23rd. We're buying that first, start of that second bar, into that first bar, start of that second bar. We send out a trailer to our Grand Slam option subscribers and we say, look, we think this has the opportunity to be a Grand Slam multi-bagger here, and we're going to say, let's buy these options at $1 or less. So remember, every one of those contracts controls 100 shares. That means we've got to pay $100 to control 100 shares of stock, right? So it's quoted at $1, but times 100 means you're going to invest a total of $100 on each 100 shares you're controlling. As I said before, I want to see you getting at least 4 contracts if you're just trying it out. Here we're using what a typical starter account would probably do, about $1,000 a trade. So $1,000 a trade, when each of those contracts costs you $100, means you can get 10 contracts here at $1, at $100 before commissions on everything we talk about here. Everything's before commissions. Commissions are obviously dramatically down from what they used to be when I got started trading options 35 years ago. Fresh out of graduating from Duke University, I walked in, traded one lot, got a statement for a $40 commission, and said, I don't like this game. I'm gonna have to go find a cheaper broker or a way to trade more contracts to make more sense. Don't have that sweat anymore. Don't have ticket charges anymore. Anyway, it's a great time to be an options trader now. Point being, we got 10 of these, $100 a piece. My first goal is to get my money back and your money back as a fellow Grand Slam options subscriber, meaning that I want to get your risk capital back in your pocket as promptly as we can. So our first objective is we will say, put an order in to sell half your contracts at double what you paid. You paid $1, $100 a contract. You put in to sell 5 of those 10 contracts in this example for $2, right? So that gaps up here. You see when the stock, it pauses on the first day, by the way, and you see the pause does not flush us out. We get several what I call retest points along the way here near these short-term intraday lows here, including one right near the end of the first day in the trade. CCI is also showing here. These are retracement points that are key retests. It holds, gaps up. So when it gaps up the next morning, it goes, you can see from about 45 and a half. Next morning, it's at $48, right? It's already about $1 in the money, right? And so you can see it's trading at $2 at that point. There's our double. We've exited half of our contracts for twice, 2x what we paid, right? So we sell half our contracts. Guess what that does? When you get your original risk capital back in your pocket, you now have a free trade. You now have a situation in which you do not have to worry if the rest of the trade goes to zippo, zilch, nada, nothing. You are still going to come out break even at worst. Okay, now we don't want that to happen. We don't want to give up hard-earned, hard-fought profits, right? It wasn't that hard here because we're already booking our profits in less than 24 hours later the next morning. But the idea is, look, whatever happens from here, let's give it a chance to keep running. What I love about these indicators is that you see how over this next couple of days after we sold our first half of the double, look at how you're in basically a dead flat flag. Chop City for the next 2 trading days after we sold half of the double. A lot of people will lose patience, will worry on that end of day 2 going, uh-oh, it's starting to roll over into that second day after the gap up. Does that mean it's going to come back down? Question mark. And we're saying, look at the indicators. Look at how the indicators are staying in that strong trend mode, staying in their overbought thresholds. I call this phase orbit, right? If you get a rocket, a spaceship, you go up into orbit, you see those boosters peel off, and then once you got the strong launch power, then you can just keep coasting in orbit, right? Until it comes crashing back down out of orbit. So we're still holding the second half of our position. Our second target is for a triple at 200% gain. You say, hold on, then why'd you sell at 335%? It gapped after those couple of days of consolidation of the pause that refreshed. It gapped up the following morning up here to like 51.5, just over 51. Well, obviously we paid $1. Think about that. You paid $1. You've got a right to own the stock at $47. It's opening at 51. That's got to be worth at least $4 intrinsically, right? $1 turned into 4. There's your 300% gain right there. We're getting a little bit more than that because there's still a little bit of time value priced in, even as it goes nicely in the money here. And then by the time we're getting our final exit out, which would have been a 300% gain, would have been our final target, we get filled right off the open at 335%, send an immediate alert out to get out of the rest at 300% or better. We get 388% on our final piece. Okay. So $1,000 invested here generated a $2,281 total gross profit before commissions. Obviously, you had 10 contracts in, 10 contracts out. The most you would pay in commissions is $20 total in and out combined. And of course, less as you get more active. But the power of this is a stock that was trading in the mid 40s. And you say, okay, it's moved up to the low 50s, moved up what, maybe 6 points or, certainly less than 15%. And you're making 388% on your final piece. That's the power of making these moves happen relatively quickly in a week or less in a lot of cases without having a lot of time erosion, without having a lot of worry about the trade, frankly. Anyway, I could go on and on about just any one chart, but let's keep it going. Talk more about the indicators, the top 2 indicators here, right? If it's like 2 heads are better than one, I find that these 2 indicators are better than either one on its own because you're trying to reduce fake outs and show me that both of them are breaking out on that exact same hourly close, right? We're looking at a 60-minute hourly chart here. So, and I'm always curious to see like kind of where people are at. Maybe you can give me some feedback. Where's your preferred time frame? Or would you say you're a swing trader of about a week or so? Type in swing. You day trading in and out same day? Type in day. You position trading out several weeks or more? Type in a P or position. Love to know kind of where people are at. This is really geared for the swing trading crowd, but the bottom line is that you could tweak this as you learn the method, which I do a lot of training every week on how you can use this method, not just for the hourly charts, but of course for a variety of other time frames as well. So I'm kind of curious just where people are at. Give me some feedback. I love to hear what kind of trader you are. And you could trade the stocks this way. You could trade ETFs this way. You could trade leveraged ETFs this way. There's a lot of different people. Thanks, Mike, for the feedback. As a swing trader, most of our crowd typically would be more swing trade oriented. So and the idea is that this is ideal for swing trading, but of course getting the extra leverage using the option rather than the stock, right? So the beauty of this is that you're getting both of these filters saying we're going into that takeoff mode here. We need to be on board the rocket as it takes off. And you're never going to be catching the exact low. We don't expect to catch the exact high at the exit either. Sometimes we do, but I don't care if we do or not. I'm just trying to catch sort of a sweet spot, if you will, in the middle of that strong trend. And Ricky, good to see you, a fellow day trader. Ricky likes to day trade. You could use this for day trading. All you would do is you would just change the setting on your Metastock platform from a 60-minute chart down to a shorter time frame. And we can help with that too. As you become a subscriber, I can give some input about what's the best time frame for each type of trader or active investor. Okay, so thanks for the feedback. Love it. And you could use, CJ says, I only do put sells. You could use this to sell puts too, because point being that if I think the stock's going up, you don't want to buy the call, you want to sell the put. Hey, the key is you've got a directional advantage strong blast to the upside, you could buy your put back real cheaply, fairly quickly, and have taken most of the premium out of that trade too. So happy to help. Great to know your Bozzy swing to week. You could use this for a longer time frame. The multi-week trader, stretch out your time frame from a 60 minute to a bit longer. We can guide you on different time frames for different types of trading windows. Okay, so I can't give away all the access here, right? But it's not a black box system. When you get signed up as a subscriber, which I've got a great try it out special here in a little bit, but point being that then you'll get all access to that. And all I ask is that you only use it for your benefit and your family's benefit. You're not to share it with any outsiders, no web site or trading forum posts anywhere about it. Just basically use it for your benefit. That'll keep it working the best. Okay, we don't want to dilute this. So let's look at these two indicators. CCI, remember that's commodity channel index. And then Larry Williams percent R, percent range indicator, used the big trends way to turn it into a strong trend trade, percent T, I jokingly call it, but that's kind of how it's worked. Here's one on MasterCard. And this is a really interesting one because it got off to a good start, then it paused on us. And this is where our stop rules really saved us and allowed us to stay with the trade. So I want to talk about stops for a second as we look at the breakout. You can see the breakout happening. We're getting both of these breaking out together here at the close of this prior start of this bar here back here in late August. Okay, so it's starting to break out here. And you see, okay, we're getting that breakout. Notice MasterCard's not a cheap stock, right? It's trading the low 470s. And notice, guess what? To get an option on MasterCard under $1 or under 100 shares under $100 to control each 100 shares, the idea is that we're going to have to go out of the money. In this case, we're going to have to go about 23 points out of the money. Say, whoa, that sounds so far out of the money. Make it relative to the stock price, right? 23 points on a $470 stock is only about a 5% out of the money amount. That's actually relatively little compared to sometimes the tech stocks where we might be 20% out of the money, can still get great leverage in short windows at times. So again, don't sweat that. Notice we only paid $82 to control each 100 shares of stock that would have cost you over 47 grand, right? So obviously you're getting massive leverage potential here. Obviously, every trade that you buy has a potential that you could lose what you put into it. Now, we don't want that to happen, but the point is that that's why I always tell people, no matter how well the system's doing, never get too high on it. Never load up on the next trade. Never be inconsistent on your capital allocation. Whether we've had a winner or loser on our last trade, just try to be consistent and say, I'm going to get about the same amount of dollars applied to each new trade. Remember, if you're putting in $1,000 a trade, you put in at $82 per contract, that'll get you 12 contracts in for like $984, okay? Pre-commission. And the point being that, okay, I got 12 contracts at $82 a piece. Well, we start to make some money. Remember, our first goal on the contracts is sell half of those, 6 of those 12 at a double, right? Turn it from 82 cents into $1.64. And as it rallies a little bit, we're up in the neighborhood of probably, as it goes up about 4 points in our favor, we're probably up around $1.10 to $1.20. We might be up 50% of those options in those first few hours after we get in. But unfortunately, the next day, whether it's market related or otherwise, we get a little sell down. In fact, we get a little sell down just underneath intraday where we got in. Guess what? We're going to be down at that point intraday compared to where we got in the day before. If we're below where we got in the day before, because there's always a little bit of time risk and there's a little bit of price risk against us right now in this trade example. And you say, oh boy, now it's going the wrong direction. I better bail, right? Well, our rule is at the last hour in this 3 to 3:30 window, 3:30ish, where are we trading? We're actually trading right back where we got in. It's like if it was below that 472 area, you can see that we would be below where we got in that following day in the last hour. That's a rule for us in the final hour of a future trading day after the day we got in. If we're below it, we're out. Okay, so we managed to grind back to not being below it, being right at it. That means give it another day. And then you see what happens. You get the vertical gap up and then the subsequent continuation to the upside, right? So at the end of that second hour, stock's trading just about maybe 1.5% higher. We're making our first target at a double. And you say, well, how can you make 100% on just about a 1.5% move in the stock, right? About 6 or 7 point move in the stock. Well, because you're not losing that much time, right? You got in on the 27th of August, you're out at 2 days later, the morning of the 29th of August. It's a third Friday of September expiration. You still have about 3 weeks or 3.5 weeks to go before these options are going to expire. So guess what? As it pops another few points up to about 482, our second target's hit at 200%. So once we sold half at a double, now we try to sell half our remaining position, which is, remember, we had 12 contracts. We sold half at a double, 100% gain. We got 6 contracts left. You sell half of your remaining half. 3 of the final 6 are sold at 200%. And then the final target, the remaining 3 contracts, is a 300% or 4-bagger, which you can see as the stock spikes interbar there that following morning, August 30th, we're up to about 485. Notice, we're at 485. Look at our strike price, 495. We're still 10 points out of the money, and yet these options have gone from 82 cents a piece to 4 times that, just under $3.70. We got out $3.68 on average. Well, the point is, that means you don't have to see it get to the strike price to potentially make doubles, triples, or even quadruples in a number of cases. A lot of people think, oh no, I've got to get way past 495. No, not if you get the speed of movement. This is where speed of trend is very important. And CJ says, in an IRA, could you do this? Yes, you can do this in an IRA with certain brokers. Check with your broker if they allow options purchases in an IRA. A lot of them do these days. Not everyone, but a lot of them do. For 401ks and whatnot, check with your broker. Okay, so here's a trade on Apple that gapped past its final target. Remember when Apple announced that thing called Apple Intelligence, their version of how to get on the AI wave back in June? They said, okay, yeah, we're coming out with our own version of AI, not calling it artificial intelligence, we're calling it Apple Intelligence. The new phones, the iPhone 16, they just came out with the update that includes AI features, Apple Intelligence features. Well, look what happened here. We didn't get in right away. So we weren't initially buying right off the open, right? The open of that hourly chart is back here down to like 194. We bought at the close of that bar when we got our signal, the hourly close, it was already up to like 201.5, just under 202. You say, oh man, you missed it. It went from 194 to almost 202. You missed 8 points. Guess what? If you want to get on a rocket ship, and obviously in the real world, you couldn't get on the rocket ship once it had left Earth, right? You would be left watching it from the outside. But with the beauty of stocks is that we can see this rocket has indeed launched successfully based on our indicator. It's saying that both of these are showing enough power, enough thrust that yes, we want to be on that rocket ship now at 201 to 202, and we're willing to buy the out of the money 220 strike calls on Apple, nearly 10% out of the money. Why would we do that? Well, because our data says that we've got a strong edge. We look at not just the patterns here, we look at the history. Every time we've gotten these signals on Apple, how have they done? And Apple had a very positive, what we call profit factor, looking back over a decade or more. Notice we only paid 65 cents. I mean, 65 bucks on each 100 shares to control 100 shares of stock that would have cost us over 20 grand if we bought the stock, 100 shares of stock outright. Controlling 20 grand of stock at a pop for each contract that costs 65 bucks at a time. So of course, if you're putting $1,000 in, that's going to allow you to get 15 contracts in for a total of $975 invested, 15 contracts. What do? We put our first order in to sell the first half of our position. Now remember, we've got an odd number of contracts, 15 contracts. Our rule is we'll sell one more than the midpoint of 7.5. You can't do a half contract. So we'll sell 8 contracts at the double, right? Just go ahead and make sure we get the risk capital back. 8 contracts, the rule was to sell it at double of 65 cents. That means $1.30 is our first target. That first target is achieved the very next hour as the stock pops about 1% from 202-ish to 204. So a 1% gain in the stock, good for a 100% gain in the options, a theoretical 100-to-1 leverage ratio, right? Well, you can see now we've got a free trade. So guess what happens? It's kind of had a huge move, so it's not surprisingly taking a little pause. It's refreshing over the rest of that trading day, and then look what happens the next day. It relaunches. It's in orbit, right? We're staying in that very nicely overbought zone. You see how beautiful that percent R and that CCI lines, they stay overbought in their top thresholds there. That's what you want to see on great uptrends. And so it launches again Second target achieved up near 210, 200% gain. And then the following morning, when it goes ballistic and pops up to the almost 220 area, about 217, we're making more than 300%, right? Because what's happening, why is this thing going so ballistic? As it gets near the strike price, your most time value that you will ever see in an option is sort of the time value on an option that's near or at the money. So at the 220 level, which the stock did get to 220 within an hour of that gap up, basically you're seeing a massive inflation in the time value, and we end up selling that last final piece at a 553% gain. Okay, it was only on our final piece of the trade, right? We've already taken half out of the double, half our remaining piece out at triple, so we got our final contracts out 553%. The point being that more than $2,000 in profit, $2,120 in gross profit for just about right at 48 hours in the trade, or less actually, because this thing was moving so fast. It was actually less, because it's amazing how quick that moved that following day. Not all trades are going to get there though. Not all trades will continue on, but we don't have to have that happen, right? Here's an example of Carvana, CVNA, you know, the online used car leader. You can see here, it's been a volatile stock, right? So the options are not cheap. So we got our breakout signal in Carvana back here. You can see both of them signaling together in that first hour's close, telling us hop in here, stock trading about 147, okay? Look what we had to buy, a 190 strike call. We're like, are you nuts buying 45 points out of the money? Roughly 43 points out of the money? That's in percentage terms, that's what, almost 23% out of the money? Well, you can see over the next just over 24 hours into the middle of that next day, it's popped from the 147 area up to about 156, so about 9 points. Our first half is sold at a double, right? We paid 90 cents. That means you get 90 bucks a contract, you get 11 contracts. You sell 6 of those 11 at $180, 180 bucks a contract. You've got your risk capital back with a little bit extra on that odd, slightly more than half of your contracts sold. But look what happened. Then we get stuck in Flatsville, right? And you can't predict when this is going to happen. But what we say is that, look, if we go back to break even after we've doubled, we're going to usually blow out the second half of break even. This one gets a little bit worse fill than that, down 11% on the remaining half position. So we only made about 44% on the trade, and it was about 490 bucks in total profit that we registered on the trade for, you can see, less than a week's work. So the point is that sometimes they're right out of a week's work. Sometimes they'll fire, sometimes they won't. This is why you sell half at the double, because if they do come back down, you're really glad you took that first half off and got the free trade on. And if they keep going, you're like, hey, at least I've got half my position still on, right? So I'm a big believer that trading should not be a black and white game, should not be an all in or all or nothing game. It should be a many shades of gray game. This is why selling half at a double has been one of my great longevity secrets over 35 years of options trading, frankly. So you can see, here's one that went even further on a gap. You can see that a little bit further, actually. You can see we had Best Buy. We got in a little bit of a slow phase after we got our breakout, right? Both of them breaking out together here. And so you can see we're getting into Best Buy as it's in the neighborhood of about 79.5. Look what happens. First day, it kind of pauses on us. But at the end of that second day here, you can see it was back up to where we needed to be above our entry. And the first day it was right at our entry, okay? So the point is, though, we wait for the end of that next full day to put our time stop into effect. By the way, we're not using any price stop here as we get a trade started. I know that's very counterintuitive to a lot of traders, but when you're trading out of the money options, you don't want to get whipsawed. They take you out of 50% loss, and then you're left on the sidelines while this thing reverses and turns into a big winner, right? So you just got to trade with risk capital that you say, okay, I can afford to take that risk. If you're trading $1,000 worth, I would get you like 13 contracts in this example. You can see that in this case, you look at this and say, okay, you bought the 84 calls, the stock was trading at 79.5, and then it gaps open to 83 bucks right here. So we've been in the trade, we saw half of it at 106%, and you see as it starts to settle back down, it got up even a little bit beyond that, and we have some trailing stop rules, and the final piece was closed at 61%. So that whole trade averaged about 83%. on the whole position there. 83 to 84%. 80, I'll take it back. 84%. That's correct. Add those two halves up, divide by 2. So you make 84% for a matter of just a few days of work. Okay. So the beauty of this is that you can see we're starting to lose our kind of retest levels here, starting to undercut these key points where we'd like to see those things hold up. And so we just said, look, let's not hang around. Made $836 on that $975 invested with an 80+% gain. So again, they don't all turn into home runs. This one was Target, and you can see Target was a trade where both of them signaled, and then you see we got into kind of some back and forth chop, and basically said, okay, look, we felt it was the right thing to do to go ahead and take advantage of what we thought was a good setup. And this one did happen to be in front of earnings. I don't usually trade earnings, but I like the risk reward here a lot, and said, look, let's go ahead and we bought the 180 strike calls back when the stock was in the mid 150s pre-earnings, right? Usually what I'm trying to do is take that 75 cents, turn it into $1.50 before earnings, and then try to free roll on the rest into earnings, right? So, but in this case, we're still waiting. Then it does gap up on the earnings, gets up to about 170 after opening near 166, trades to 170. We're still 10 points out of the money on the 180 calls we bought, and yet we've turned those into 101 and 200%. But then as it trailed down that afternoon, we got our trailing stop hit on the final piece up 105%. Still generated over $1,200 in gross profit on that trade. But not every trade is going to work. Here's one that did not fire. Fluor Corp, the construction giant. We thought Fluor had a lot of opportunity. A lot of the news was that, hey, the government's behind putting a lot more money into our infrastructure. About time, I say. But basically, you can see Fluor looked like it was checking the boxes for fresh breakouts here. This was a pretty low dollar one comparatively. The stock trading the 34.25 area. We bought the 37.5 calls, about 10% out of the money. Thought it was going to go. You can see that we're starting to lose our CCI support here a little bit. I didn't love that. And then our time stop gets triggered that next afternoon. And it wasn't by much, right? It's just underneath where we got in, but we're like, a rule's a rule. Let's take the 16, almost 17%, 16 2/3, 17% loss. And as you see, it would have actually gotten back going in our favor. The structure of the chart was still pretty good. So you get the idea here. The idea is, if it's working, let it keep running. If it's not, move on. So, so again, they're not all going to fire, and some of them can be a worse loss than that, right? 30% losses are not uncommon. We've even had some that go on to a 50% loss if they're too volatile on us, right? But we're trying to go ahead and clean them up, move them out if they don't fire, versus the ones that can make you many multiples of that. Like I showed you with Apple going up 500+% on that final piece. Here's one that got all three of its targets on AMD, Advanced Micro. And this is the classic, exactly the rocket ship that we all want to be on as options buyers, right? As really truly leveraging the reason you get into options in the first place is typically to catch this kind of leverage and potential, right? Because both of them break out, first hour's close, right? It's a vertical gap up with a strong green candle, right? A lot of people that are waiting for a pullback for a retracement, that's the exact wrong thing to do on these. You need to be on the rocket ship. You don't want it to come crashing back down to earth, right? You don't want to be on those. You want to be on the ride to the upside. Let it keep riding. So get in right off of that. Notice stocks trading just over 185, maybe 187. We're buying all the way up to the 260 strike calls. In the old days, I would have never had the cojones, the guts, to pull the trigger on these, because I thought that's just taking way too much time risk. It's way too far out of the money. But what I've seen in just countless, I mean, I can't even count literally examples of the hundreds upon hundreds upon hundreds of trades that we've done in recent years in this type of a setup here. We're picky about it, but we've seen this replay again and again where, guess what? The good ones making higher lows and higher highs. You know what that's called. That's the uptrend. That's why I call Larry's percent R, why I call it percent T, when it goes in this mode, because look at how we're just staying in that super overbought. How can we stay overbought that long? Because it's no longer the top of the range, right? There is no clear top of the range. The range keeps expanding to the upside, right? We keep getting a higher and higher point of what that true top of that range is on every successive new high. And of course, we're losing lower lows from the past and picking up higher lows. So that's keeping that percent R reading staying in that very high end of the range. Same thing's happening with CCI. Actually, CCI shows you a couple of retests along the way here where you see it's still holding up. But we sold the first half of the double, made 110% actually. Next piece at the 200, and then that same bar, 300% achieved. The stock's highest it got was about 210 from a entry point back about 187, right? So it's only gone up like 27 points. I mean, not only, that's a lot of points, right? But it's still no more than 15% on the stock, and we're making 300% for an effective 20-to-1 leverage ratio. And that's on a very out of the money option, right? $1,728 in gross profit on just about what you can see, 2.5 days, no more than 3 days in the trade. So showing you a lot of individual examples. You can say, oh, sure, you could cherry pick all you want on certain ones, but what if we stack all of our trades together, all the winners, all the losers, everything in between, add up all of those trades that we've called out on our Grand Sum options portfolio? It takes us all the way back to the beginning of 2017. This portfolio has been out there a long time. If you've been around the trading landscape, you've probably heard me talk about Grand Sum options at some point. And what I always remind people is that people who wait, who say, maybe I'll try it later, they just end up leaving opportunity on the table based on what we've been able to do. Of course, we can't guarantee the future. Past performance never guarantees future results. But what I say you're also leaving on the table is our ability to help you consistently execute. I think one of the biggest problems that a lot of traders have is that they don't pull the trigger with any consistency. They either go too hot and heavy, or then they just say, oh, that one didn't work, I'm backing off, I'm back to the sidelines, I'm going to wait these next few trades out and see if the system gets going again. You're much better off to take a small, steady amount of capital and apply it consistently to every new signal. $5,000 account grew to $39,801. So the gross profit before commissions, before subscription investment, $34,801. Just remind you that that's assuming you invest $1,000 a trade with no compounding. We are not compounding these results. We're starting a $5,000 account at $1,000 a trade. It'd be at 39,000-ish. And you say, okay, well, we're now going to still keep using $1,000 a trade. So what started as 20% allocation per trade is now would be less than 3% allocation per trade, right? So the point of it is that we're trying to show it to you in a way that's not maxing it out, right? It's not trying to get the ultimate compounding leverage, and still show you how powerful it has been for our Grand Sum options traders over the years. So what have you done for me more lately? Since the beginning of last year, you can see that the portfolio grew 145% gross. A $5,000 account grew to $12,295. Again, I'm not guaranteeing anything for the future, except that we're going to allocate and execute consistently on every new signal we get. We put it through its paces. We make sure that history is on our side. And we know that we're going to have some winners and we're going to have some losers. And the key is that the winners are a lot bigger on average than the losers over time, historically. So as a subscriber, you're going to get real-time trade alert emails when this strategy has a fresh signal. For our Grand Sum options system, the trades, the new entries only come out right after that first hour's close at 10:30. So between 10:31 and 10:40-ish, we're getting emails out saying, okay, this is the one we want to get into, or the ones we want to get into. So, and we're not going to do too many at a time, right? We're going to make sure that you're never holding more than about 4 open positions at once, certainly no more than 5. But usually it's like 2 or 3 open positions at a time at most. But the idea is that we want to take the best and the brightest. The quality always comes before quantity in this system. You can also get them not just through real-time email, you can get them as a mobile phone update too. So how can I get you started and take advantage of this at a really attractive entry point, and then basically have the system prove it to you? I really, truly want the system to prove it to you and not just have you take my word for it. Yes, I've been trading for 35 years. It's our 25th anniversary this week since I launched Big Trends November 15th of 99. So again, lots of folks to thank for that over all the years of support of Big Trends. But if you're new to us, look, this is a great way to get started and not have a whole lot of extra outlay of costs, right? So you can try it out and let you see the system in real-time action. 3 months of trade alerts. And again, I'm not going to say I've got a trade setting for you right at this moment, because our system says wait until the first hour's close every trading day. You're not going to screen watch all day. You're not going to worry you missed something. You're going to know that it only comes out at that first hour if we have a trade, right? We're not going to trade every single day. We're only going to trade the best setups, probably in the neighborhood of 8, maybe 10 trades a month is our sweet spot. So you see here, 3 months of alerts, right, which would be about 13 weeks or about maybe 25 trades in 3 months, give or take. maybe a little more, but 25 trades, you'll see the value here is exceptional. But I'm not just giving you trades. I'm going to give you a lot of education. My settings and rules, so you'll know the parameters. You can plug it in on your end because those indicators are fairly common, but the settings that we use are not common. They're very unconventional wisdom. You can plug in the right settings for this methodology and see them working together. Weekly video training, dedicated email to me and my research team if you've got any questions about any trade we call out. If you bought it off my website, it'd be $297 every 30 days. So for 90 days access, you're getting it $891 value for a heck of a lot less. Okay, look at this. We're going to scratch that $891. I'm going to take it down because Jeff and the Metastock team have been so good to me over, like Jeff said, I think about almost the same amount of time as Big Trends has been around. It feels like he helped me get off the ground pretty quickly, certainly more than 20 years ago. I remember meeting with Jeff and setting up how we wanted the Big Trends tools to work in Metastock. It's called the Big Trends Toolkit, which he'll come on and tell you about here in a few minutes. But after I answer some questions, if we have any. But first things first, let's talk about this offer. We're celebrating because basically Meta was a recent winner for us as well. But basically, you see that when you go to this page here, it's members.bigtrends.com/meta. Note it's a member site page, not a www page. It's easy to get that confused, but bottom line is that we're all about kind of having you think already like a member of the Grand Slam Options service. And thank you, Jeff, for posting that. Members.bigtrends.com/meta. In that chat, you'll see it there. You can paste it over into one of your browser windows. What you should see when you get that, by the way, is it's really simple. Okay, check this out. And then I'll answer any questions here in just a couple minutes, but let me just show you what you do. This is, like I said, 25th full year in business this week. Again, just in a very celebratory mood and saying, you know what, this is a secure order page. We care a lot about your security, your information and being safe and secure. So it's a HTTPS secure page. You can put your payment information in on this page, or if you prefer, which I do a lot of my online transactions, just agree to the terms and conditions, which are hyperlinked there, and show you how we've done business for 25 years and counting. You can click the PayPal link there in that orange bottom right section there. You can take advantage of that. Look what we've also, my team also snuck this in here too. If you want to get a multi-hour training session from me on how this strategy works in a whole lot more depth, I can only go through so much in an hour. We've got a more than 3-hour training session here. We call it the Gamma Options Bootcamp. It's the Gamma effect of how you get extra leverage out of these options, going from out of the money to near the money, that you really get a lot of bang for your buck. You'll get lifetime access to that bootcamp training for just an extra $77. All you do there is click the add to order button, and you can add that in, or if you don't want to, just hit the remove button if you put it in there. And again, 3 months, 90 days worth of service for less than $2 a day, just $177 when you go to that page, members.bigtrends.com/meta. Note, that's our lowest we can take it. No other promo code discounts apply. This would normally be an $891 value, and we're taking $700+ off of it to take it down to just $177. If you got any questions, you can call us at our 1-800-BIG-TRENDS line there. You can see that's our toll-free number. 800-BIG-TRENDS is how you can remember it. 800-244-8736. Or you can reach my customer service team via clientcare@bigtrends.com. So that is an exceptional value. Think about that. You're getting 25 trades have the potential to not just double, but potentially even triple or quadruple. You're also getting the built-in time stop risk management where we'll remind you on each and every trade. We will never leave you hanging. And you get to try it out yourself for just $177 to let us prove it to you, right? One of those trades we just showed you can make you many multiples of that, right? We mentioned a recent one on a little stock like FCX, Freeport McMillan, copper and gold. And no matter just a few trading sessions, generated over $2,200 in profits on a maximum of $1,000 invested. So it's pretty insane. Again, you see the recent less than 2 years return of over $7,000 in gross profit. Of course, we talked about our longer term track record as well. So it's all right there for you at that phenomenal value, just $177. I don't want to charge you tons and then have you be disappointed. I want you to pay very little comparatively and have you be incredibly positively surprised. That's how we've grown Big Trends over these 25 years and counting. And also thanks to great friends like Jeff and our friends at Metastock. Thank you, Mike, for the kind words, and glad you still have my trading book there from years ago. Appreciate your support as well, Mike P. Thank you so much. I'm going to hand it back over to Jeff to see if there's other questions or anything else that he has, or also buy him a few minutes to tell you about the toolkit as well. But don't forget that link. Make a note of it now. It's not going to be out there very long. It's members.bigtrends.com/meta, META, celebrating one of our other big winners there. So thank you, Jeff, for having me. It's always a pleasure. I'll hand it back over to you.
Yeah. Great. I want to read that comment out. Thanks and big congrats on your anniversary. I still have your Big Trends in Trading hardcover book. Me too. I have that copy as well. So, Mike, thanks for the kind words. Price, thank you. I do appreciate that. I don't see a lot more questions that you haven't already answered.
Great.
So I'm going to go ahead and take over. I want to talk a little bit about your toolkit because I think everybody should have that also.
Absolutely agree. Thank you, Jeff.
All right. Thank you. Let me go ahead and do this. Yes. You're going to make me the presenter. All right. And I'll share my screen and my camera. Should be all good. All right. So we do have one of the, as I said, one of the first projects I developed, and this was definitely decades ago, was the Price Headley Big Trend Toolkit. And just remember kind of getting this through, kind of putting it together, a very first project. It's gone exceptionally well. We are old, Mike. Let's see. In fact, we were on version 3 of the Big Trend Toolkit, a product I'm very, very proud of. Kind of helped put together all the manuals, the commentary, the expert advisor, and it sold extremely well. And that's why we've done 3 different versions. And it is, if you're an owner of the book, you know, kind of that Price talks a lot about different methodologies that you can use. One of the ones he likes to talk about is finding stocks that are kind of exploding and going up and are above their 200-day moving average or their 400, or stocks that are accelerating or moving efficiently. And so these are all different methodologies that he includes in Big Trend Toolkit 3. In addition to that, of course, they come with 17 different methodologies, including one that scores them all up. It's called the Big Trend Toolkit Score, where it scores Price's favorite indicators and gives you entries and exits around that. So really, really cool stuff. So 17 expert advisors, 17 scans. You can find one that you like and just run it as explorations. They do include system tests, so you can test them, see what works well. Templates, 18 custom indicators. If you've used in Metastock and you haven't added this toolkit to your library of tools, you should. There's a reason that Price this is done so well and that Price does so well in the market. So normally this is a $6.99 add-on. Here at the conference, we're going to do $4.99 as a webinar special. You can do this a couple of ways. You can give us a call at 800-882-3040. You can go to metastock.com/saleschat, or you can go to metastock.com/bigtrendsa. Very, very cool add-on. One of the things that I like when we do create add-ons, I'll basically give some advice in terms of what people should look at. And with Metastock, there's an expert advisor. I don't know if we've talked much about it today, but I'm ready to talk about it right now. There's an expert advisor that'll help you kind of understand what's going on. And when we're kind of creating products with partners, one of the things I do is I'll send out Price's commentary because I think he did such a good job with it. So this is NVIDIA. You can kind of see on the right-hand side here. I have to think of what my right was from my left. But you can see on the right-hand side here, kind of where the signals would have come in on this chart. Here you can kind of see exactly what's going on. So this breaks down all of the indicators for him. If you kind of want a dashboard view, you can see that the Williams percent R is currently bullish. 2 days ago it was bullish. Right now, the CCI, the commodity channel index, is neutral. It breaks all of that down for you. And then if the buy conditions are met, it gives you buy signals and exit signals. And of course, you can scan for them. We've talked a lot about scanning and how easy that is to accomplish. But what I really like about this is kind of let me actually go move this commentary over to a buy day. So you can see there's a setup here. The BTS indicators crossed above the 80, meaning most of these are bullish. If you're looking to trade this setup, you should look for a trigger above the current high, which is 106.32, to confirm that trend. I'm just going to go one bar into the future, and it's going to say, okay, has recently crossed the 80 and the price is broken above the point that we told you to buy it at. If you're looking to take advantage of this trade, you should look to buy the stock, or you could buy the call option 2 months before expiration. If you're aggressive, you'll typically look at call options that are one strike out of the money or near the money that cost $200 or less. When conservative traders typically will consider the call option with more intrinsic call value, usually one strike in the money. You should look to exit this position when this happens. I just love the specificity. He goes into kind of details in terms of exactly how, if you're interested into taking this trade, you could take it, what expiration to look at, what strikes to look at. All that kind of stuff is kind of really well spelled out for you. So, Michael, I'm not sure on the question on that for the automatic renewal. And unfortunately, I don't have Price here to ask. But if you reach out to them, I'm sure they'll actually kind of answer that question for you. The question is if the subscription, does it automatically renew? I assume that it does, because that's usually how subscriptions work. They might be able to turn that off for you. Just reach out to them. They should be able to help you. 1-800-BIG-TRENDS for that. 1-800-BIG-TREND. Okay. All right, so that's kind of how everything works. Very, very well put together. There's a matching expert advisor and commentary for everything. We do back it with a 30-day money-back guarantee. It's $4.99 here at the event instead of the normal $6.99. Give us a call. We can help you get it added. 800-882-3040. Metastock.com/sales-chat or metastock.com/bigtrendsA. So, oops, I did not mean to click on the link. All right, very good. Do you want to talk a little bit about one of the sponsors we have, a partner of ours, the Traders Forum, tradersforum.com. You can go up there. You can chat with other market traders about market conditions. There's a ton of free education up there. Learn about the markets. It's a community of traders designed to help traders. Thetradersforum.com. Go ahead and join it. It definitely doesn't automatically renew. So there you go. And let's see how we did on time. Just a little bit late. That's okay. Greg, we're not going to give we're not going to miss an opportunity to give away a prize.
Well, I applaud that decision.
Okay. So the package that we're going to give away, I'm just going to go quick though, because we are running a little bit, is Daniel Sinnig. He spoke earlier today. He started us off. It's his indicator welcome package. It includes the divergence cloud indicator, access to the weekly trading sessions, the trend radar indicator. Pretty cool toolkit that's worth about $497. Greg, you know kind of how this works. What I need you to do is come up with a number between $1 and $7,547.
I've got that.
Okay.
Dollars, really.
Ready? It's only going to get better as we go along this week.
The number is 6201, 6201.
Okay. And that is Richard B. in the USA. Let's see, with a Gmail address. So, that probably doesn't narrow it down too much, but I do appreciate that. Thank you for the assist, Greg.
Mm-hmm.
Okay. And I'll just make a note of that. Otherwise, if I forget to kind of write down who it is, I end up going back in the videos and all that kind of stuff. We are, of course, Metastock. Metastock's been rated the #1 software in its price category for 3 decades plus now. Our trial, the extended offer that we're doing, is if you buy a month, we'll give you the 2nd and 3rd month for free. Absolutely great toolbox for helping you find better trades, the right strategy, all that kind of good stuff. I was just using it to play some trades. $75 a month, basically we'll get $75 for the next 3 months, basically with our 3-1-for-1 offer. That'll get you going until February. You'll get lots of opportunities to give it a go. Talk to our support team. They'll help you with any questions you have. They'll actually give you a tour of the software. That's all included. No commitment. It is a subscription. It will continue to renew, but you can cancel at any time. Metastock.com/conf promo for any of the offers we've got today. Metastock.com/sales chat, or give us a call at 800-882-3040. With that being said, our next guest is Dan Passarelli. I just drew a blank. Dan's great. I remember reading Dan at a trade show a number of years ago, back when they were really, really big. And he's always been somebody that comes off as super smart and very, very gifted when it comes to market trading and talking about. He's got a very specific strategy he's going to talk about today that's called the red green knockout system, that basically looks for stocks that are in momentums, pause a little bit, and then a resumption of that momentum. It's a really, really cool strategy. He does a really good job of walking people through it. Dan, let's go ahead and get you started. How you doing today?
Hey, I am doing great, man. How are you?
I'm awesome. I love the. I always think you have the best background of all of us. We've just got this kind of gray color back here. You've got like this bright Xbox like green going on. Let me make you the presenter here. All right. I'll let you know when we can see everything. All right, we can see everything. I'm gonna get out of the way. It's your turn. Go.
All right. Hi, folks. I am Dan Passarelli. How you feeling today? I am really honored to be sharing this system with you today. I think you're gonna love it. I know I do. Before we get started, I need to point out options are not for everyone. Read characteristics and risks of standardized options before trading. Get a copy of that by emailing investorservices@theocc.com. Don't trade with money you're not prepared to lose. So momentum trades are a totally classic trade. Thousands and thousands of traders have collectively made billions of dollars trading momentum trades over the years. And the beauty of it is, the concept behind it is really easy. All you have to do is identify a setup, see when the trade triggers and get a confirmation, and then put it on and set a target. At the end of this presentation, you'll be able to easily identify this specific momentum system. You know, I was listening to a podcast not too long ago. They're talking about the difference between mindset and skill set. Both are important. Henry Ford once said, whether you think you can or you think you can't, you're right. And there's kind of something to that, isn't there? So I thought, how can I make one of those things, mindset or skill set, really simple? How can I do a lot of the work for our traders so that you don't have to focus on both of these things at the same time? So I put my time into the only one of those that I can pretty much do for you, which is the skill set. Now I put this into a system that if you follow along, you don't really need much skill at all. The skill part is built into the system. So all you have to do to move forward in reaching your goals, literally, is to think you can. This is my promise to you. I'm going to share with you how to easily spot these high profit momentum trade opportunities using stocks, ETFs, options, futures, Forex, so that your trading is completely simplified using this tested trading system that we've created for our traders that hundreds of our students have used to go from that demoralized feeling we've all felt at some time to that feeling of satisfaction and self-assurance that we all know is possible. And at the end of this presentation, I'll share how you can take the next step so you can start getting immediate results. Is that a fair deal? Hit that questions box for me. Don't be afraid to participate here. Let's make this fun. What do you say? Is that a pretty fair deal? At the end of this presentation, I'm going to share all that good stuff with you so that you can move forward and use this strategy. I think it sounds pretty good. Nancy says absolutely. David says yes. Ivan says yes, all caps. Good. Andrew says yes. Marco says absolutely. Gentry says 1. Good. Excellent, excellent, excellent. You guys are awesome. I love that you're fired up about this, participating. You guys are great. Now, in order to get the most out of this, I asked that throughout this training and afterwards, make this about you. Like, think about turning your cell phone off and close all your open tabs, shut the door of the room you're in. Let yourself get immersed into what I'm about to share. Let it become part of you. And stay till the end. The most important things I'll share come later. And I'm going to hold all questions until afterwards. If you have a question, write it down. We'll get to them all. So let's keep it positive and let's have some fun. So this gives you an idea of who I am, what I do, some of the organizations I've worked with. I wrote 2 of the most popular books on option trading, worked with every major options broker in the US and abroad as well as all the options exchanges globally as well, and get to be on TV a lot, which is kind of fun. I got my start down on the floor of the Chicago Board of Options Exchange. I traded there for years. These pictures literally span, I should say, 30 years of being involved with the trading floor. I traded some huge stocks like Ford Motor Company, AT&T, Carnival Cruise Lines. And I traded some little ones that nobody's ever heard of. And I'm going to let you in on a secret here. The little stocks that no one's ever heard of is where you make the big money. When you know about opportunities no one else does. So now I want to jump into this new discovery that I made. Does anyone know what this formula is? No? Okay, good. Because we're not going to talk about it again during this presentation. We don't need to, and here's why. Now, I have an extensive background in trading, but the fact is, I'm no mathematical genius. So I'm going to share a personal story about when I was in high school. I've only shared this story a couple of times. I think you're going to like it. When I was a kid, I was a little bit of a troublemaker sometimes. I'm not going to lie to you. Seriously, I got good grades. I didn't have to study usually, but this story is about a time when I should have. In my senior year of high school, in my advanced math class, instead of paying attention to the lecture, I and a few other kids in class would play poker. That's all we did, all hour long, the whole class. And I made a lot of money in that class. But the problem is, with math, it builds. And if you miss something this week, you're lost next week and you're hopeless the week after that. So needless to say, I didn't learn a lot of advanced algebra concepts that year. I crammed, I passed, but I didn't really learn that much. Now, fast forward to my freshman year of college, I had to take an algebra refresher, which is kind of embarrassing. I always prided myself on being, kind of smart. Algebra is not really that tough, but I had to take a refresher. Now, one thing you might not know about me is that I was the first Passarelli to graduate college, and I almost wasn't. Here's where the story gets a little interesting. Now, I'm a competitive kind of guy, mind you, right? So sophomore year of college, my cousin, Michael Passarelli, who is a year younger than me, was in my calculus class. Calculus, I was very intimidated by calculus. I was afraid I'd struggle. But more importantly, I knew that if I failed the class and had to retake it, my cousin Michael would be a credit, 2 credits, because I had to take that dumb algebra class, 2 credits ahead of me, and maybe, just maybe, he would end up graduating before me. There was absolutely no chance I was going to let this happen. So I put on my A game. I was ready to work as hard as I needed to win. I'm going to guess that you can relate to that, right? But there was one other factor that came into play that was a saving grace. I had a great teacher, one I could relate to. He made it easy for me to learn, and I did. I ended up acing calculus and had the honor of being the first in my extended family to graduate college. Thank you very much. So, like I said, I'm no mathematical genius by nature, but I've spent a lot of time in option trading, 30 years. And I do whatever it takes to create great trading systems for myself and, well, for you. So I studied the math of things like relative strength index and such to see how they tick. And I realized there's some hidden keys within these equations that can predict when momentum will continue. And now I'm going to share that hack with you. The concept of RSI is up strength versus down strength. And like one of the ideas is when there's too much up strength, it can lead to an overbought scenario, which can lead to a reversal, back down. So there are certain patterns that kind of game the system. They can prevent momentum from burning out, and these patterns indicate potential continuation. This is how I came up with the red knockout. Now, this is a momentum trading strategy that can lead to outsized profits. It's a simple 4-part chart pattern, easy to identify. Profit targets are easily set as well. And we use this with options, stocks, ETFs, indexes, futures, foreign exchange, doesn't matter. So let me start by listing the steps in the red knockout system, and then we'll zoom in and go through some examples. So this stuff's important, write this down. Step 1 is the setup candles. It's 3 or more green candles that make up what we call the green run. Step 2 is the red knockout candle, or the RKO. That's a red candle with a smaller body than each of the 3 preceding green candles. Then there is the trigger candle, which is a green candle that takes out the red candle's high on higher volume. And finally, the confirmation candle, which is a candle that opens above the high of the RKO and signals trade entry. So let's break down this strategy step by step. Let's go through how it works, all right? All right, you remember what step 1 is? Now we're going to take a look at how it looks. And it looks like this. It's 3 green up day candles in a row. It sets up a mini trend. Now I say green up day candles, that's 2 different things. A green candle is outlined in green. You can have it filled in or just outlined. A green candle means it's up from the open. So it opened here and it's closing here. An up day candle means it's up from yesterday's close. So it closed here and now it's here. All right. Step 2, if the pattern is materializing and we get to step 2, that's the RKO candle. That's a red candle immediately following the green run with a smaller body than each of the previous 3 green candles. And it looks like this. And so here it's a red candle because it's down from where the market opened. And this could be an up day or a down day, and it doesn't really matter. It's just got to be a little bitty one. Next, we get the trigger candle. That is a green candle that takes out the high of the RKO candle. What do I mean by that? I mean, here's the high of the RKO. At some point during the day, it trades above the high of the RKO. Okay? And then if the pattern completes itself, and if we're going to trade this, we're going to get the confirmation candle. And that is just simply a candle that opens above the high of the RKO, and that signals trade entry, and then it's just 1, 2, 3, go. All right, this is American Express Company, AXP. If we have a red knockout setup, what's the first step we look for? Setup candles. The setup candles are 3 or more green update candles in a row. Do you see that on this chart anywhere? Do you? How about, there's an arrow right there. There's the first one. There's the second one. They're green because they're up from the open. They're up days because they're closed above yesterday's close. And there you have it. So we call that the green run. Now that establishes that the trade is setting up. Now what's step 2? You remember what that is? Bingo, the RKO. If a red knockout candle shows up on the chart, it's very easy to identify, and it means that the setup might be materializing. The RKO is a small-bodied candle, smaller body than each of the 3 green setup candles, that could open higher or lower, but again, the key is that it's down from the open. Step 3 is the trigger candle, shown by this yellow arrow. That triggers that the trade is indeed setting up, and you're getting ready to time your entry. So we call this the trigger candle. It's sort of like when a marksman is all set to fire on the target and gets his or her finger on the trigger to take the shot. And then finally, step 4 is the confirmation candle, and that means the trade is confirmed. It's got a green arrow. Green means go, and fire away. Now let's slow it down a little bit, and let's go over the roles of each of the 4 components of this setup so that you can really understand why this is so powerful. So first, there's the setup candles that makes the green run. And what this does is it sets up a mini trend, right? Now, 3 green candles in and of itself is not like a big deal. You see that fairly commonly. So that's just the first, really the first half of it. We want to see a mini trend setting up, but then if the trend is just so strong every day, it's just going to burn itself out and it's going to fizzle away and reverse itself. So we actually want to see just a little teeny pullback. This gives people an opportunity to get in who missed it, these first 3 days. And then that enables the trend to continue higher. Okay? If it trades above the high of the RKO, that's when we're really getting some momentum. But we want proof of it, right? We want to make sure that this is strong, so we wait for the confirmation candle. Now it's 1, 2, 3, go. Now let's run through several more examples to see how this might play out in real life. So this is Erie Indemnity. First of all, is there an RKO setup on this chart anywhere? Do you see one? Do you see one? Nice work. There's the first setup candle, and there's, let's see, 1, 2, 3, 4, 5 setup candles in the green run. Okay, remember, it's just got to be 3 or more. Then, here's our nice little RKO, just enough of a breather so that the trend doesn't burn itself out, to give people opportunity to get in, which is going to cause more momentum up. The trade is triggering, and we confirm it right there. And if we look at our profit target rules, which I'm going to go over in a second, we would take it off right there at this green line. So plenty of room for this to play out. All right, how about here in Caterpillar? Is there an RKO setup anywhere? Look closely, look closely. Good job. There's the first, and there is the third. That is 3 green update candles in a row. Next comes a red knockout. Small pullback, right? So I call it the red knockout because the red candle basically just gets knocked out of the pattern. We look for the continuation, and that's just what we get right there in the trigger candle. So we wait 1 more day for the confirmation, and we get in on the open, which we always prefer to time the entry close to the open, because it doesn't really matter if the confirmation candle is an up day or down day. It just has to open above the high of the RKO. But in my observation, more often than not, this candle ends up going higher as the day progresses. So we want to get in closer to the open. All right, and then right here is where we set our profit target. Okay. Now, this is APEI stock. If we look here and here, we have the 3 setup candle green run, followed by the RKO, followed again by the trigger, and then we get the confirmation. Now, what I like about this trade is that it's only an $11 stock, because I know not everybody is into options. Folks who don't trade options, you can just buy the share, and like in an $11 stock, that's like buying an option, right? That said, if the options are liquid enough, you can use the options too if you have some skills with those, but you can do either. RKO indicator works in all time frames. It's highly versatile for day traders, swing traders, short-term traders, even long-term investors. Now, when I worked on improving what criteria to use for the setup candles and the red knockout, trigger candle, confirmation candle, I spent a lot of time on it. It was a really great experience. It reminded me of my old boss, Steve Fawcett. You see two people here. One, of course, is Sir Richard Branson, and the other Steve Fawcett. For those of you who don't know who the late Steve Fawcett was, he was not only a famous trader, but also a famous adventurer. He held many world records. He attempted to set one flying around the world in a hot air balloon with Richard Branson. Now, I remember one day, Steve took all of his traders out to dinner. There were about 45 of us. And after dinner, he asked us a really telling question. He said, "Why do you trade?" And it's not for the money or whatever, the real reason. Why do you trade? Because, as floor traders standing in the pits all day long, end of the day, your feet hurt, your back hurt, there are people yelling in your ear, getting their spit on you when they yell. Why do you trade? What's your reason? Is it to have more freedom to take time off and do the things you want? Or to secure your retirement, or to put your kids through college, your grandkids? And that stuck with me. So I ask you, hit that questions box again for me. What is your reason for trading? Your real reason, not just to make money. Money is a tool. What is your reason for being here today and wanting to get good at this? I want to know. I love to ask questions like this. We're all friends here, so no need to be shy. Ivan says to retire early. Well, that's great, man. I love that. Nancy says to pay for my 5 kids' college. Holy cow, man! You better get good at trading. Excellent. Retirement, good. Financial freedom. I like that, David. Yeah, that's great. Any others? Okay. Brian says freedom. Excellent. Those are all great answers. There's no wrong answers. Oh, CJ says to make a living. Yeah, awesome. Al says to help my children reach their goals. Yeah. Reg says the material things are great, but also for the win. Yeah. Jack says not to have to work for the man. Gentry to be able to have a career that is all mine. Yeah. Michael, freedom to choose. I love it, man. I love it. Now, hey, anyway, so Steve was a great mentor. Without having him in my life coaching me, I could not have become the trader I am today. But, there was one thing that Steve was known for saying. I'm still learning. It's great, right? When I met Steve, he was a gazillionaire, super successful trader, but he always was tweaking his process, always learning, always moving forward, always making his trading better for himself and his traders, which I'm thankful for because I was one of his traders. We all just keep improving and moving forward. Now, setting these price targets is really easy. Here's how the price target's calculated. So conceptually, what we're looking for here is, think of the RKO candle as like the fulcrum, like the center of a teeter-totter, right? The first half is the green run, and whatever that range is, we're looking for that range to play out again after the RKO candle. Okay, we're looking for a repeat of the green run. So we take the low of the first green setup candle, subtract that from the high of the last green setup candle, that sum. We're going to take that sum and we're going to multiply it by a haircut. Okay, so let's say the green run range is 10 bucks. Well, we're looking for another 10 bucks to play out after the RKO, but we want to be conservative sometimes, right? And some of us want to be very conservative and some want to be less conservative. So we're going to multiply that times a percentage. Maybe it's 80%. So instead of waiting for that whole $10 to play out, we'll take profits earlier. We'll take just 80% of that $10 range, an $8 move. And we're going to add that to the high of the RKO candle. This is very, very simple risk management that way. Immediately after buying the stock or the option, we put in a profit taking order, GTC, which is good till cancel, because we're probably not going to close it out today. We're going to wait until it hits that profit target. and probably a stop loss as well, GTC, especially if we're buying the stock. And then we're going to put those profit taking and the stop in OCO. One cancels the other, so that if we take our profit and the market reverses, we don't end up selling more on the stop. So the idea here is this is a very, very tight system. Everything is logically and mathematically laid out. So you're not being subjective. You're not going, oh, it's a pretty good trade, I guess. Because that is no way to trade. We're just following this very tight system. You work the system and the system works. I want you to leave here today with all the tools that you need to be massively successful with this. And I bet you do too, right? Would you like me to share what we discovered makes RKO trades even better? Yeah? Yeah, okay. So, this is not in the presentation. I'm just giving you some bonus material here. When you see the RKO cross through one of the major moving averages, which is the 200, 50, or 21-day moving averages, if you're looking at it on daily candle chart, we tend to see even better results with that. So there's a little bonus for you. I hope you're writing that down. Now, in summary, there are a few important takeaways. Momentum trades can yield outsized profits. And this is a time-tested system. So we have the setup candles. We have the red knockout candle, trigger candle, confirmation candle. We calculate the profit target just using a little bit of math. This is very easy. You can literally leave here today, and if I show you a chart, stock chart, that has an RKO on it, you can easily identify it. But there's a problem. There are 6,366 stocks to trade. If it takes you, say, if you're just going through charts to try and find these, and let's say it takes you 45 seconds to spot an RKO setup on a chart, it would take you about 80 hours a day to go through all the opportunities out there. And that's only looking at one time frame. You don't like missing opportunities, do you? There's got to be a better way, and I bet you know that. You wouldn't be here right now if there wasn't a better way. Ready? Are you ready for it? So the RKO system is officially here. Over the past 3 years or so, we've created both a scanner that would easily identify RKO trades, as well as an indicator that displays the pattern right on the chart along with the price target. We wanted to make it so simple, it's just impossible to mess up. So you now have a new opportunity to scan the market for top momentum trades you wouldn't be able to find without the screener. With over 6,000 stocks out there, it's almost impossible to just happen to come across one of these great setups. But with this easy to use 3-step scanner, it makes it possible, because I've made the investment for you. Because you know what? I know what it's like to struggle as a trader in the market. I've had the pleasure with training thousands of traders, and I wanted to develop a scanner that made it very easy to find profitable trades with great potential. And even for myself, before creating the RKO system, man, I would come across one of these setups maybe once every 6 months. I would just miss tons of opportunities a day. But finally, I've invested both my time and my money to develop this simple, easy to use scanner that you can harness now as well. Imagine what your trading account would look like if you could sit in front of your computer and have a powerful trading tool that identified both the trade entry and exit points in just seconds. Imagine if you could block out all the noise in the market and only focus on trades that have been identified for you. Like, what would that mean to your trading business, right? Well, that is exactly what the RKO scanner does for you. These are some examples of the trades, both entries and exits, identified by the RKO scanner and displayed by the RKO indicator. On the left are stock trades. On the right are trades that you could make with options. Now on September 18th in BBU, a stock trader could have bought the stock at $21.89 and 7 days later sold it at up to $23.93. That's a 9.3% profit in just 7 days. On October 16th in GLD, a trader could have bought that ETF at $247.15, sold it at up to $253.06, locking in a 2.4% profit in just 4 days. In the options, in MGM, a trader could have bought the October 37 calls at $1.59, sold them 7 days later at $3.33. There, we're using the leverage of options. That would be locking in 107%, 107.5% to be exact profit. To make that more tangible, if a trader bought, say, just 5 of those calls, he or she could have made $855 in profit on just that one trade. And that's just hitting the haircut profit target that was set. If the trader held on to this longer, or even took half the profits at the initial profit target and, let the other half run, on September 27th, the profit could have been over 170.4%. So even if you make, say, 3 of these trades a week and your results are half as good, how much impact could this have on you and your family's financial future to reaching those goals? Start getting the results that you deserve. So this is Nick. Now our head coach, John, who's a brilliant guy, ex-Goldman guy, John and I shared with Nick what we were thinking. Nick was the first human ever to see the RKO, and in fact was extremely instrumental in helping us. Nick said, using scanners, in particular the RKO Daily, helps me find trades when I'm busy or might not be fully locked in the market. I run the scanner, do the checks, and decide to take the trade or move on. It only takes a few minutes and helps me find the best trades consistently. So, are you ready for this? I want to invite you to join us and start using the RKO system right away. So first, you're going to get the Red Knockout Scanner. So every day you'll be able to have a list of all the RKO trades available in the entire market. This simple scanner searches the universe of over 6,000 stocks for this setup and makes it possible to find trades you would never have access to without it. For you to profit with the RKO system, I need you to know how it works. So I created a video training course that shows you step by step exactly how to install this on your platform, how and why the RKO system works, how to set up the trades, the filters and cross scans to optimize the strategy, and of course the targets and the trade management, everything you need. So what this means is first you're going to get the Red Knockout system, that's the scanner, and you're going to get the RKO Accelerator video course. Now I can put those tools in your hands and I can tell you how to use them, but I know for me, I learn faster when someone shows me exactly how to do it. So the best thing that I can do for you is give you hands-on training. Every Friday for the next year, for 1 full year, you're going to attend our online live group coaching class and watch our head coach, John Komisik, set up RKO and other trades right there while you watch. John's formerly with Goldman Sachs, First Options of Chicago, Lind Waldock. He traded for a hedge fund. He is the expert on the Red Knockout. He helped me develop it. He's just the kind of person that you want to listen to. But I wanted to make sure you hit the ground running and get the hands-on training to start getting those immediate results. This is Dennis Meixel from East Peoria, Illinois. He says about group coaching, thanks, great class, exactly what I was looking for. The class gave me a lot of insight into options and the Greeks. I'm a fairly new trader, but I've been putting in the work to move my skills forward. I mean, look, how would it feel to have top picks selected by an ex-Goldman guy every Friday? So what this means is first you're going to get the Red Knockout system, that's the scanner, the Accelerator video course to just get you up and running right away, and you're going to get the hands-on training in the weekly group coaching. Now that's a $5,247 value. Do you mind if I over deliver? What I really want is for you to make as much money as possible trading the RKO. And I imagine you do too. So every day, we're going to rank the day's RKO trades and list them out and give you our top RKO picks so you can see what we think are the best of the best. This is the RKO watch list, and it's a $1,297 value. Plus, here at the bottom in gold, John will add a bonus trade every day from his daily group coaching class. So you'll be able to diversify your trade and get all the top trades of the day by simply clicking one link to access your curated watch list. So what this means is you're going to get the red knockout, you're going to get the accelerator videos, you're going to get the hands-on training, and then we're just going to spoon feed you to show you exactly which trades we think are the best of the best. Finally, this completes everything you need to make the RKO simple to trade. With the RKO indicator, we put the arrows right on your chart to show you the trigger candle, the confirmation candle, even the exit price. So all the information is laid out for you. This could not be easier. So that means you're going to get the red knockout system, the accelerator videos, the group coaching, the RKO watch list, and we're going to put all the arrows right there on the chart. Plus, you're going to get updates every time we optimize the strategy to make it better for 1 full year. And that is a $7,541 value. RKO works on the following platforms: Metastock, Thinkorswim, NinjaTrader, TradeStation, TradingView. Now you may have noticed the red knockout trades are all for when the stock is rising, and for that reason these tend to work better in bullish markets. But the market doesn't always go up. Not all stocks always go up. In fact, some can have some pretty big bearish moves. And so I've created the green knockout to double your chances of success. So today you'll get both the red knockout and the green knockout, so you'll have the tools you need to trade in any market, up or down. So that means you're going to get the red knockout system, the accelerator videos, the weekly group coaching, the RKO watch list, the RKO indicator right there on your charts, and you're going to get all of this for the green knockout too, so you can trade any market up or down. Buy now. You can see why the RKO trading system is a steal even at $10,041. If all this did for you was identify trades that had a profit of 107.5% or 83.7% or whatever, the question you need to ask yourself is, would it be worth it? Yeah, but you're not going to pay $10,041 today because you've made the investment of being here live on this training and for being one of my action takers. You're the elite, man. You're better than millions of other traders out there. You showed up today, and I want you to have the results that you deserve. Get started today for a one-time, small, easy investment of only $997 by going to metastock.com/RGKO. 1, 2, 3, go. That's metastock.com/RGKO for red, green knockout. But to get all these bonuses, including the green knockout, to maximize your success in any market condition, you're going to have to be one of the first 25 new members today. And in order to do that, you're going to have to take action right now by going to metastock.com/RGKO. Now, just to recap one more time, when you open your browser and go to metastock.com/RGKO and sign up today, you're going to get access to the red knockout scanner that's going to identify trades with the entry and exit points. On top of that, when you're one of the first 25, you're going to get all these bonuses too. You're going to get instant access to the RKO Accelerator course and the GKO Accelerator course to get you up and running right away. You're going to get access to the weekly group coaching where we go live in the market together. You can see exactly how me and John and our team uses the scanner to generate profits in the market. You'll also get access to the RKO watch list with our top picks of the best trades that John and I are looking to trade with the scanner. This way you have the best opportunity to generate profits from the scanner by following the exact trades that I am looking to place. Further, when you open up your browser and type metastock.com/RGKO and lock in your RKO traders package, you will also get access to the RKO indicator itself. This way, while we're coaching you live in the market each week, giving you access to my top watch list, you'll also have access to this powerful indicator 24/7 across multiple markets to take full advantage of this great and easy to use trading indicator. And like I said, also, as we run more tests and do more tweaks, as the RKO continues to evolve and we get it performing even better, you will get updates for a full year to both the scanner and the RKO indicator. Now, lastly, when you join us right now, you get the green knockout along with the red knockout. You will have the confidence of knowing you can trade any market up or down. But here's the thing, you have to take action today and be one of the first 25 members right now. Now, in addition to going to metastock.com/RGKO, you can also call the good people at Metastock at 800-882-3040. That's 800-882-3040. 800-882-3040. Now, if you have any questions that I can answer to help you make the decision to join us, and just taking a look at this, looks like we've had about 14 people join us so far, which is really pretty darn amazing. That's great. You guys are fired up. That's awesome. In fact, let me just give a quick welcome and congratulations. Congratulations to David from Rochester, New York. Nice job, stepping up, moving forward today. Welcome and congratulations to Nancy from Sioux Falls. Excellent. Welcome, congratulations. Welcome and congratulations to Marco. Welcome and congratulations to Ivan. Welcome and congratulations to Stephen. I do see a question popping up here that I want to answer before I welcome the rest of the folks here. And someone asked, well, someone said, this is kind of a long question here, Dan, this is just what I've been looking for, but I have a hard time coming up with the $997. Is there a way to finance this? And I'm glad you asked that question. It's a very timely question, because the answer is yes. You can use PayPal and just choose PayPal credit. We have a deal with PayPal to offer you both PayPal as a payment option and PayPal credit. So you can lock in the red knockout today when you check out using PayPal and just choose PayPal credit. And all you have to do is go to metastock.com/RGKO. So yeah, please pop your questions in that I can answer to help you get all the information you need to be able to move forward with the red and green knockout today. Go to metastock.com/RGKO, call 800-882-3040, or you can chat with Sales Chat. Just go to metastock.com/sales chat. CJ says first training and then purchase your system. Exactly. Yep. Because I mean, I trained you. I literally taught you everything you need to know to do this. But if there's 6,000 stocks out there, if there's 6 stocks that have an RKO trade today, you'd have to go through 1,000 stocks just to find one. It's not possible to trade it without a scanner. And that's why I created the scanner. First of all, I created it for myself because, like I was talking to John one day and I was like, yeah, man, I never find any of these RKO trades. And he's like, oh yeah, I just traded one today. It's like, oh geez, man, how did you find that? He's like, I just came across it. It's like, man, we got to be able to scan for these so that we stop missing opportunities. He's like, yeah. Ricky says, so that is $997 per year. It is, but after the first year, you can renew at an even bigger discount. So just get signed up for the first year at $997, and let's take it from there. All right. We'll give you a nice
YouTube that I can throw over your way.
Awesome.
Let's see. It's from, well, actually, Lon says, Happy Veterans Day. Jay wanted to know, does the confirmation candle have to occur only on the day right after the trigger candle?
Yeah, that's important because, we don't want it to lose momentum. And, if it's just down and then up and, yeah, it's very, very important that the confirmation candle happens the day after the trigger candle. Yeah.
Cool. That's the questions we have on YouTube.
Excellent, excellent, excellent. Well, we did have a couple more people here. Welcome and congratulations to Jamie. Welcome, congratulations to Aaron. Oh, Aaron's in Chicago. Welcome, congratulations to Eliza. Welcome, congratulations. And I think I skipped a couple, but anyway, yeah, that is everything that I have. Thank you all for joining me, and thanks for all the folks who just signed up with the RGKO package.
All right. Thank you very much, Dan. Appreciate it. Thanks for coming in, spending some time with us. I just ran a scan out of the 6,000 stocks that are out there. Today there were 2.
Yep. I actually spent a lot of time figuring out how to get the right number, because I wanted to set it up in such a way where we get enough scans. If it's like 1 a month, that's not enough. But I also didn't want to have 20 a day, because sure, then it's like, well, I'm not going to make 20 trades. Which one do I pick? So we really, really fine-tuned it a lot. We did tons and tons of work on this.
Cool. All right, I'm going to show a little bit in the software. I appreciate it, Dan. You can go to metastock.com/RGKO. You can give us a call at 800-882. Oh, Jay wanted to know, since we have a minute, where do you put the stops?
Oh, yeah, I cover all of that in the accelerator videos. So like I said, everything in this package, it is literally every single thing that you need to be massively successful with this. It's all covered in there.
All right, very cool. Thank you, Dan.
Thanks, Jeff.
Appreciate it. All right, I'm going to do this. See you. Okay, let me go ahead and make me the presenter real quick. All right, and then I'm just going to share my screen, share my face, and there are the 2. So I talk about how I love the ability to go in and scan and find those kind of opportunities. There you go. This one went through 5,649 optionable stocks, rejected every single one of them except for 2 ETFs. So you can take a look at those. Of course, it comes with commentary, expert advice, all that kind of stuff. But I love that ability for Metastock to go in and just, show me the stocks. Let me ignore the stocks that don't have an opportunity. Let me focus on the ones that do. Such a powerful tool. So Dan, as he said, the add-on that he has is the red-green knockout. He had lots of examples. Here's an example of the commentary. This is on Church Dwight, CHD. There's your short green knockout. If you're looking to take advantage of that, you can look to go ahead and buy there. Kind of gives you all that advice, all that commentary. So it includes the indicators, the profit target, the settings, the expert advisor, the scanner, the template, everything you need to run it in Metastock. And in addition to that, all of that training that Dan talked about is included as well. So normally this is $14.97. Here at the conference, you're going to get a price of $9.97. That's going to include that accelerated video course, the 12 months of coaching, the RKO watch list, and if you need it, a free trial to Metastock. If you've been wondering, well, hey, they're talking a lot about Metastock. I wonder why it's been rated #1 for more than 3 decades. Yeah, we should try it out. We'll give you a free trial to go with it. We'll give you a money back guarantee, everything you need to go ahead and get started. I love the fact that Dan includes so much with this in terms of the coaching, the video course, the watch list, all that stuff actually just comes with it. So you can give us a call, 800-882-3040. You can go to metastock.com/conf promo, or you can go to metastock.com/sales chat and give it a go. All right. I think this is, I do want to talk a little bit about our new community, or a partner of ours. Go join us now. www.thetradersforum.com. We've got market chat with other traders. You can share ideas, learn, go lessons. We do a couple of sessions a week. You can learn about the markets, and it's just a community of traders designed to help traders. Thetradersforum.com. I'll see you there. All right. Greg, are you around? Oh, Mr. Lewis, are you around?
I'm sorry. Yes, I'm here again.
Could you not find that mute button?
Button is always a challenge.
Yeah, it's our nemesis, right? Okay, let me grab the prize list. All right. Halfway through that, I decided it would be a good idea to cut the power to my computer, so I'm kind of just getting back up and running. Let's see. You know what? Actually, no. Let's do this. We're going to go ahead and give away a prize from Jody Samuels. It's called the Forex Foundation course, and the value is $299 on it. It's designed to help you set up a business plan, define a system, develop a clear trading plan, grow discipline in your trading, and stay healthy, which I think is an important part of being able to trade well. So all of those things are going to be included. We're going to give away one of those right now. And what I need from you, Mr. Lewis,
yes,
is any number between 1, and it's not giving me a count because I opened up the spreadsheet, and 7,500. We'll just
sharing that. Actually, you're sharing that spreadsheet, Jeff.
What's that?
You're sharing the spreadsheet?
Oh, ooh. Well, thank you for letting me know. Sorry, I've been sharing the on screen for a few minutes now. All right. Well, there we go. Will you give me a number?
I'm sorry. Oh, you're ready for your number?
Yes.
Okay, let me generate that using my Google random number generator.
Finally give me a count.
This doesn't sound very random, but it's 1444.
Okay.
1444, 1444,
That's Andrew or an Andy B with a Gmail account. So let me go ahead and make a note of that.
Sounds good.
And thank you for the assist.
You are welcome. I'm here for you.
Cool. All right. Thank you very much. We go ahead and do this. Make sure I have the right screen shared. Ooh, that was. All right. Our next presenter is Ed Gammons. Ed is been a friend of Metastock since I started. He has created systems for decades and decades and decades now. Today he's going to talk about an engine that he's developed to help identify chart patterns. So, Ed, let's go ahead and bring you on here.
All right.
I can see you. You look good. A little bit different than this picture, though.
I know, but I like that.
Let me go ahead.
We're going to stay with it for another 20 years, maybe. I don't know.
All right. Here we go.
Okay. Well, hey, great to see you again, Jeff. I always enjoy doing this with you. It's fun. Okay.
Always.
Yeah. Let me see if I can get it here. I'm having a little challenge with my monitors today. I don't know why, but like they're going full screen and picking off all the icons on the bottom. So I'm having to alt tab between windows, which is okay. I can do it, but you know, it's one of those weird things. All right. So you see my screen with
I can,
slide?
Yeah.
Okay.
Yes, I do. I'll get out of the way. It's your turn.
All right. Well, thank you so much. Yeah, Jeff and I go way, 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 way. I don't want to say how far back because, you know, little data's too much, but well, let's just say that the 90s, sometime in the 90s. And so we worked together. We had some products we built, automating Metastock, the DOS version, you know, way back then, which they provided their customers, and just a great relationship. We've recently hooked up with them, I guess maybe 2019 is when we did this, Jeff, I think. And I was saying we have some products in our other platforms that really can lend themselves to work with Metastock. And that was kind of the start of this company that I formed called Fulgent Technologies, which was created to take our AI mainly out to other platforms like Metastock. And of course, Metastock was the first one, of course, and the best for many reasons, especially the people there, but also the software. And so we did that with our AI, but there's several products that we integrated into Metastock. Most of them are based on artificial intelligence. And so we have a number of things going with them, but today we'll be looking at the chart pattern engine, which was first built. It was about, I'm going to say 2015. It's been upgraded ever since, and it is based on artificial intelligence pattern matching in charts. And so it's a great platform. I do want to say though, I really enjoy teaching about the markets. Been doing it for a very long time. And so my objective today is to tell you some things about patterns that you may not know, because the truth is, if you're looking at charts, you can see these things and predict moves pretty easily just by using a couple of ideas about each pattern, targets they have, where they're likely to retrace, those kinds of things. So what I mainly want to do is impart that knowledge to you, and it's quite a bit. So on that note, let me just show you the website here, because we have a little book that I did. If I can, like I said, I'm a little challenge this right now. There we go. And the book goes through all the patterns that I'm going to talk about with lots and lots of examples, and it's kind of platform neutral. It's just a chart pattern book. But let me go ahead and show here. Okay, so Metastock, and here it's right. If you click the Metastock link on platforms, it's right here is a picture of it. But if you just hit that download right there, you'll get the chart pattern book. So you'll probably want to get that and refer to it. It's like I said, it's got a lot of examples in it, and is the basis for what I'll be covering today. Okay, very good. So yeah, chart patterns, I'll tell you, chart patterns are the essence of the market. They really are. And so today we'll be looking at why that is and what we can do to make money with them, because there's just an awful lot. There's the book, right? So there you go. Go over there, click that, you get the book. Okay. And so now let's talk about what a pattern actually is, because they're very interesting. Chart patterns really do two things. They do reflect the psychology of the market. Like if you have a support line that gets hit a bunch of times, people are looking at that support line and probably buying when it touches it and maybe selling when it goes through it. And so the other thing about patterns is, in addition to showing the psychology, they actually determine behavior. So if you break a support level really hard, or a resistance level or consolidation upside, like this little picture shows right here, the market sees that and they react to it. It just is a fact of life. They do. They're going to say they don't, but they absolutely do. And so this is what we're doing, is measuring these things and trying to find them in the market so that we can trade them, with the crowd, and then hopefully getting out at the right points, when they kind of fizzle out, so we make the most profit. But that's the art of this, and it's just very fascinating how it works out. If you look at a picture of the market, which I did, this is done a while back, but it's the S&P 500, and I just took a red pen and started marking all these patterns, right? Trend line breaks, consolidations, gaps, volume climax bottoms. We're going to be talking about all these, and there's just a lot of them. So one of the things that I've done in my long and sordid career is published chart pattern commentary, just looking at the Dow every day, and where's it likely to go, and that became the most popular thing that I ever did. We still have kind of a version of that going today, but it's just interesting how even on an index, you would think it wouldn't matter, but you can just see, if you already were familiar with all these patterns, the kind of breaks and reversals that are happening it's almost like, hey, look at me, I'm going to go right here, and they do. So even the indexes appear to conform to these things really, really well. So there are, in my opinion, 7 major patterns that you need to be aware of. If you get like Bulkowski's book on patterns or one of the other ones, you're going to see 14, 29 patterns. I mean, tons of them. But my opinion is that all the patterns that you see are derivatives of these 7. And I actually wrote a little book back in 2000. It's very short, it's like 35 pages, the 7 chart patterns that consistently make money. And I think it's still out there somewhere. But like it's very short, just talks about the psychology of these patterns and how they work out in the marketplace. But so here are the 7 that I talk about in the book and that we'll be looking at today. First, you have trend lines. Everybody knows what a trend line is. Breaks and reversals. Now, in the software that I'm going to be showing you, of course, we have the software that does do all this stuff. There's these little letters that appear. So TLB is a trend line break, TLR is a trend line reversal, and all of these are that way. So in the chart, we don't put a big old label on them. It's just the little 3 characters, so you can tell what that is. The next is support resistance, same thing, break, reversal, consolidations. A volume, climax, and trend. I think I actually discovered this pattern. I'm going to claim that, but anyway, so volume, specialized volume pattern, Fibonacci retracements, price gaps, and saucers. And so if you look at, these patterns stand.
Yeah, Jeff, I've lost Ed.
Yeah, I think we've lost him.
He's still there, but his screen
he's offline.
Yeah.
All right. Yes, Gentry, it looks like we are having some technical issues. Give me just a second.
Well, I don't know where I've done with my dad jokes book.
This is okay. I'm gonna try and get a hold of Ed real quick.
Okay, folks, while Jeff's trying to do that, thank you so much for being so patient. We are currently listening to Ed Downs talk about AI, finding the most predictive and profitable chart patterns in any markets, and then Ed suddenly just went silent. So I'm assuming it's just a computer issue over there, and he's probably taking a minute to reboot, but he's still not yet online. While we are waiting, Jeff, I'm sorry, do you have something to say?
No.
Oh, I'm just stalling, just stretching time here, so jump back in whenever you're ready. While we're waiting, I would like to remind people that if you are on YouTube, then and if you want to be eligible for the prizes that Jeff does every time between presentations, just go to metastock.com. There's a big banner right up on the top, and you can hit that banner and register to enter, register for this event, and then you'll automatically be entered to win prizes. Also, for people that are asking if this is recorded, it absolutely is recorded with all its foibles and technical difficulties. And that recording is available at youtube.com/metastock. If you're watching us on YouTube right now, you're already there. Just come back here if you want to see it again, or rewind while you're watching it. It's being live streamed to YouTube and simultaneously to GoToWebinar. Additionally, we do have, as Jeff's mentioned, some of our sponsors. I'm going to put them all right now in the chat. Our sponsors include, wait, that didn't work. Our sponsors include Traders Forum. Traders Forum is a great new partner of ours, and it's a great place to go to learn. It's absolutely free. Go to tradersforum.com. I'll put it in the chat box right here because my other one's not working for some reason. Did that work? Boy, when it rains, it pours here. Just a second. All right, just trying to get my chat.
All right, Greg Lewis. I did talk to Ed, and he's on his way back. Yeah, he's still presenting. He's like, what are you talking about? I never left.
Oh, yeah.
So
I was just telling folks about our sponsors. I had gone as far as tradersforum.com.
Okay.
But
cool. And there are a few of them for sure. I do have. Well, I do think it would be a good, appropriate time. Did you get through them all?
No, but I'm putting them all in chat right now.
Okay.
Just because it seems like a good time. And I feel like you haven't mentioned Trade Thirsty in a while.
Yeah.
Or CMT.
Yeah. So Trade Thirsty, they started doing traders education in 2013. A lot of speakers that they work with. Great partner of ours. They've been a partner for a number of years, and they're giving a free book away. And I can actually, let's see, where is that link?
I've got it.
Oh, okay. And then
Got it right
just
here.
click on the link that Greg has.
TradeThursday.com/free. I've already put it on YouTube. I'll put it in GoToWebinar. There you go.
There's Ed, and he's looking way less staticky than he. I mean, way more animated.
More dynamic than before.
I'm glad I'm less staticky. That's really good. Okay. Right. Yeah, let me get back in the groove here. 1 second. I'm trying to get the show screen button.
Oh, here. Yeah, since you're gone, let me make you the presenter again.
Oh, that would work. Yeah.
Yeah.
Okay.
We
Jeff,
were still
I'm gonna go ahead and use myself. Ed, good luck to you going forwards. Break a leg.
Thank you. Thank you.
Well, for the assist.
This is Metastock webinar take 2. Okay. Yeah. And let's see. We'll get that down there. Okay, fine. Yes. Okay. I'm going to try this again. Ta-da. You see it?
I do see it, yes. And we were on the book, the ebook page.
Yeah, so I'll just make an abridged version of that. So yeah, I did this book in 2000 to talk about these 7 primary patterns. And all I said was that we're going to go through all these, all 7 of them is the meat of the webinar. And each of them has these 3 letters, which are in the software. So in the software, they're called this, so it doesn't just get too busy. And then I said that other patterns like cup and handle are derivatives of these. A cup and handle is a saucer with a consolidation. So you can pretty much derive any pattern that you can think of with these 7 patterns. This is kind of the point of that. All right, so I started off then talking about trend line, breaks and reversals. And by the way, Jeffrey, I've got my phones right in front of me. So that happens again, I'm watching for it. So hopefully not. But okay, we'll just, come on, be nice, computer, be nice. All right, thank you. So trend line breaks and reversals are very important patterns, but they have to be obvious to the market. They can't just be some little wiggly thing. It's got to have clear pivots, a clear break, and all that. So trend line break to the downside looks kind of like this. Here's the pivots going across there, and then to the upside looks like this. And an interesting phenomenon of these is that when you break through, often you'll come back and touch the trend line again. And I call that the kiss of death, because that's where you can get a very big decline or a rally after that occurs. So that's just something about trendline breaks that's really important to note. Reversals are the same thing. You've got pivots which you're reversing, much like a support level or a resistance level. Okay, and so what we're going to do, normally I would just show tons of examples of this stuff, like slides, right? One after the other, 15, 20 of them. But we have this plugin running in Metastock, and so I can use that, and that'll be a whole lot better. All right, so I'm going to assume we're good unless I see my phone, Jeffrey. I'm just going to keep going. Okay, so this is Metastock. Okay,
you're currently good.
All right, this is Metastock, of course, with Apple being shown. And so what I'm going to do is go to something in the tray over here, the system tray, which is this little bitty up arrow, because we have this app running in the background. It's been installed, and it just kind of sits out there and waits for Metastock to talk to it. It's called the Fulgent AI app, and we have multiple products that we've built with this app for Metastock. There's a CT trader, and there's an AI thing called FT stocks. There's Wave Trader, but today we're going to be looking at FT patterns. So that's the one that right here. The checkbox is because you can have multiple versions of any of these. We're going to see that in a little bit, but right now I'm on the main FT patterns. So what I'm going to do is double click this, and we're going to talk about some of the other stuff that's down here in a little bit. And you can see all the different chart patterns over here, and there are some of those derivative patterns as well, cup and handle and so on, head and shoulders. But what I'm going to do is turn on trend line breaks and trend line reversals. You'll also see other things over here, longs and shorts, medium term, long term. This stuff, you can configure these. We'll be talking about that at the end, what you can do with it. But all I'm going to do right now is just turn them on, and I'm going to bring this down here. And then we're going to say, refresh the chart, please, Mr. Metastock. And let's see what we get. All right. And for some reason, it didn't do it. Why not? Okay, we got that and that. Okay. And that should, maybe I should have closed that. I never had to before, but it's a strange day. So let's see if this does it. There it is. Okay. And so if you look at this, what you'll see, let me go and draw a trend line for you here. There we go. Couple things you notice in these charts. So now we're going to talk about this module, and I'm educating you about what it does, of course, as we go, in addition to teaching these patterns. And I think you probably heard me say this originally. My goal is to teach you about these things so you can use them whether you have the software or not. And the software is just going to help us illustrate them. And then, of course, it's very useful if you want to get it. But so I just drew a trend line there, and you can see it says TLB, very tiny characters there, with a little down arrow. So that's where that trend line break is. There's also one right here, goes across there like that, and you see that TLB right there. Just beautiful, nice move. And if you look at these, most of them are profitable. It's about 70%. The reason they are is because we have an engine, an AI engine that we built to look at all of the things about these patterns, the slope of a trend line, how many points are touching it, things like that, volatility, volume patterns around the trend line. And so it's pretty sophisticated, and you can actually tune it to get better trend lines, better signals. Right now it's just showing all of them, but I'll show you the paring down in a little bit once we've gone through them. But so you can see that trend line break. Here's trend line reversal right here. Go ahead and put one more trend line on here, and you can see that R right there. And then if you go up here a little bit, there's a break right there, there's a reversal right there. And what I tell people who get this is it's extremely useful, especially if you're scanning for these things, which we have a scanner built into this package, just to point out where they're probably happening. But like anything with technical analysis, you can have an apparent signal on something that for whatever reason doesn't come to fruition. So what I tell people is, okay, you get the little thing that says TLR and you look at it and you ask yourself, like in this right here, or this one, is that an obvious break of an obvious trend line? Yes. And let it go another bar, and right about there, I know this is really small on your screen, but there's a bar above that trend line. That's where you're going to take it, not necessarily on the signal, although that signal is really in a good spot. So it's best with any signal you're trading. Here's a really good TLB right here, very clear trend line, goes up. But you want to confirm them, because sometimes, like, see this one here says trend line reversal right there, but it didn't go anywhere. It says you've got a trend line and it looks like it's reversing, but it doesn't move any. So that's not good. And this one's the same way. But then you get the ones that are moving in the right direction, and it's about 65 to 70% of them. Okay, so we've got 7 to cover, so let's keep going here. And let me see. Okay, I need to get this down. There we go. All right, so next one, support, resistance breaks and reversals. And it's a trend line that's flat, basically. Same thing. You're bouncing, off of that horizontal trend line, which is a support line or resistance. SRB is a break. B is a break. So SRB, support resistance break through here, and then up through that resistance level. And again, they should be obvious. The more obvious they are, the better they work. And the nice thing about trading these is you can put your stop right below the line or above the line, and it's a very reasonable place, because you don't want to trade it if it doesn't just take off. It's got to take off right away. Reversals, same thing. You got different pivots. You reverse off them. And those are, of course, noted as SRR in the software. And I put here, support breaks can create panic, because nobody wants to be on the short end of a short stick going down. It really does induce panic in the market. And so we've seen the last couple of months, we've seen several times this happen. So, you see it breaking a support level really hard. That's a great place to go short, or resistance hard to the upside, although resistance breaks are more susceptible to false breakouts than support breaks. Okay, so let's go back to the software. And I was on it, I missed it. There we go. And what I'm going to do is go into my handy dandy little thing here, the Fulgent engine, and I'm going to double click patterns again. I'm going to turn these guys off, because it'll be too many things on the chart. And let's turn on support, resistance breaks, and reversals right there. I'll click OK, close, and refresh. And those trend lines I drew are going to be there, but now you can see the support, resistance breaks, and reversals. And so let's see. Let's look for a really good one. This reversal here is pretty good. Here, what it's seeing is this pivot over here for that reversal, but it doesn't go anywhere. So they have to move quickly. So it goes, well, it wasn't a reversal, maybe it's a break. So one's got to be right? But anyway, so from that pivot, it was a false reversal breakout, but a very strong, a false reversal, but a very strong break. Here's another one. Look at this pivot over here, that right there, and it goes down. And again, the value of the software is it'll find these things for you. Then you just look at it and go, is that confirmed? Oh yeah, it's really confirmed. And then you can trade it. So several examples in here. There's a break of these pivots. That's a B right there going down. And let's see, here's a break here through those pivots right there. That's this break. So it's a great pattern. And I'm really tempted to go through a whole bunch of charts here, but we'll be here too long. So I'll just do one for fun. I just happen Apple's the first one, you know, so I'll just use that for examples. But you can see these are really, it's an amazing pattern, works really, really well. And so when you see that break, you want to look for the pivot that it's breaking through. And yep, you know, it's awesome. Reversals. Here's a really good break right there. Just went straight up. That was a strong confirmed break right there. And there's probably good volume on it if I had the volume shown on this chart. Okay, so a quick treatment on support, reversal, support, breaks and reversals. All right, so let's go back to, oh, it's what I need to do because of my monitor issue, is go back to here. Okay, the next one is saucers. I love saucer patterns. They are so powerful. You're going to see that in the charts in a second. They're any rounded pattern, really. Anytime the market is, you know, it's going, it goes down, it slowly turns, and now it's going up again. So anything, and it can be kind of a quick one or more long like this. So that's what a saucer is. They typically retrace about 50% of the prior move. So that's a good target to look at getting out of a saucer pattern. But it is a very reliable indicator. So let's go and see that in action. All right, so same thing. I'm going to go back to my engine here, bring it up, and into patterns, and we'll turn off the support resistance. And everybody wants me to turn all these on, which I will do at the end here. And saucer. Okay, let's turn on the saucers, close that, and let's do a little refresh here. And right now we're on Amgen. I was on Apple. But you'll just look across this chart, just look how good these are. I mean, it's almost like ridiculous. You know, you got a small turn there, whoa, going down, small turn there, going down, turn here, going up, turn here, going down. There are very few false saucer patterns, as long as the curvature is reasonably smooth. And so, you know, they just kind of speak for themselves. Let me go back to Apple here. And I hope you can see the little letters, but SAU, you know, up here, no signals in here, and then it turns around, there's the signal. It turns around, there's the signal. So you can imagine just prospecting for these things and picking them off, you know, and trading them across the whole market every day with the awesome Explorer that's in Metastock. Love that thing. Okay, so that's a saucer. Now let's move on to the next one, which is going to be, drum roll please, Fibonacci retracements. This is also a great pattern. And I don't think anybody really understands why this works, but it does. You see it. They'll say it's nature, it's conch shells and all these things. Well, there's something about the psychology of the brain that when you see a 50% retracement on a big move, you just kind of want to buy it right there. And that's universal across all traders, people. So when it starts to turn at that point, you know, it's a really good place to get in, and then you put your stop right below the level. And there's also, these are the primary Fibonacci retracements. There's about, I think there's 8 that people look at, you know, the 12, the 26, and so on. But these are the eighths. So 4/8 is 50%, 3/8 is 38%, 5/8 is 62%. Those are the primary Fibonacci retracements. Okay, so let's go ahead and go back to our little meter stock. And where's my engine? It's over here somewhere. It's on the tray. There we go. Okay, bring it up. We're gonna go back. You know this drill by now. I'm gonna go back in here, turn this off, turn the fibs on, say okay, close. And of course, I'm just doing this for the presentation. You normally wouldn't be turning them on and off like I'm doing, but anyway. So when you see a Fibonacci retracement called out, what you want to do is look at, you know, like what is it? So if I look at one of them here, here's one. You can actually, this is a feature I'm going to show you now that I had not shown before, and that is the Explorer expert commentary, because you actually have commentary on any signal that's generated. So if I click in here, oops, hold on. Well, right. It's selecting the chart. I gotta click close enough to there. Well, it's still doing it. All right. Let's try. Let me go to the next chart because this one doesn't have very many classic cases on it. Here's a good one. Okay, so right here, no, it's still not picking that. Why is it not doing that? Let me see. I'll try over here. That is just really bizarre. This did not happen to me today, or really, oh, wow, that's really weird. It's picking the chart. Let me try just kind of right next to it here, a little bit closer. Okay. Well, what it's supposed to do is tell you what the pattern is and how it's interpreted, and it does work really well. So there's something about the way I've got this template set that it's not allowing me to click in the chart. And maybe Jeffrey can save us here, but anyway, it will tell you that it's a Fibonacci retracement. So this one is a 38%. So here's the bottom, here's the top, 38% down. It was great. But again, with any of these things, these were good over here, but and here, this is good, good, good. You have to confirm, like, look at where's it coming from. So this is looking at a 50% from there to there. That's a great place. I'd have to scooch over a little bit to see what this one over here is from. That is a 60 going back up to here, and it's good. Here's a 50% of this move right here going back up. So again, it's just really good to be alerted. Is it just
not drawing for you, Ed?
What's that?
Is it just not drawing for you?
It is not doing the clicky thing in the chart to show the expert. And
well, that's interesting.
It's picking the chart. So I don't know.
Try clicking up above the expert advisor. Try clicking one of the arrows to the left, and then
one of these.
Yeah, except for the previous bar.
Okay.
And now see if it'll move.
It's looking in the chart, so I don't know. That is so weird. Okay, well.
Yeah,
I know it doesn't.
I tried.
Okay, that's all right. That's all right. It just shows you information about the pattern. Like all these pictures I'm showing, it shows this exact same picture and then talks about the interpretation. So it's very useful, and I've used it a million times. It definitely works. So I have no idea why it's not doing that today. All right, so the next one here, we're kind of getting towards the end of the game. This is the price gap. Yeah, we have 3 more. So price gaps are also really powerful. You have gaps that are at the beginning of a move, that's a breakaway gap, the middle of a move, a measured gap, and the end of a move, which is an exhaustion gap. So you're coming down, you have a break at the end of it, and it turns around. The most predictive gap pattern is the measured gap, because what it does is if you have a move, say up to here, and you get a gap and it keeps going a little bit, it has to confirm. That's likely halfway to where it's going to get to. So it's really a powerful signal. You got to confirm it. You got to let it get past that halfway point, because it could be an exhaustion gap. You could just turn around right there and go down. So you let it go. The breakaways are really good. You know, a strong gap from the bottom. Exhaustion gaps, again, those could be either exhaustion or measured. So let's go back into the software and we will turn that on. All right, Fulgent, and let's see, patterns, turn off the fibs and turn on the gaps. Okay. And refresh. All right. So, and what can happen, like see this right here, this is a breakaway gap, but it's actually an exhaustion gap because it turns around immediately. So you have to watch for that. But here's a really good breakaway gap, or it could be a measured gap because the bottom is here, that's halfway, and it gets about twice that distance. Let's look at, this is to Amgen. Let's go back to Apple and see what we have on Apple. Yeah, so here's a breakaway gap right here that was great. Here's a measured gap here. A sort of a breakaway gap doesn't really qualify as a measured gap because it isn't moving into the gap and then moving past it. It's kind of a little turn right here. Breakaway gap there. Breakaway, nice breakaway gap here. Look at this one on the right. This is really a nice one because it really shows, you know, it's got a big gap. Like I said, if I had volume on here, you would see it, and then it just continues. Here's a breakaway gap from the top. So again, it's a great pattern to scan for. And like I said, you can set the strength level on any of these, which we're going to do very shortly. All right, so let me go ahead. We've only got a couple more to cover here, and then we'll have some fun with it. So the volume climax and trend is where you have a lot of volume at some point in the move. If it's at the end of a move, I call that a climax. You got the volume coming up very steeply, chart's going down, and what basically happens is everyone, not everyone, but most people Uh-oh. Okay, I got cutting off there. Okay, that's fine. So most people will have transacted at that point. So all the sellers have sold, all the buyers have bought, and it takes almost no volume to move that chart up. Very, very little. Here's one here to the upside. A volume trend pattern is where you're going down, let's say, you get a lot of volume and it keeps going. So that's a really powerful signal, and typically it means you're about halfway of that move, right? So, right, you come down, it keeps going down, you're probably halfway to the bottom. Here's another one here where you're probably halfway to the top, right where that occurs. Okay, so go back to here and do the same thing really quickly. All right, and patterns, we'll turn off the gaps and turn on the volume climax pattern. Okay, good. And refresh this guy. And I don't have the volume shown. I should probably, I'm going to show my my vast knowledge here. There's volume. Okay, see, this is just easy to do. I should have just done it to start with. There you go. Okay, now I've done it. See, Jeffrey, I actually know how to use it. Okay, so yeah, it's easy. So you can see these volume, all these patterns have color coding where they occur, and you can see right here the volume dramatically rising to meet that point, and here a lot of volume right at that point. So this is going to find those. Here's one straight up and starts to back off. There's your volume climax. This is actually a volume trend pattern. It gets the direction wrong because it keeps going. And a couple more here, but this is a really nice volume climax because the chart went straight down. That volume is right there, just really high volume right at the end of that. You just buy those. Those things happen. And again, the software is trying to find every potential pattern if you have them all running at the same time, like the lowest strength level. So that's what it's doing. So you can look at it and say, well, you know, there isn't enough volume on this one to really be a reversal. It's not enough, and it didn't move into it enough. But it'll flag all of them for you. And like I did before, let's go to Amgen to the right. And you know, you can see this, that's a good look at this. Straight up right there, straight up volume right at that apex. Here, straight up and back right at that apex. Another nice ones over there. And so anyway, there you go. Okay. So I think we've only got one left, I think. Check, yes, sir, one left. Okay, so this is also one of my favorites, this is consolidation. And this is any range that forms after a move. You have a move up, you have a range form, and it's going to break out. Now they can fail. If they fail, they're really good shorts, but usually they go in the same direction that it came from. So it comes up, consolidates, keeps going. And the beautiful thing about consolidations is they typically mark the halfway point in a move. So if you take this width of this thing and you go back about the same amount, you'll find the bottom. And so it should go twice that distance to here. This one, you come down, you go sideways. I use this all the time. It works really well. It's going to probably go twice that distance, you know, down to here. So that's what we call them a measured move pattern. Okay, so this is our last school on patterns. Then we can look at some more stuff in here. Let's bring up Fulgen again, the pattern engine, and I'm going to turn off volume climax and turn on consolidations. Okay. And let's just refresh that. All right. So again, this is looking for any range and the breakout from any range. So this is the loosest pattern in the system. It'll take any range at all that it sees and mark it as a consolidation pattern. So like this is actually a saucer here, but it's seeing that range. That's why it marks it the same here. This is pretty good sideways movement. It is difficult to find consolidations that look like that picture. Just generally in end of day data, you can find them. You know, I can probably find one by the eye, maybe that it missed. Here's kind of one here that broke out to the upside. Here's a much larger one there that should break out to the upside. But generally they're more rare, and that's why we did it this way, so you have more opportunity to find signals with it. Let's go ahead and go over to Apple. And we spent quite a bit of time in this pattern, but you can see here's a nice one. Here's a range right here that forms, it breaks out. Another range here, it breaks out. This one's a failure. And let's see, so range there breaks out, range right here breaks out to the downside. So that's the consolidation. Okay. All right. So that is sort of what, talked about all the 7 patterns, what they do, and of course this engine that we have. And you may be interested in just seeing, let me go ahead and do this here. So now we're going to talk about the tool a little bit, because I know you're interested in looking at that for your trading. I'm going to go in here to the pattern thing, and I'm just going to turn everything on, enable everything. Okay, now, if you're faint of heart, you might want to close your eyes for a second here, because this is going to look a little weird. They're just everywhere. But if you generally look at the direction of the arrows, they're pretty darn right. I mean, 65 to 70% of the time, they're going to be correct direction. But what we can do with this module, because it is based on artificial intelligence internally, looking at the different things about each of these patterns, I can go back in here and tell it, just show me the good stuff. And somebody say, well, Ed, why don't you start with that? Well, because for me, I'm looking for a good opportunity, and I want it to show me any pattern that it thinks is reasonable on a given day, rather than filtering them out. But you may be the other kind of person that really wants to see the filtered patterns. So right here is our rating. This is show everything all the way up to 85 rating. And so let's look at 70 real quick. I'll close this and we'll refresh it. And you should see generally more correct patterns. And you can kind of see they're really pretty good. That's at 70. And I can go up to 80, 85. It starts to get a little unstable at the high end. It's really trying to just lock out everything. So I'll go ahead and do that just for fun here. But let's see, let's go up to, well, 85 is really high. Let's go to 80, close that. But if you're really picky and don't want to look through as many each day, then you can do this. And there's, correct. That one isn't. So 1, 2, 3. So that's about 65% accurate on this chart. And if we go to the next one, Amgen, same thing, yeah. So generally speaking, those signals are very, very good. They're in the correct direction. I don't see any that are not correct, at least for 5 bars. So that's what that does. It's up to you. Now I'm going to try the clicky thing again, see if I can do it. It's just not going to let me do it today. Nope. Well, so a little arrow appears on the chart, and then it tells you what the pattern is over here and how to interpret it. Okay, so the other thing, just a few more things about the module. Looks like I got a little bit of time here. I can take some questions. Hold on, let me pull this down. As far I did want to show you the other configuration options before we leave this. So when I go into here, we do have a default down here, restore defaults. And so it will restore if you've made changes, but these are different terms. So like the short term is a 7-bar pattern, medium term is a 15-bar, long term is 30. And so it's trying to get the pivots to align with those numbers. This over here is only for AI, at our actual AI module. So this doesn't matter. That's not filled in. But so you can choose term, or you can choose longs and shorts, only up arrows, down arrows. So if you only trade, the long side of the market, you can just turn off all these shorts. I could say only show me the really short-term signals. So all of those get turned on. Let's turn off the medium term, and let's turn off the long term. Just things you can do with this that are really fun. And we'll go ahead and get back down to 70 here. And let me refresh this. So these are going to be very short-term signals, very short-term. And you can kind of see that's what it's doing. Just really, boop, 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 boop. And then if I picked long-term, it'd be the long-term signals. So it's really versatile in terms of what you can get out of it. And of course, if I want to go back and fix it, all I do is go in here and double click the thing and click restore defaults. And it will make them the terms that I chose as being the most useful. These are my favorite terms. There's a mixture. And so that's why they're like that. Okay. All right. And 70 is okay. We'll go 70. All right. Okay. So we talked about the strength rating in here, the fact that you can configure the patterns. And then the thing that we haven't shown yet is pattern scans. So there is, in Metastock, of course, this Explorer feature which is great. I think I have enough time to run it. I'll run it on a small list and you can see what that does. But that's how I use this every day, is to run on my favorite list of symbols. You can run it in real time. Just make sure your data is up. You can get data pretty quickly, and you can find real-time patterns in the current market. It's pretty powerful. But I know you've seen the Explorer used, but I'm going to go ahead and do this because I have time by my watch. Jeffrey will cut me off if I get out of hand here. Okay, so let's go to Explorer right here. And one thing I want to make sure I do, okay, I've got 70. What it will do, before I show you this, is that little thing, the Fulgent thing that comes up, the little control jobby where you set things, it's going to find whatever this says. So if you go in here and you turn off everything but gaps, it's only going to find gaps in the Explorer. It's exactly doing what this says. So what I'm going to do is, let's go a little bit higher. Let's go to 65 ready to get more of them, because I'm only going to scan the Dow 30. And okay, it's good now. It's ready. Okay, and we can refresh that. It'll get a few more patterns in it because I reduced quite a few more actually. Okay, so let's go back to the Explorer now. It's configured where it's going to find what I want. And let me just get my index. Let's do US index constituents. Let's do the Dow Jones Industrials. I'll click that. And we don't need a whole lot of bars of data. Current day. Okay, I think then over here, I've got to get my exploration. So I get down to Fulgent. And I'll tell you one thing I really like about Metastock, it is so easy. They've made it so easy to use this stuff. It's just like everything is just right there, and there isn't a bunch of gunk you have to wade through like some programs. So you'll notice you can scan for any pattern you want individually, but this is the one that looks for all of them. So I've got that checked. I've got my data. I've got how many bars to load, use today, and so if I did everything right, it's going to work. All right. And one of the other things about this is it really is. Oh, it's doing the whole. Wait a minute. Oop, it's doing the S&P 500. Stop. Yes. Sorry. Because I've got it turned on down here. I was messing with it. There it is. Oops. My bad. Okay. We don't want to sit here that long. I mean, it doesn't take that long, but for the webinar, it probably is too long. So, okay. Start exploration. Now we can see the blazing speed. I was just about to brag about it going so fast. And then I realized I'm on the S&P 500, not so much. So there's 2, 3. So again, it's searching all of those patterns, all of those time frames on each symbol on the right edge. That's what it's doing right now. So get those questions queued up there, Jeffrey. All right, it's about a third of the way through. And so yeah, so
did you want some questions right now? Okay.
I mean, I can take it. It's not halfway done yet, so yeah.
Would Joseph wants to know, would this work well on an intraday chart?
Yeah. Oh yeah. Yeah.
And do you have a preferred time frame? What works well? Is there a particularly preferred time frame that you have?
I really like 30 minutes. If you're trading intraday, I've never been successful trading the 1 minute chart. 5 minute, okay, but you've got to have wiggle room. These things are volatile. They're going like this, so you've got to get used to trading a time frame that you can stay with. And so for me, it's 30 minutes. Okay.
And then he also says he'd like to, if you can zoom in on the chart, and so he can get a better view of it.
Zoom in, on all this stuff that's on here?
Mm-hmm. Well, on the chart itself, when you're looking at a chart next time.
Yeah, so let's do this. Let me so here's my output. Tell me how, I can bring this back, right? Yeah, I can.
Yeah. Mm-hmm.
So let me just close this Power Console, and zooming in is, I know I can do this like that.
Yeah, just grab that little scroll bar. Yeah, that works.
Yeah, there you go. How's that?
And yeah, you can see that a lot better. So there you go. Okay. Now let me show you how to get the report back. Go ahead and click on the Power Console. Go back to the screen you were on. And then just right click on that Fulgent AI patterns where it says the R. Upper left. Not quite there. There you go. Now there, go to report. Okay.
Oh, cool. Thank you. Okay.
You're welcome.
So it's on all these stocks, and so what we do is we number the patterns. They have an ID, And we have there's a little chart in the manual. I was going to show you the manual as well. It's very thorough. But so I'm not sure what a 502 is or a 501. We're just going to kind of click a couple of them. But some more things I want to show you is it has long and short over here. Then it has in long and in short. Because what we do is we let these patterns run for about 3 bars, I think it is, because you usually don't want to trade it on the signal bar. You want to make sure it gets a little confirmation in the direction that that it should go. It's psychology, remember. So if it's going to go, it's going to go. So that's in long and short, and that'll tell you, how long has this signal been out there. So this one on United Health Group has been there for a day already. I'm sorry, it's in long. It's been there for 2 days. Here's the number of bars. So that's 2 days. Here's 3 days, 4 days, and so on. And then if there is an exit posted on that day, it'll put a 1 here. So the closing price, the ID. And so what I can do, let's just get the new longs, if I can get some here. Let's see. Let's look at in long. There we go. Okay, so in long, I've got 1 bar. So let's look at 3M. And there you go. So it's got a trend line break right there. I need to zoom this in so you can see it. Well, we'll do this. I can pull this left, right? Yep. And so you can see that trend line break. It's this trend line right here. It's finding. We'll just do a few of these. This one has been trading. Caterpillar has been going for 3 bars. And so it's consolidation breakout to the upside, 3 bars. And let's see, this is 2 bars. It is a Chevron, 2 bars. It's a gap. So we got a lot of signals on this. So you would typically, pair those down with a higher strength rating or whatever, but there's a gap right there. I don't know if you can see that, but if I could just maybe zoom in a little bit more here. Yeah, I know this is hard to see on the webinar deal, but you see that gap, it says gap. That's a nice measured gap right there. That is. So little consolidation, that's a good opportunity, generally speaking. Again, no advice on the webinar, but it looks like a decent one. And then let's see, I'll just do a couple more. Goldman Sachs. Yep. So, nice gap. Look at that one. So that one really took off today. Good gap formed, and it is breaking out in that direction. So that's, by the rules of gaps, is a reasonable trade. One more, Intel, and it's 3 bars into the signal from the pattern. All right, and that's a nice one. That's a support, resistance break. So reversal. Sorry. So here's your support level. It is reversing off that level right there, and so that's what it's detecting. Oh, I'm sorry. Wrong. Here. Sorry. Here's the resistance level, and it's breaking through that resistance and going up. So it's an SRB in that direction. Yeah, but it's fun. So you just go through all these, and it's only the Dow 30, so there aren't going to be that many signals in here, obviously. But on a larger list like the SP 500, you'll get maybe, I don't know, 50 candidates, and you compare it down to a particular signal type. You can also, by configuring that engine, just say, I don't want to see consolidations. I don't want to see, just turn them off, and it'll only show you the ones you want to see. Okay. All right, so I think we're good on that. Let me go ahead and exit this. And I've only got a couple more things to show you here, like 2 sort of interesting things. Here's that, the Explorer, we just looked at that, and it's very well instrumented with, in trades. I have 3 tips down here for trading patterns that I also want to impart to you. The first is the most accurate patterns. You've probably heard me kind of crow about these: support, resistance, breaks, and reversals. Saucer. The saucers are extremely good, especially in this software, because it's looking for those really short-term, smooth reversals, so it's really good. And then the volume climax, we saw a bunch of those that were really good. So those are like the most accurate patterns in my experience. The other 2 things are, you want to avoid volatile charts. Trade the less volatile charts, obviously, way better, because you're likely to hit your stops if you're trading something super volatile. And the last one is, and this is really a good thing for Metastock, because there are so many good add-ons for Metastock, different signal generators. I've seen quite a few really good ones. So if you just turn patterns on top of that, here's an RSI 14 buy signal down here. You'll usually see a pattern that confirms that signal. Here's a 50% Fibonacci retracement right where that RSI 14 buy signal occurred, and this is a gap up right there. So it will really help you confirm, I've got a signal from whichever package it is and a pattern to go with it. Okay. All right, I think I am done, Jeffrey. So wait for any other questions.
Yeah,
and,
one more.
We're good. Okay.
Al was hoping you could look at the NQs on a 30-minute chart.
The NQ, you mean the futures contract?
Yeah.
Okay.
I'd use NQ lowercase c1 for the continuous.
Okay, you'll have to guide me because I normally don't do this. So
just type in, just start typing NQ. But except for NQ should be uppercase.
Small detail. Okay.
Lowercase c, and then 1.
All right.
And then hit go. Now where it says D in the bottom, change that D. Click on the D. Yeah, right there. And just change it to 30 minutes.
All right.
And then wait for data.
Nice. Now, if we're really going to do this, we should go configure the engine to be a little bit more selective, but that's fine. Let's go and let it refresh here, refresh, and let's go. Okay, actually, pretty decent signals in there. Not bad. So what I would do is I'd pare them down right now and say, okay, let's look at the 75s and just see what those, just to clear the clutter a little bit, because there's just too many. And then it will tend to find those. Hold on. Oh, it was doing it. I just didn't give enough time. Pretty decent. Here's a support break right there, consolidation breakout there. Some pretty decent profits in quite a few of those signals. This is something I would play with. Also, the different patterns you're turning on, the time frames is the other control. But yeah, that's pretty cool. I should start trading this.
There you go.
Thanks for that. That's really great.
That was our last question.
Okay.
So
awesome.
Let's
great
see.
to have you all today.
Yeah, thanks for coming in, Ed. Let me talk a little bit about how to get this. I do love chart patterns. The one thing I love about kind of being able to automate it is a lot of chart patterns are fairly, what's the word, subjective. Like you could look at patterns and kind of, I see patterns everywhere. So
they are. So you want something to identify, I think, more than what you really want to trade, and then pick the best ones. Hey, look, it worked. The thing I was trying to do. So well, it worked. It worked there. Like that. So no signal at that. Here you go. So it says the saucer. There's that picture from the presentation. It talks about that. There's also a link to a web page that talks about saucers and trading them in here. So, but any signal should do this. Like I guess it's one more consolidation. We hit it right. Nope. Right there. Consolidation medium term is what that is, and it talks about the targets and everything. And again, this page has more information on it.
I love how like you went in and illustrated all the patterns too. It helps a lot. It's very, very cool.
Yeah, thank you.
All right, cool. We'll go ahead and talk a little bit about how to get it. And I actually have, go ahead, sorry, Ed.
No, you're good, thank you.
Okay. I was gonna show this. I have a consolidation. Can you see my screen now?
Let me see. Actually, I don't know where it is. It's somewhere on my monitor, but I have no idea where it is.
It's very similar to what we were looking at, but
oh, there you go. Yes, okay.
Anyway, all right. So I'm going to talk a little bit about the chart pattern engine. And before I let you go, thank you for bringing this over to Metastock. It works great in the platform.
Love working with you guys. You're very welcome.
Cool. Let me go ahead and do this then.
Okay. Thank you.
Yeah, you bet. Thank you. All right. Very cool. Greg, I think your mic's live.
It is. All right. I was about to tell you weren't sharing your screen, and then you went and shared your screen.
Oh, there you go.
Your camera's still not on.
Oh, now all I can see is my camera.
Yeah,
I am big.
I'll just go wait.
Cool. Chart pattern engine, just a great add-on. Comes with exploration, so you can kind of find the stocks that have a pattern. That did a really good job of showing that. The expert advisor, the comprehensive manual. And we actually sat down and we did a 64-minute boot camp. And I just love how well this is put together, how well all of the color coding works, the illustration of things, just great. Here's the patterns that it identifies: consolidations, cup and handles, Fibonacci retracements, gaps, head and shoulders, saucers, support and resistance breaks, support and resistance reversals, tops and bottoms, trend line breaks, trend line reversals. I just noticed that that's misspelled, and a volume climax. So normally this is $14.95. Here at the conference, what we're going to do is we're going to do a special price of $7.97. We'll offer a 30-day money-back guarantee. We'll offer a free trial to Metastock if you need it. So if you haven't tried Metastock before, we've been talking all day about how it can help you scan and identify and find those best trades that are out there. To order, you can call us at 800-882-3040. You can go to metastock.com/salespchat, or you can go to metastock.com/fulgentcpe. So there you go. Abassi asked the question, how do I access the recordings? Also, how do I get access to the promotional specials during the conference? So if you go to youtube.com/metastock, you'll be able to get all of the access to all of the recordings. If you want to take advantage of any of the actual conference specials today, just go to metastock.com/conf promo, and that has them all listed right there. And I'll go and type that out for you. Conf promo. Okay. All right. Very cool. Thank you for the question. Thank you for the interest. Al says thank you. Thanks for the symbol suggestion. That actually ended up working out really well. So I do want to say thanks to Stocks and Commodities Magazine. Stocks and Commodities Magazine has been sponsoring the Metastock Traders Summit since we started it 11 years ago. They've got 17,000 articles. They've made we've got 1.2 million subscribers. They've been publishing since 1982. You can find out more about Stocks and Commodities Magazine if you go to traders.com, www.traders.com. And of course, we're Metastock. And Greg, we are going to give away a prize. So this is the prize right here. This is the, I don't know if you can see it because I can't see myself anymore.
I can see it.
All right, here we go. It's Adrian Mantz's Around the Horn book.
Oh, sorry, excuse me.
That's okay. And it's a $95 book. I've got a few of them left. I'm kind of running out of these actually, but I'm going to give one away to a lucky winner. So let's go ahead and give away that prize, Greg.
All right.
And let me see here. Yeah. Okay. I need a number from you between 1 and 7,547.
According to Google random number generator, 3542.
And that would be Ann L in the US with an AOL account. All right. So
congratulations, Ann. Hey, Jeff, just an FYI, the desktops are sharing on YouTube, but no one's camera is sharing on YouTube. So I think you can see it on GoToWebinar, but the folks on YouTube, you can't see our cameras, but that's okay because you can see the really important stuff, which is the desktop information.
I can fix that real quick because what happens is interesting.
I have no idea how to fix that.
View webcam. Okay. I think I might be able to. Well, I'll worry about it. I'll work on that.
Not a big deal.
I'll work on that right now. I think I might be able to fix that. Greg, I want to say thank you for the help. Metastock.com/conf promo for any of those things. If you're watching on YouTube and you haven't registered yet, go register because that way you can be on the prize list. We have more prizes we're giving away all week. You don't have to be present to win, although sometimes we just say, hey, you had a good comment, I'm going to give you a prize. So metastock.com/traders-conference, go there, register, and you'll be registered. You can be entered in to win our drawing. Also, be sure to like and subscribe while you're watching us on YouTube. Greg, anything to add?
I don't think so, no.
All right. Our next guest is Larry McMillan. Larry is a very, very well-known options trader, almost doesn't need an introduction. Wrote what is considered to be the Bible on options trading. And you'll have to remind me what that is because it just slipped my mind. But it's been a long day. Larry's a good friend of mine, though. We love having him on. I love kind of getting the analysis and insight that he has to offer. Huge, a great speaker. Larry, how are you doing today?
I'm good, Jeff. How are you?
Good. Why can't I remember the name of your book right now?
But options as a strategic investment.
Right, that's it. Okay. I think it's just because it's been here like 9 hours that we've been rolling right now.
Yeah. I know. It's a long day, right? You got to do
Yeah, for
two
sure.
times.
But fun. It's great. It's been going well. I can see your slide. I can hear you. You sound good. So I'll let you take it away from here.
Okay, great. Thanks.
You bet.
So we're going to spend a little time today talking about the market, what our indicators are saying currently. And I'm going to show you a little bit of a flashback of what they showed right before the election. If you know a veteran, I'm sure you do. Thank him. Just a quick bit of background on our company. We started out as a derivatives research firm in 2008 because we had some pretty good calls on the financial crisis. We moved into money management, both on the futures side as a CTA and on the stock side as an RIA. And then we also do option education, things like this, mentoring, etc. I will come back to this page later, but I do want you to know that if you go to this URL, you can download the PDFs of this presentation. The reason I have that as plural is one is in color and the other is in grayscale in case you want to print it out. You don't soak up all the color ink out of your printer. All right, so these are the indicators we look at that are all pretty much telling us some interesting things right now. First and foremost is the chart of the S&P. I mean, that is the market. So no matter what our indicators are saying, this is what what the real result is. So we need to pay attention to that. Equity only put call ratios, we'll look at that in terms of the broad market as well as individual stocks and some futures contracts. Market breadth, we do a fair amount of work with that. And then, of course, VIX and all the associated volatility indices and derivative products. So we'll take a look at all of those. I have a couple of rules. One is that oversold does not mean buy. So right now, we don't have much that's oversold. But the corollary is overbought does not mean sell either. So we are getting some overbought conditions, but not confirmed sell signals. So we always wait for the confirmed signal. So we'll never actually hit the exact top or the exact bottom, but I usually feel that when we do get a confirmed signal, it's going to start working right away rather than just running into an overbought market and selling it and then just seeing it continue to go higher day after day. So here's a 2-year chart of the S&P. I think everybody's pretty much familiar with this. We had a bear market that ended in October of 22. That market was down 27%. So, you know, a true bear market. And we started a bull market there, and this blue trend line connects the two lows from that point. I mean, we're well above this blue trend line and have been well above it for quite a while. We've had a couple of decent corrections along the way. There was a 10% correction in late 2023. This year we had that little spike down and then right back up again, a 9% correction in August. And now we've broken out to new all-time highs. So we did a little work below the previous high right in there at like 58.70. And back here we had done, we bounced off resistance a couple of times and finally broke through. So that becomes support at 56.70. So this 56.70, 58.70 zone should be support if we needed to pull back that far. I don't think we will, but it's possible. But if we were to go below 56.70, then I think we'd have a period of more substantial selling on our hands. This is just the same chart zoomed in a little bit. There's one feature you can see a little more clearly here now. We gapped down on, I believe it was November 1st, and then gapped back up the day after the election, November 6th. So that leaves an island in the wake of things here. When you gap down, trade a little bit, and then gap back up again, what's left here is called the island. That's a bullish island reversal. That's usually a very strong formation. If the market were to pull back to here, which is about, I think, 57.80 or so, that would negate that. It would close those gaps. But for right now, that's a bullish formation that's really just just in place, well, really less than a week. So this just sort of summarizes what I was saying there, but I guess the important thing out of all of this is that we're still holding a core bullish position, and we've been holding that really since September. And we trade a number of indicators, as you'll see here, a number of signals, but we don't always have a core position. But in this case, as long as S&P is above that 5870 breakout level, we'll be maintaining that core. And we would still maintain a bullish attitude, really, unless we fell below 5670. So there's another thing we do with the S&P chart is we draw what I call modified Bollinger Bands. When John Bollinger invented Bollinger Bands, he needed a definition of realized volatility, so he used the standard deviation of daily closing prices. It turns out that the math people, Black-Scholes in particular, they use a slightly different definition, which is the standard deviation of daily percentage price changes. So since we're in the business of option business and we need our implied volatilities that come out of Black-Scholes to line up with the realized volatilities that Black-Scholes is using, we need to use this definition. For the purposes of this signal, though, we draw a plus and minus 4 standard deviation band and a 3 standard deviation band. If the market moves outside the 4 and back inside the 3, then that's a signal. So it's worked very well over the years. If you look at our option strategist newsletter, you can see the cumulative profit in just that one trading system is very large. But we were noticing that we were getting some whipsaws, some reversals. So we added another criteria on it for confirmation, which we now call the McMillan volatility band, the MVB. So here's the current chart of that going back a year or so. The last signal was right here. So this line is minus 4 standard deviations, and the one just inside it is minus 3 standard deviations. So you can see we moved below the minus 4 and then back inside and got the buy signal right there. That buy signal is still in effect. Our target is for it to reach the plus 4 standard deviation band. And as much as it's risen since then, it never has actually touched that 4 standard deviation band. Came kind of close there, but it didn't do it. So we're still long off that signal. We've rolled up our position several times. We use spread sometimes. Right now we're just in a straight long call on SPY, but you know, it worked pretty well. The previous signal to that was a little quicker one. We got a sell signal here back in July, and as you know, the market had that 9% correction in August, so it went down and touched the minus 4 standard deviation band, and that stopped that signal for a gain. This signal was a loss. Blue number letter means it's a loss. It came outside, went inside, and did not make it all the way to the profit area. Eventually, it went back outside again. That stops us out. So we have a long track record with this, and it worked out pretty well. You can draw these on other things. I'll get to that in just a second. So that plus 4 standard deviation band is our target. It moves, of course, as the market is moving, but right now it's at about 60.50. So that would eventually, if we were to jump right up there quickly, that would stop out our long buy signal that's been in place since August 12th. And as I said, we've rolled it up a number of times. But we can do the same calculation in any stock, futures, indices, whatever. So we have a relatively inexpensive subscription service that we will send you daily the stocks or futures or indices that are generating these buy and sell signals. There aren't too many in a given day, usually only 3 or 4, and they're not all confirmed. Those are just the entry points. So on a given day, maybe only 1 or 2 will actually generate a confirmed signal. Anyway, let's move on to put call ratios. These are very interesting. It's a contrary indicator. It was invented by Marty Zweig back in the 1950s when he used to get the put and call volume from Barron's on Sunday. Each of the put and call dealers in those days would run an ad, and in the ad they would list how many puts and calls they traded. He put that together to come up with an indicator. For our purposes of predicting the broad market, we use the equity only put call ratio. That's all stock options that trade. I'll show you why in a minute, why we use that one. There's millions of those nowadays. So, but what Marty noticed back in the 1950s, and this is true, and it's interesting, I've often been asked to speak at an exchange in Europe or Asia where they're introducing a new index option, is beginning to trade options, and maybe they're just making a formal or whatever. So they have some data, and this works pretty much in every country, every index or what have you. But essentially, if there's too much put buying, then people have just gotten too bearish, and it's time to buy the market. And conversely, if there's too much call buying, people have gotten too bullish, it's time to sell the market. So deciding what too much is, of course, is the hard part. But the way we do it is like this. So let's say it's IBM. We sum up the volume of the puts traded that day. Separately, we sum up the volume of the calls, divide the two, and we get the put call ratio. And this is the way Marty designed it years ago. So since puts are in the numerator of the fraction, an increase in put buying will make that ratio go higher. But when are you likely to have an increase in put buying? Well, that's when the underlying the stock is going lower. So the ratio moves opposite to the stock price. The same thing can be verified with the calls. If the denominator of a fraction increases, that will make the fraction go lower. So if the called volume is increasing, the ratio will go lower. But when is call volume likely to increase? Well, that's when the stock is going up. So again, moves opposite. And we publish about 1,650 put call ratio charts on our website every day in an inexpensive area called the strategy zone. And we also tell you which of those is rolling over to a new signal. I'll show you how to determine the signals in a minute. So the so what we usually do, and what we often do in those cases is look for this inverse symmetry between the stock price and the ratio. We keep a moving average on the ratio 21 days because the daily numbers are too volatile. And I use 21 just in case there's something to Fibonacci. But in theory, it should look like this. So all of our put call ratio charts show you the stock price as well as the put call ratio. So on top is the stock price here. So let's say the stock is falling. As that's happening, people are buying puts, forcing the put call ratio higher. Eventually, the put call ratio makes a local maximum, and that is a buy signal for the stock. So then the stock starts to go up, and the put call ratio starts to go down because people are not buying calls. Move over to the left side. People are still buying calls, forcing the ratio lower and lower. Eventually, the put call ratio forms a local minimum, and that is a sell signal for the underlying stock. So that's the theory. When you look at these put call ratio charts, you should see this mirror image. It won't be perfect like that is, but I'm going to show you some charts. You'll see the mirror image that exists. If it doesn't exist, then something else is going on. Could be arbitrage. Could be dividend. Dividend arbitrage in particular will distort these things, or it could be some other form of arbitrage. But you should see that pattern. Now, this is not a current chart, but on top is the S&P 500 index. And on the bottom is the put call ratio using all equity options, all stock options that trade. So you can see here we have this inverse symmetry most of the time, and that's exactly why we use the equity only put call ratio to try to predict where the S&P is going. So here's the current chart updated through last night or Friday night. And you can see the local maximums are marked as buy signals. The last one we had was back here in August. That's been a pretty good one. And now we're getting down to where we've had a local minimum here. And we have a computer analysis program that looks at these. So kind of like a chess playing tree. It looks forward a few days. And so that you don't get hung up on a little wiggle like that, which turns out to be meaningless. But the day that it happens, you're not so sure. So anyway, we got down here. The put-call ratio had reached a level that was as low as anything we've seen since before the last bear market began. And that means, of course, there's a lot of optimism that the put-call ratio is very low. So it started to go higher. It looked like a local minimum. And in fact, we called that a sell signal, but I put it in green because it's pending. So what's happened since then, though, is that the ratio after the election started to come back down a little bit. And again, remember, these are 21-day moving averages, so they don't respond immediately to just a 1 or 2 day movement. But to me, we're kind of in no man's land here. We're not going up, which would be a sell signal, and we're not breaking down to new lows, which would be a buy signal. So I'm not really saying that this is giving us a directional indicator at all at the moment. Now we look at another type of put-call ratio, which is called the weighted put-call ratio or dollar weighted put-call ratio. You need a computer to do this one pretty much. And at the end of the day, what we do is we take each option's price, closing price, and we multiply it by the volume that traded in that option that day. We sum those up for all the calls, let's say in IBM, sum them up for all the puts, divide the two, and we get a dollar weighted put-call ratio. You could do this calculation on a tick-by-tick basis. That's very expensive data. And we tried it for a while. It wasn't giving us any better results than doing it this way. So now we're measuring the dollars being spent on bearish opinion versus the dollars being spent on bullish opinion, which I think is a much more useful statistic, but it doesn't necessarily give you a different buy and sell signals. They kind of occur at the same places, maybe a little bit higher or whatever. So here you see the local maximum, just like we had in the other chart back in August. So that generated this big buy signal. And now the same thing has happened. We look like a local minimum here coming into the election, but then since the election has come back down. So we're trying between these two, I could just call that the November high and the October low. Until it really breaks out of that area one way or the other, I don't think this is giving us much of a directional signal at all right now. We are towards the overbought optimistic side because we're so low on the chart, but this put-call ratio has been much lower than this. You're only looking at 1 year. We have this going back 30 years or so, and it's been much lower than this at certain times in history. Anyway, these have been strong signals over the years, and so we usually take them when they occur. And we're I guess waiting. I don't have a position. Actually, we do have a position based on this right now, but I'm not really aggressively calling this either a buy or a sell until it moves out of that little range that's in at the bottom of the chart. So what do we buy when we get these signals, whether it's a Bollinger Band signal or this put-call ratio signal? So I'm in the business of predicting where the underlying is going. In this case, the underlying is the S&P 500. So we're trading either futures options or more typically SPY options. And I want to have a positive delta. I want this thing to move. I want my call to make money if the underlying is moving in my favor. So the delta of a call ranges between 0 and 1. 0 means the call doesn't move at all when the stock goes up, and 1 means the call moves right with the stock. Well, we don't need 1. That's a little bit overkill. But we do try to get something in like the 0.7 range. So we're buying a slightly in the money SPY call, fairly short term, usually 2 or 3 weeks, depending on what kind of signal we have. And that's what we typically trade with these. If we're doing a put-call ratio signal, as you saw there on that chart, there's only 3 or 4 trades per year usually, maybe 5 or 6, but not that many. So we might buy an at-the-money option, but that still has a positive delta of greater than a half. And so if we're right and the underlying moves in our favor, those deltas increase, and eventually we hopefully build up enough profit to be able to roll the position to a higher strike. So on TV, they spread almost every trade they do. And by spread, I mean this. Let's say you're bullish. So you buy a call at the strike about where the stock is right now, and then you sell a call at a higher strike. That's called a bull spread. And you know, everything is wonderful at first. The stock starts to move up, your spread is making money, and then eventually you get to the higher strike and you completely cut off your profit potential. Well, that's devastating. I mean, you'll never make a huge gain that way. So I don't know why you would do that. The only time it even makes any sense at all to do that mathematically is when the options are expensive. We publish for free on our website every Saturday the implied and historical volatility of everything that has options trading on it, every future, every index, every ETF, every stock. And so you can quickly tell if the options are expensive or not by just looking at their percentile of implied volatility. So the proponents of trading the spread will say, well, you're risking less. That's a completely false statement, because on the bull spread, that your broker will ask you to pay the complete cost of the bull spread, and on a call buy, your broker will ask you to pay the complete cost of the call. So in both cases, you're risking 100%. Now, dollar-wise, yes, they're not quite the same, but you can adjust for that by, let's say, buying 3 calls instead of 4 spreads or something like that. But the advantage of owning the calls, if this happens, if you blow it through the upside, then you can make a lot of money. I mean, earlier this year, I personally had a trade in cocoa options, and cocoa went up so fast that one contract made about $80,000. And there's no way, if you started in a spread, that you'd be able to keep up with that in any way, shape, or form. Now, what happens if you do a spread? Can you mitigate the negative aspects of the spread? We said the spread is a good thing to do if options are expensive. And so we had plenty of expensive options coming in to the election. So you might have put on some spreads, but you can mitigate the really negative aspects of it by doing 2 things. Number one, widen the differential between the 2 strikes. So right now, if we're trading a call spread on S&P, I'll have the strikes 17 to 20 points apart. If we're trading a put spread, I'll have the strikes 30 to 40 points apart, because an out-of-the-money put on SPY is much more expensive than an out-of-the-money call. Currently, to refine this a little bit, we're looking at anything expiring before December 1st, I would not bother spreading in terms of SPY. After that, the options start to get a little more expensive. And so if we're doing call spreads, we're doing 13 to 17 points wide. If we're doing put spreads, we're doing 40 points wide. So the first thing you can do is widen your strikes. The second thing you can do is don't just accept the first profit on the spread. You can roll if the strikes are hit. So let's look at this. So SPY's around 600 today. And let's say you wanted to do a December spread. You're bullish, but you know the December 600 call is pretty expensive. So you sell the 620 against it. Fine. Now you're fortunate enough to have the stock go up. So what's happened here is that little bull spread picture we showed before. You've now gotten up here to 620. So yeah, there's a little profit potential left in your spread, but not much. This thing is going to nail it. So what you want to do is sell the spread you already bought. That brings in a profit, and set it higher. Now buy the 620 call and sell a 640 call, move your spread up to a higher strike. So we do this fairly routinely, and if we get a chance, it would just go into the straight long call. But if they're still expensive, then we would stay with the spread. So you can continue to do this, and it continues to release the upside. So now you can make money up to 640. If you do it again, 660, et cetera, et cetera. This works similarly on the put side. Again, let's say SPY is 600 today and you wanted to do a put spread, you would buy the 600 put and you would sell the 560 put 40 points wide. And then if it traded down to 560, you'd sell that spread, take your profit, and set up a new one with 560 and 520 as your strike. So same sort of thing. We do this routinely. We have standing instructions on our spread positions to take these kind of partial profits. Let's look at some individual put call ratio charts. Now, when we deal with the individual charts, I look for real extremes, not just every local maximum and minimum. So like, for example, this is a chart of whatever IQVIA, but you can see here right here, this is a local maximum, which would technically be a buy signal, but I'm not taking that in a chart of a stock. I wait for these extremes, either the very low extremes to generate sell signals, or the very high extremes to generate buy signals. So you can see this previous buy signal here worked pretty well. This one was a little shorter term, but it worked pretty well. And now we're getting another one. And in fact, the computer analysis program says this is going to roll over here, and that's going to be a local maximum. So that would be a buy signal. It's marked in green, indicating that we don't know how it's going to work out yet. The blue signal here was a loser, but the red signals are winners. And again, this one here, even though it did work out as a sell signal, we don't take that because it's too much in the middle of the chart. We're just looking for the extreme. So that's a brand new buy signal there. This is one it's actually, we've moved on from this one. We got a sell signal there in late October down here, local minimum. And, you know, there have been a sell signal back here that worked pretty well, sell signal part of that. So we look at the chart, though. Sometimes we use technical analysis as well as the put call ratio. And this stock had bounced off 74 a couple of times. So we said, well, we don't really want to take this sell signal unless the stock can fall below 74. And in fact, it did not. It went higher. So we canceled this recommendation and moved on. Here's a recent buy signal in Amphenol. Worked out pretty well. There's a lot of wiggles on that chart, but the two extremes, the extreme highs, which is our buy signals, local maximums, those are, the first one worked out well, and the second one is working out pretty well so far. Here's another one, Builder. This is a sell signal. There was one sell signal last January that didn't work well, but then the one in April worked pretty well. A couple of buy signals worked pretty well, and now this new sell signal is working also. Now, what about futures? We can trade futures this way too, but what we usually do is we look at the futures options that trade on the futures exchange in order to draw the put call ratio. So this is the 10-year Treasury note, TY, and the weighted put call ratio. And so this ratio here is drawn using the Treasury note options that trade on the Board of Trade. So, and we use that to generate the signal. So you can see there was a sell signal back in August, and that actually worked out pretty well. And we don't necessarily, you can, of course, if you want to, go trade the puts on these actual futures, but there's often an ETF that simulates the futures. So an ETF, IEF is the symbol, it simulates the 10-year note. So we bought puts on IEF, and you can see that at first it was going sideways, but then it went down into the election. And so we had a pretty good trade there. Now a new buy signal has arisen here. And so I have to say I actually haven't rolled over to the buy signal yet. I think I'd like to see this thing actually pick up a little bit in price, but there is a new buy signal. So we swung from what you're seeing here, a very optimistic outlook on the bond prices, note prices, to now a very pessimistic outlook. And of course, it's a contrary indicator, so we go the other way. A related market is the 30-year Treasury bonds, and that's symbol US. And again, this is the put call ratio from the Treasury bond options that trade on the Board of Trade. That it gave a sell signal right around the 1st of September, was a good one, and now it's rolled over to a buy signal. And here again, there's an ETF called TLT, which simulates the long bond, so you don't have to trade the bond futures options on the Board of Trade. You can use them to construct your signal, as we're doing here, and then you can trade an ETF that you can trade in your regular stock account. All right, let's move on to the next indicator group, which is market breadth. So there's two things you can do with breadth, and maybe more, but two easy things. One is keep it at running total of advances minus declines. So that would be cumulative breadth, and we call that of some sort. And then the other is to keep an oscillator. So in our case, our oscillator value today is equal to 90% of yesterday's value, plus 10% of today's advances minus declines. And we'll get to some actual pictures of that in a second. But so what do we use for breadth? Well, breadth statistics. Well, New York Stock Exchange data is of course very useful, but everything on the New York Stock Exchange is not a stock. And so we really want a stocks only indicator here if we're trying to trade the S&P or something. And so, yes, there is an operating companies index on the New York Stock Exchange, but we had a much better data set. We did this right around the turn of the century, and we started using the data set of all stocks with listed options as our stocks only data set. So right now there's more than 6,000 of those. So it's a very strong, robust data set, large caps, small caps, NASDAQ, New York. It's got everything in it. So that's the one we tend to use more often. This is a longer term chart, a 10, 11-year chart even, of that stocks only oscillator. You can see up here, stocks only. It's a breadth oscillator. So when it gets oversold, it's marked in green. Now, we were in a long bull market from 2009 all the way up to 2022, so we weren't in the green area very often. Then we went into that bear market in 2022, and now we're back where we're not in the green area very often again. But remember, oversold does not mean buy. So we wait for it to stop being oversold before we buy, and that's exactly what just happened. We're slightly oversold coming into the election. We got the buy signal on actually the day after the election. The data, the closing data was 11.5. We didn't have that in place until after the market closed. And now we've moved slightly into overbought territory, but remember, again, overbought does not mean sell. So I'd like to see this be even stronger when we're making new all-time highs in the market. I'd like to see this thing up here, but it's not, so I can't make it what it isn't. But anyway, it's still on a buy signal, and that's that's what we're acting on. So we're holding a long position there, and that's we'll stay with that as long as the breadth oscillators remain on the buy signals. So well, I just want to point out that this is probably our shortest term indicator. So we do sometimes get whipsaws in this thing. It looks like it's going to be oversold, and then boom, it comes right back out of that situation. So we don't keep a huge position in these, but when it hits pretty good. The previous sell signal was in like October 12th, so that was a pretty good sell signal heading into the election. Another thing we look at is cumulative breadth. Of course, I mentioned that, and in particular, cumulative volume breadth. In other words, the volume on advancing issues minus the volume on declining issues. And what we look for this basically as a confirmation of the market movements. And there are other things we can look for, but in a bull market, we're watching this to see if this continues to make new all-time highs along with SPX. And so far it has. This year it's made a new all-time high 30 times, and so is SPX. And in fact, just last week on Wednesday and Thursday, it made a new all-time high. It did not on Friday, SPX did, and this did not, but one day doesn't make a negative divergence. It usually takes months to set up a negative divergence. I will say that we had, a very classic textbook negative divergence at the beginning of the 2022 bear market, so I could certainly see that happening again, but that takes a while to set that up. That could take up to 6 months or so before you really set up a true negative divergence. And even at that, not every bear market starts with a negative divergence either. Another indicator we look at is new highs versus new lows. Again, we have 3 data sets here. The one that we use for our indicator is the New York Stock Exchange data. But we also keep track of it for the stocks only data set as well as just for NASDAQ. The indicator is pretty simple. When new highs outnumber new lows for 2 days in a row and are greater than 100, that's a buy signal. So the last buy signal we had was on August 15th. We're still on that buy signal. that will be terminated if new lows exceed new highs for 2 days in a row. That they haven't even exceeded it for 1 day in a row. The closest they came was last week, right before the election. They were even. But now you can see the day after the election, 474 new highs on the New York Stock Exchange, followed up with 2 other strong numbers. I'm not sure what it was today. Probably could just take a quick look here. Yeah, I'm showing over 400 again today. So this indicator remains strongly bullish, and it doesn't trade that often. You can see from the column on the right there, it shows how many times it's traded in the last couple of years. Not that often, but pretty good signals, most of them. Or if they're not, they get stopped out pretty quick. So let's move on and talk about VIX volatility and all the things that are happening there. So first of all, on the VIX chart, there's 2 things we can look for. One is the trend of VIX. It should be, VIX in the stock market should be trending in the opposite direction. They are most of the time. And then spike peaks on the VIX chart are buy signals for the stock market. So I guess just one other comment. We're starting to get now VIX is back down below 15. So a lot of times people figure if VIX is below 15 or 14 or whatever, it's overbought and they don't want to mess with the market. But we did one study that showed if you were out of the market the entire time the VIX is below 15 or 14, you would have given up a lot of potential gains. Not even say being short, just not being long. So that's really, just because VIX is low doesn't mean anything. That's just like saying, overbought is not a sell signal. So the only time that it's worrisome is if VIX is low and then begins to rise sharply. So this is a chart of VIX going back a year, and you're talking about VIX being low and then rising sharply. That's what happened in August. We went from a VIX of 13 to a VIX of, it's not even shown on the chart here, 65 or so, and then all the way back to 15 again in just a couple of weeks. We've really never, ever done that before in that short period of time. It was a bizarre calculation. It didn't have anything to do with zero-day expiration options. It did have a little bit to do with VIX, the way they make the market in VIX calls. That affects how VIX is calculated, or VIX puts in this particular case. And if they're making very wide markets, and it can have the effect of this, what you just saw right there. But in any case, all those Bs are buy signals by an indicator system. It's an actual system trade that we have. It has entry and exit rules. The red letters are profits. The blue letters are not, and the green letter is, we just got a new one. VIX went up to about 23 and change right before the election, and then dropped way down here afterwards. So we're on one of these buy signals. They last for 22 trading days, or they get stopped out of VIX, goes back up to a new high. So that's what happened to this one. It was almost into its 22 days, and then VIX went to a slightly higher high, which stopped it out. But once the rules are in place, I can't really change the rules. So you can ignore them if you feel like, but I don't recommend that. In any case, we're on a buy signal here. So that's the spike peaks we talked about. What about the trend of VIX? Well, we call the trend of VIX, we define it as if the 200-day moving average is below both VIX and the 20-day, then VIX is in an uptrend, and vice versa. So last August or late last July, you can see VIX was already above the 200-day. This is the 200-day right here. And then the 20-day crossed over right there. And yes, that did generate a sell signal in the market. That was a VIX trending higher, blah, blah, blah. But then when it came back down, it stayed above the 200-day for all this time until just this week. But a lot of what was happening there was we were starting to get closer to the election, and options expiring just after the election were getting expensive. And while they didn't necessarily get to be VIX options until, let's say, about this point in time, VIX is a 30-day look forward. So in early October, it was looking forward to just after the election. It did influence all of this to give us expensive options. I'm going to show a more specific chart in a minute. So in any case, we're on a spike peak buy signal right now. We're going to consider that to be in place for 22 trading days, or it would be stopped out if VIX jumped up 3 points. On the other hand, that VIX sell signal has finally been stopped out, and hopefully if it resets, we'll get to a more normal definition of trending in VIX rather than just that election event making things seem overly expensive. So we can't trade VIX, but you can trade the VIX futures and the VIX options, which VIX options are actually options on the VIX futures. Although the CBOE just listed futures options on the VIX futures too, so slightly different thing in that you don't have to have a SEC type registration in order to manage money with those. You can do it just as a CTA. In any case, in a bull market, as we have almost all the time, the term structure of the futures, as we look out in time, slopes upwards. So you see this term structure sloping upwards like that, that's bullish. Occasionally, and this happened very badly in March of 2020, during the financial crisis and other times of great panic, the term structure will slope down. That's very bearish. We got that for like a minute in early August this year. Okay, more than a minute, maybe a couple of days, but just a brief period of time. Other than that, it doesn't happen too often. But when it does, you need to do something bearish or defensive, that sort of thing. So here's a snapshot of the current VIX picture. I took these prices this afternoon about 2:30, and you can see that VIX itself is trading at 14.94. The front month futures November is trading at 15.31. So the premium, which is the futures price minus VIX, is 37 cents. That's pretty small, but these futures are expiring on November 19th. I think it's, yeah, the 19th. So, they don't have a lot of time left in them. You can see that each successive futures contract now is trading at a slightly higher price. So this is where that term structure is sloping upwards, and that's bullish. And not only that, but they're all trading at a premium to VIX, and that's bullish too. So this is a bullish picture, not as bullish as we've seen it in a lot of other times, but it's still, I think, suffering a little bit from election pricing hangover, but it's much more bullish than it was, let's say, a week or two ago. Now, if you don't have the futures, by the way, you could get them, quote them, delayed on the CBOE's website. But the CBOE also publishes 6 volatility indices, and there's a 1-day, which is only useful if you're trading the zero data expiration SPY options. But then there's a 9-day index. VIX is a 30-day. There's a 3-month, a 6-month, and a 1 year. And these are priced continuously all day long. And you can see here that the term structure slopes upwards also. And so that's bullish, the upward sloping term structure. I'm going to show you a chart of what it looked like a week ago, so you can see the difference. And remember that what was happening a week ago was not a market prediction, it was a volatility prediction. So it looked like this. The 9-day, which a week ago had options expiring just after the election, and then the 30-day also had those, but went out a little farther. But you can see the term structure sloped down here, and then started to just edge higher a little bit after that. Not only that, but the 9-day was higher than any of the rest of these. So in a real true bear market, like let's say March of 2020, or even a lesser one, sometimes in part of 2022, you would get this, and that would be an oversold market, and you would definitely want to buy that market. Same thing with VIX being higher than the 3-month. But in this particular case, it was caused by that event, the event being the election. The market makers, traders were just looking for the market to be volatile after the election, and they were pricing straddles at about 140 to 180 points in terms of S&P. And that's exactly what S&P moved the first day. So pretty good at prediction. But they weren't predicting up or down. They were just predicting volatility, and that's what this data set is saying. Now, I know some people that perhaps don't follow volatility that closely were saying, well, this was very bullish. You have to buy the market. It turned out to be bullish, but that's not what this was saying. It was just saying the market was going to be volatile after the election. In any case, bullish it was. And so it's still bullish. This construct overall, the term structures are sloping upwards. We'd get a little nervous if the November futures started trading higher than the December futures. They're below it right now, not that far below, but I think that's probably enough. You don't have to really worry about it too much. I don't have time to get into it right now, but there was a thing back in the bear market of 2022. People kept saying, well, VIX is broken because it's not shooting up to 90. Well, it was a slow moving bearish market. It was doing what it was supposed to be doing. It only goes exploding to the upside if there's like panic or something like that. So again, as I just pointed out, so when VIX was higher than the 3-month, that normally is an oversold market that would lead to a buy signal. You might put that down, just use it for future reference. But because this was the election, that's not really why that was happening. The market went up anyway, so if you thought it was a buy signal, more power to you. So where do we stand with all of this? Well, so we just saw we have a spike peak buy signal in place. The chart of the S&P is very strong. It's breaking out to new highs. New highs on the New York Stock Exchange are monstrously high, 300 or 400 a day. The Brent oscillators are on buy signals, maybe not as much as we'd like to see, but they're still on buy signals. This McMillan volatility band, we looked at that on that chart way back in the beginning. That gave a buy signal last August. Is still in place. The construct, we just noticed that, and that's also bullish, maybe not as bullish as it could be, so I kind of slid it over here a little bit. But all these things are bullish. There is no trend to VIX signal right now because the sell signal got stopped out, and we don't have a buy signal. For a buy signal to happen in a trend to VIX, the 20-day would have to cross back below the 200-day. That's going to be hard to do. The only thing that's even modestly, potentially bearish right now is those equity-only put-call ratios. But remember, they made a minimum and now they kind of went like that. So that's really kind of indecisive. So I didn't put this all the way over to the bearish side. It's sort of more towards the bearish neutral side, I guess. But overall, that's a big bullish set of indicators. And as high as we are in the market right now, I think we're going higher. We don't, these things will eventually give sell signals somewhere along the way, but they don't just come out overnight. It isn't like one day's action going to throw all these things over to the right-hand side of this screen. So it's going to take a while for sell signals to set up, and market could be substantially higher by then. We are maintaining this core bullish position. We have other bullish positions too, based on some of those other indicators. If the market were to close, S&P were to close back below 58.70, we'd probably give up this core, but I certainly wouldn't turn bearish unless it fell below 56.70. And most of the time, December is a nice bullish market. December 2018 was not. It was a very nasty, ugly bear market, but most of the time it's bullish. Regardless, we will trade our signals, and we tend to roll our positions when they get in the money. So recently, a lot of our call bull spreads and other call positions have gotten deep in the money. We've rolled them up. That locks in a partial profit, but still retains us some upside profit potential. In the end, we don't make as much money as if we hadn't done anything, if we just left it alone. But on the other hand, if it reverses badly from here, we've locked in these profits. I mentioned this offer. If you go to this website, optionstrategist.com/metastock, you can not only download the PDFs of the presentation, but you can subscribe to each of our top 3 newsletters for a total of $99. You get 1 month of each of them. So those are the daily volume alerts, which I write every morning, the daily strategist, which comes out twice a day, and the option strategist, which is our 33-year-old newsletter, which comes out once a week. And I would suggest you take them, consecutively, not concurrently. So you can just put that in the notes or something when you're subscribing, and test them out, see how you look. All of the indicators that I talked about here today are in these 3 newsletters. We have track records on the website there's a pretty extensive 33-year track record by strategy, or at least by category of strategy, in the option strategist newsletter. The daily strategist has a track record up there, and so do the daily volume alerts. Obviously, past performance is no guarantee, but these system indicators have been working pretty well. And in like the strategy newsletters, we do other things like straddle buys, put credit spreads. We've had some real pretty nice put credit spreads recently on stocks where it's hard to borrow the underlying. The put credit spreads get very fat when that happens. And some other things that are perhaps not so obvious and not just straight speculation. We had a couple of trades prior to the election, one in the DJT EDF, and another in just the broad market, taking advantage of some of that weird election pricing. So another thing that's coming up, and if you subscribe to these newsletters now, you'll be privy to this information, is there's a lot of interesting seasonal patterns that come between, like, say, September of one year and January of the next year. So what we're looking forward to next is some seasonal patterns that happen right after Thanksgiving, and there's actually 3 of them. We kind of trade them as one, but we will be going into a fair amount of detail about how those things actually work. And just in sort of the broad summary is that the small caps outperform the big caps, as well as the whole market going up. Not every year. 2018, not the case, but most years. We also, if you're interested, have a webinar or a YouTube channel, and we put up a comment every Monday. We have a put writing newsletter, just concentrating on high probability, decent return put writes, and then a special situations newsletter as well. So if you're wandering around our website, which is new, this is what the homepage looks like, you can see some of those other things. Those discounts, as I mentioned, are available at the Metastock link. Just one last thing, I just did a 2-part 0-day expiration webinar, and that is available for purchase now. The recordings of those webinars, I did 2 of them. And I think the most interesting thing about that is it includes an Excel spreadsheet that I use for daily trading of these things. And what my aspect is, being strategy oriented, is I'm trying to decide when the options are expensive and should be sold, or cheap and should be bought. I'm not going in every day and just trying to buy straddles and hope for a home run, or sell strangles and hope the market goes nowhere. We're trying to use a more intelligent approach, and not necessarily trade every day either. So that webinar, the 2-part webinar, starts at the beginning, talks about what 0-day expirations are. It talks about these markets where they're very heavily traded, some pitfalls if you're buying or selling, et cetera, et cetera. But if you're interested, take a look at that. Meanwhile, if you need to get a hold of me, these are our contact points. If you're interested in our money management, this would be the website to go to. And I'll just say our minimum account size is $100,000. So do we have any questions, Jeff? I can see some questions here. Oh, this might be the whole day's questions. Okay. Okay, so someone asked, do I look at insider buying and selling? I really don't. I tried I probably tried to put together indicators of just about every statistic imaginable, and that was one of them years ago. But I didn't see where it was showing up as anything useful. So I know some people do, and they use it even in a similar sense, the commitment of traders report in the futures. I don't know. It's just never reached a conclusion with me where I can trade those things. So no, I don't really look at those. Anyway, Jeff, you there? Jeff might not be there.
Well, Larry, this is Greg.
Oh, hey,
in the
Greg.
Studio. I'm honestly not sure what happened to Jeff. There is one while we're waiting for Jeff.
Oh, hello.
Oh, there he is.
Hey, Jeff.
My mic was muted. I've been like, Larry, can you hear me?
That happens. I once did a seminar with the whole thing muted.
CJ wants to know if you offer training videos before joining the program.
I'm not sure what that means. We have a lot of training videos before joining exactly what program. I don't mean, you mean money management? Not really, although we have extensive discussion. And what have you? I see another one. Do you follow Pelosi? Well, I am on that Unusual Whales mailing list. There's a website called Unusual Whales, which tracks a number of things, but one of them is congressional buys and sells, and I think even specifically Pelosi's buys and sells. So technically, yes, but I don't actually recall making any trades based on anything I saw there.
There's an ETF for that.
Right.
Anyway, all right. I think that's all that we have. Can you hear me now, Larry?
Sorry, I didn't hear that.
I said, can you hear me now?
Oh yeah, I can hear.
I think that's what we've got for you. I want to say thank you. I really appreciate your coming in, spending time with us, all that kind of good stuff. Thanks for being here, man.
Okay, glad to be there.
Cool. The website for that again is optionstrategist.com/metastock. If you want to click on the link in YouTube, you can. If you're watching in GoToWebinar, you just click on the questions box. You'll be able to see it right there too. It's in the lower right. Thank you very much, Larry. Appreciate you.
All right, Joe. See you next time.
All right. Goodbye. Okay, let's do that. Make the presenter me. All right. Oh, and let me go ahead and turn on my screen as well. I want to say thank you also for you for being here. It's good to see you. I'm glad you're here. Thanks for being here. I hope you're enjoying it. I hope you've learned a couple of things today. I want to shout out to our sponsor real quick, and you should be able to share the screen, but because we've had some issues, I'm going to just go ahead and double check and make sure I'm sharing the correct screen. I am. CMT Association, been a sponsor for several years now of the Metastock Traders Conference. We appreciate the work that they do. They're a very well-respected organization. You can find out about them at cmtassociation.org. Tyler Wood's coming in on Friday to talk about, like, if you're interested in managing money, if you have assets under management, if you want more responsibilities, if you work for a bank or want to work for a bank, or maybe you just want 3 cool letters CMT to put after your name. In any of those cases, a CMT accreditation can be really, really good for you. You can find out more about that at cmtassociation.org. So big thanks to CMT for sponsoring the event today. Greg, let's have a prize. It is prize of the day time. William says Larry is the best. I agree with that. All right, prize time, Greg.
I'm here.
All right. Actually, I'm going to do this prize a little bit different. I don't actually need a number from you this time.
Oh, yeah?
You know how important it is for people to kind of ask questions and kind of be involved and all that kind of good stuff. It's really good. If you're on YouTube, it's good for the YouTube algorithm. It's good for engagement. And I want to reward that type of engagement. So I'm going to randomly.
Very engaged.
Good. Yes, you have
engagiest.
Yes. So what I'm going to do for this one is I'm going to I got the GoToWebinar comments open. I'm going to kind of scroll through the day and I'm going to randomly pick out a prize. What I'm going to do though is I'm going to give out the Metastock prize. So this will be the prize of the day for Metastock. And Greg, I'm going to have you help me explain the prize. So we're going to give away Metastock. Can you give me an idea of what Metastock is? Have you ever heard of it before?
Yes, Metastock is a fantastic software and data package for speculative traders. It's been in business since like 1885. No, but seriously, pre-Windows software. What was, I can't honestly remember the year we were organized, but I know we've won tasks, Stocks and Commodities Magazine's Reader's Choice Award for like 30 years consecutively.
31 years.
Yeah. And we have one of the most handsome poster boys, that is Jeff Gibby.
So we're going to give you 3 months of that, the real-time version. So that's about a $300 value. We're going to give you 3 months of Metastock Zenith. And Metastock Zenith is a software program that was developed by basically Thomson Reuters. They spent $1 billion on it. It's an institutional quality feed. They developed it to compete with Bloomberg. It's got like 25, it's got several hundred exchanges, all available. News, research, information, 2,500 reporters in about 250 news bureaus. Huge in terms of if you're interested in news, macroeconomics, fundamentals, anything like that, you'll be able to find it in the Zenith product. So we're going to give you that. We're going to give you 3 months of Learn Metastock. Learn Metastock is a website that's normally $99 a month. We're going to give you 3 months of that as part of it. And we're also going to give you a sit down with one of our agents. They'll talk to you about Metastock. They'll kind of run you through the program. They'll help you understand it. They'll help you learn it. And that's the prize. 3 months of all of that. That's kind of the grand prize for today. So
I would say that is absolutely the grand prize for today. That's an awesome prize.
Yeah. Rudy says Larry is very dope. Okay, so here's what I'm going to do. I'm going to kind of just scroll through these comments. We've got a lot of them today. All the questions that you've asked throughout the day. And I'm just going to randomly pick somebody. Let's go ahead and do that. I'll just pick over here. You look at Corey. Corey's our programmer. I'm just going to scroll a little bit. All right, and then I'm going to, and then, yeah, okay. It's Michael J. right here. I'm going to go ahead and put you on the list for that. So, Michael, I'll reach out to you next week to kind of get the information that we need. And you're the prize winner. Thank you for commenting earlier. And let me just make a note of that real quick. Thank you, Greg. I appreciate it.
Congratulations to Michael. That's a great prize. And I'll bow out right now, Jeff.
All right. Thank you very much. I'm going to scroll all the way. Man, I had to. Okay. Very cool. CJ says to understand your program as mini programs, just dump with no orientation. Actually, if you're interested in Metastock, we want to make sure you're using it as a subscription. So not only will you get Metastock, you're going to get a training program called Unleash the Power Metastock that has a bunch of videos to use it. But to make sure that you understand how to use it, what we're going to also do is sit you down. We call it a white glove service. We'll have somebody sit down with you. They'll walk you through the program, answer any questions that you've got. They do a really good job with it. Because, you know, if you're going to subscribe to Metastock, like if you do the DC version, it's like $75 for 3 months, right? It's not very much. That's going to get you, that $75 is going to get you going until February 11th, right? We want you to be customers of ours for decades. But so many of our customers have been using us for decades. They've been rating us as #1 in our price category for decades. I've been using Metastock for as long as I've been here. I couldn't trade without it. And we want you to kind of be a customer and just as loyal as all the rest of the customers that we've got. And we're grateful for those. So if you sign up, you're going to get all of that stuff. You can do that at metastock.com/conf promo. You can go to metastock.com/sales chat. You can call us at 800-882-3040. There's the $75 option for just basically the end of day version. There's the $265 for the real-time option. And either one of those options is going to be well under $100 a month for 3 months, right? If it's helpful for you, you're definitely going to keep it. And I'll tell you that there's a reason it's been rated #1 for 31 years straight. And I don't think that's just because, you know, I think it's because it's very, very helpful. We have so many customers that have been with us for decades. There's a reason they keep paying for that subscription month after month after month. If it's helpful, it's worth the investment. Metastock.com/comp promo, 800-882-3040, metastock.com/sales chat. So there you go. All right. Our next presenter, our next guest, our next expert is Rob Booker. Rob's a friend of mine. We've had him in a number of different things. He has a very interesting story around how he created the Knoxville divergence scan that we created. I'm not sure if he'll share it today, but he always loves to talk about pivots. He's a great presenter. We always love to have him. Rob, let's get you started.
All right, just testing out the microphone here. Hi, everybody.
I can hear you.
Jeffrey, how you doing?
Yes, I'm good. How are you, man?
I'm super excited to be here. I'm so happy to see you. Here we go. I'm going to share my screen in just a second. I think I'll be able to do that. I just wanted to say hello to you. Am I the last speaker today?
Yes.
Okay.
You are.
We can go until midnight. No big deal. Okay.
You can take your time. I'm here for it.
So I love audience participation. We love to hear from you. So if you can, in the chat box, just let me know where you're from. And I think I can see the questions okay, so I'd love that. All right, and now I'm going to share my screen, and we're going to get this party started. We're going to get all of you out of here on time, or maybe even a little bit early. And here we go. I'm going to look here and see if I do this correctly. You know, I'm kind of a go-to webinar pro. No, I'm just kidding. From the old days. All right, there we go. I think I'm sharing my screen. Can you see that?
Yeah, I see the non-expanded view, but I think that's what you're trying to show right now.
Perfect. Yeah, and we'll expand it here now. We'll go.
Okay.
Go full slideshow.
Jared says, hello, Rob is the best. California here.
Not the best. Oh, there we go. There we go. Jared, how you doing, man? Joseph's here from New York. Gentry's here from California. So Joseph was the first, Joseph Mohan. Joseph, if you want to type your email address to the moderators, not to the whole group, we'll send you $100 for actually participating in the chat. That's how important it is. All right. So next time we ask a question, maybe we'll get more participation. We would love that. My name is Rob Booker. I'm here with you from Austin, Texas, and I'm excited to be here with you. I don't sell anything, and I've got a ton of free stuff for you, and I'm sure Jeffrey and the group will post this link inside of the chat a few times for you. It's just a ton of free stuff. There's no upsells, there's no credit card form, there's no spam. I'm not going to write you a message 3 days from now and tell you I've got an alert service or whatever. I love everybody that's presented. I think Larry was amazing. I loved what Larry was talking about. I'm thinking about checking out what he's doing with 0 days to expiration options. Listen, it's a free country. I just don't have anything to sell, and I just thought I would mention that right off the bat so you know that everything that I'm going to do is free. There is a giant amount of free stuff if you start at that link. There's free alerts. We're opening up our options alerts for free. That's not like semi-free, it's all free. We're opening up all of my old courses for free. I just don't have time or interest in marketing anything right now, so I'm just starting to give away everything I've ever taught and done, just because it makes people happy, and also we just can get right down to the education. So great to have you here. Welcome, glad to be with you. I make money in 2 ways, short selling and selling puts on high quality stocks. We're going to talk about both of those. If you've got some questions about short selling, we'll probably mainly talk about how I identify and look for super high quality businesses on which I can sell puts, and I'll describe that a little bit, and I'll tell you a little bit about more what I do. I love Metastock. I love Jeffrey. Jeffrey and I have been working together on and off for, I don't know, 15, 16, 17 years, maybe, long time. I want to kick things off here and kind of let you know what we're going to do. Today we're going to talk about the winners and losers from the election, and I think I've got it down pretty solidly, and I think you've probably heard some of it before, but maybe not all of it. And I want to give you maybe a percentage likelihood that we're going to see a significant market correction and what to do about it, and a strategy that I like to do, In fact, I'm going to mention this here, UVXY, and don't let me forget to talk about that. Jared and Katie or others that know me, don't let me forget that. I also want to just show you my trading accounts from the very beginning here. I think it's important that if somebody's going to try to teach you that you know that they're trading with real money, I think it's not actually as important that they're making money, because I think what's really important is that they're actually putting their money where their mouth is, and everybody goes through losing streaks and whatnot. So that's not as big of a deal to me, although it's probably a big deal to them. Okay, so we're just going to look quickly at my trading accounts here. This is Kinfo. This is a website that helps to track performance. It's tied to 2 of my 3 accounts. These are all third-party connected. You're going to see the accounts also. I'm going to show you the accounts, not just this screen here, but I just wanted you to see. I traded a little bit of DJT. That was actually just the other day. CYN, Qualcomm puts. That was a nice win. ARM puts, CELU. So that's some short selling and some options. This is my Cobra trading account. It's always really small, so it's kind of hard to see. I'll take a screenshot of this so you can see what I traded today. I was going to say I'm not even sure that my account number is, but it is hidden. I did that. Finally got that right. These are all short sells: GDC, GOVX, REVB, and RSLS. This account has $665,474.73. I never use all of that margin. I'm super overcapitalized. For every trade I take, I've used maybe 1, at the most 1% of my margin. I'm always ready for something to go wrong and to trade my way out of trouble. That's one account. The other one is Trade Zero. So this is another account I do some short selling in. I don't have any open trades in either of these 2 short selling accounts. I didn't even trade in this account today. I started this account in January with $4,000, and these are all short sells. There's no options trades here. It's all short selling. I love short selling. People say it's dangerous. I say losing money is dangerous, and risking money you can't afford to lose is dangerous. And this is my Robinhood account, and this is for all super long-term positions. These are stocks that I buy and hold for a long time. And you can see these are my favorites right here. And I'll tell you why they're my favorites, and we'll talk a little bit about this right now. All of these positions except for one are underwater right now, and it's no big deal to me. These are positions I'm willing to hold for a year or 2 years. Vale is the world's largest iron ore producer based in Brazil. I think commodities are generally undervalued, and if I'm right, commodities will still explode for a long time to come. This is Kraft Heinz, one of the safest stocks in the world. I love to sell puts on Kraft Heinz. This is ConAgra. I would like to be out of this position. I know it sounds really esoteric and nerdy. It sounds almost stupid, but they have an issue and a problem growing and profiting from their frozen foods line of business, which is really detailed. So I don't want to hold this trade any longer. That one's, I think it's my largest open loss right now. And I hold 10,000 shares at $31, approximately $31. And then IMMR, which is a super cash flow positive biopharmaceutical company. I love this stock. I would like to own more of this stock. This trade is currently profitable, and I would expect this to, I think this stock is probably going to 15 bucks a share, $14 a share. We're going to look at a lot more of them. Those are my long-term positions, and they fluctuate a lot. I can be up 10,000, 20,000, down 10,000, 20,000 at any given time. And this is all meant for like long-term growth and stuff. Okay, enough of that. I only show that to you just to tell you that I trade and just to show you the trades that I take and what I'm doing. And I don't want to spend any more time on that. Okay, we're going to come back around to UVXY, and please don't let me forget, because this is the way that I am beginning again to plan the big trade. And I mean the big trade. The biggest trade that I ever took was a win on UVXY right near the COVID crash. So that's 4 years ago, 3.5 years ago, or whatever. I took a big trade on UVXY. Not because of COVID, and I'll show you why and what and how, and I'll explain the whole trade to you, and we'll go from there. That'll come at the end. All right, winners and losers from the election. I've been looking forward to sharing this information with you. I want to talk quickly about this, and I would strongly recommend that you take some notes. Remember, I don't make any money from this, and I've got there's nothing in it for me except for just explaining to you my reasoning here. So I've been trading for 24.5 years now, and I've lived through like 3 crashes, 5 total if you count like Chinese flash crashes and whatnot. And then, you know, a really, really super long bull market. All right. The winners from the election are cybersecurity. Number 1 on my list is cybersecurity. And the number 1 stock in cybersecurity for me is Checkpoint Software. We're going to look at the chart in just a little bit. I think the likelihood that Checkpoint Software is acquired by Microsoft or a consulting firm, one of the big consulting firms like KPMG or whatever, I think the likelihood, or IBM maybe even, I think the likelihood that Checkpoint Software is acquired is super high, 90% or better. Cybersecurity is, other than drone warfare, it's the number 1 style of warfare, and it's the number 1 risk on our utility infrastructure, on our airports, on our transportation systems, on the electric cars with self-driving features and whatnot. So cybersecurity is number 1 on the list, and I haven't heard anybody talking about that. I think I'm maybe the only one talking about that right now, and I could be wrong, but I have a favorite stock, and I have a reason for that. I think that when you look at what's going on around the world and the likelihood that China, Iran, Russia are all targeting certain parts of our infrastructure, or willing to do, or capable of, or have a history of doing cyber attacks, I think you're going to see cybersecurity investment go through the roof, especially for companies you haven't heard much about that from before. All right, number 2, defense stocks. I'm apolitical here. I don't care who you voted for. I love you all very much. I don't argue with people about politics, and I don't argue with people about really anything anymore. I really don't care to argue with anybody. So please take this all with a grain of salt. I think that you're going to see defense spending increase simply because of the fact that Republicans control basically the ones who pass the laws, the ones who implement the laws and enforce the laws, and then the ones who decide if the laws are lawful. You got the whole all the branches of government are controlled by Republicans, and I think that's very bullish for cybersecurity and for defense stocks. I think if you can find a public small company that specializes in building drones for warfare, which I don't think exists, that would probably be my number 1 stock in the world right now. It's unfortunate, and I hate all the conflict, and it bothers me a lot, but I think that's going to be a big, big winner. You're going to see defense spending go through the roof. I think you're going to see us sell a lot of weapons to our allies. I think you're going to see a ton of that. Okay. Number 3, I think that Tesla's going to be a big winner. That's just partially because of Elon helping Donald Trump get elected. I think you may see electric vehicle credits. Strangely enough, you may see that. You may see those credits increase even. I think that's a 3rd possibility. I'm not as sold on that yet. We'll see where we go with that. And then artificial intelligence. I think that this is still not a bubble. It's not a bubble until nobody thinks it's a bubble anymore, or whatever. And so AI, I think NVIDIA goes into that category big time. NVIDIA is the most valuable company in the world by market cap right now. I think NVIDIA is on the way to being a $200 a share stock and a $4 trillion company pretty easily on the back of just enthusiasm for lower tax rates for corporations and blah, blah, blah. Okay, the big losers, social media, especially Meta. But I think Google is probably an even bigger loser on the big tech front. Google is about to get broken up. I don't think Donald Trump is in any mood to save Google from its own sort of, like, it became just bigger than people were comfortable with. I think that's a loser on the price of the stock temporarily, but a winner for people who buy it on the big dip, because Google's going to get split up, and then you're going to own a piece of cloud software company, maybe a hardware company, definitely an Android software company and a search company, and maybe even a digital advertising company. There's like three to five different pieces that it can get broken up into, and we haven't seen this for 110 years, and we're about to see it again. We're going to see a big company get broken up, and then we're going to see that each one of those individual companies that gets created, of which you will own a share of it if you own Google. Just like AT&T when it got broken up, or Standard Oil when it got broken up, all the individual parts became ultra super valuable and then combined back again later on. I think we're going to see all of that repeat itself. I think you need to be on the lookout for Apple, and next on the list is Amazon, is a huge target also. And I think you're going to see Amazon get broken up into cloud computing and merchant software and online store. You're going to probably see that also. And then I think the other big losers are going to be the offshore manufacturers, of which there will be far fewer. And you're already seeing companies do whatever they can to bring manufacturing back to the US, or at least out of China. And the little loophole where companies were doing the final assembly in Vietnam and then shipping it to the States, that's over. So I think another loser, and I hate to put it this way, is Vietnam. Like if you trade emerging market stocks or whatever, that's been I don't know if you followed that story, but that's been an emerging market economy that has done really well as the last phase of manufacturing has been done there. All right, I'm going to look at a few stocks here that I love, and we're going to start with Checkpoint Software. This is particularly interesting to me. For those of you that trade options, they don't do weeklies, they only do monthlies. I love this stock. It's a company worth about $21 billion. It's super cash flow positive. This company is an ultra cash flow positive company. It's one of per share and per dollar per share, one of the top 5 cash flow positive companies in the world, period. And it's a $21 billion company market cap. I think it's a massive acquisition and takeover target. You're going to see mergers and acquisitions activity just go through the roof already, because Linda Khan is going to get fired as the chief of the FTC, and they're going to bring somebody in that is either pro mergers and acquisitions, or they're going to bring nobody in. And everybody keeps talking about who's going to replace her. I wouldn't be surprised if the Commodities Futures Trading Commission, the SEC, and the FTC don't have anybody leading them before March of next year. And I wouldn't be surprised if the CFTC doesn't even get staffed. I wouldn't be surprised. We're going to probably see some really, really big changes. But the number one, if you could bet on it, there's 2 things that I would bet on. One would be Linda Khan getting fired, like 1,000%. And then number 2, there being a massive uproar from the left about that. But the truth of the matter is, almost nobody that's left even likes her leading the FTC. Why do I say all of that? Because I'm going to next talk about 2 other companies that I think are either acquisition targets or acquirers. So Checkpoint Software, it's trading for $178 a share or so. It dipped after earnings. I don't care why. I just love that it did. And I'm going to begin the process of doing 2 things. I'm going to start selling puts. They only do monthlies, so I'm going to start selling the $170 puts, maybe the 175s. When you sell a put, you get a premium, and in exchange for that premium, you make a promise to buy the stock if it drops and stays below the strike price at the time of expiration. This is a big deal because that's the way I buy stocks. I think the simplest way to buy a stock is to just go out and buy the stock. The more intelligent way to buy the stock is to find a price that you think is fair for the company, lower than what it's trading for now, and sell a put, and then you'll get some premium. And then if it falls to that price, which you said you liked, you get to buy those shares, and you get to keep the premium that you made for selling the put. So this is a cybersecurity company. There's no danger that it will stop being cash flow positive. There's no danger that it will be negative on earnings. This is one of the best run, highest cash flow positive companies that exist. When somebody says, oh, I saw you on Facebook on some ad that some company is still running with my likeness in it, I don't sell anything. If you see an ad from me on Facebook or TikTok or whatever, that's not me anymore, and that's an ad somebody paid me to film, probably paid me $10,000 3 years ago, and they're still running it. I don't have anything for sale. But when people see me and they ask me, what stock do you like? This is the one I always say. I love this one. I think it's, like I said before, I think it's the #1 acquisition target on my list. #2, Jazz Pharmaceuticals. I'm so mad at myself for not buying this at $100 a share. This is a stock that I think this company will be acquired for $140 to $175 a share by Pfizer, Merck, Eli Lilly, probably not Novo Nordisk. They only work 4 days a week. They probably don't have anybody that even cares about mergers and acquisitions. Jazz Pharmaceuticals has an excellent pipeline, is actually profitable, and has a stable pipe, not just a pipeline, but they have a stable of actual profitable drugs on the market. They're not waiting for a drug, well, they're probably still waiting for a drug to get approved, but they've already got some great stuff. I love this stock. It's my #2 stock. No one talks about it. I haven't heard anybody ever mention it. I bet this is the first time you're ever hearing about this company. Cash flow positive, earnings positive, coming up off of a dip. I couldn't love this more. Also, now we're finally going to get around to me talking about, I don't have my drawing tool up, so hold on, screen brush. So we'll see here, perfect. So we'll go slideshow again, and I'll see if I can draw on the screen. There we go. This, we're going to talk about this for a minute. This is up around $150 a share. So #1, I'm going to start selling puts on Jazz Pharmaceuticals at 120, so that if it falls and stays below $120 a share, I will own some shares. It might not dip there. I'm also going to buy a leap. I'm not going to load up on this because I think that's too much like a lottery ticket. I am actually going to ask somebody who lives in Vegas to put $1,000 on BYU to win the national championship, which $1,000 will probably make $100,000 or some crazy stuff like that. Just because I went to BYU and there's 0 chance that we win the national championship, but would still love it. Okay, this is kind of a long shot though. To buy a leap, I would buy a leap with a 1-year expiration and $150, $160 strike price. I love this as an acquisition target, and I think it's going to happen. I think it's very likely to happen. So that's Jazz Pharmaceuticals. Symbol is JAZZ.O inside of your Metastock platform, or JAZZ. Costco. Unfortunately, this is too expensive right now, but I love this going to $1,000 a share. I think this is probably the world's best run company, period. The problem is it's already super expensive, and there's not a lot of meat left on the bone. And by the way, if you do want to talk about any particular stock, we could talk about any stock that you'd like to. Would be happy to. And then Liz, if you're here, Joseph wrote his email address, and you can remind me later, Liz, to get you his email address so we can send him $100. Oh, Nick Spore says we're practically neighbors. Great. Let's have breakfast at the proper hotel, right? Or the Four Seasons, you pick. All right. All right. So Costco, best run company in the world, easily cash flow positive, earnings positive, maniacally loyal and faithful customers, but it's way expensive. It's too expensive to buy. I need Costco to dip to $800 a share, which I can't imagine why it would do that. So that's unfortunate. And then last of all, IMMR, another earnings positive and cash flow positive company. Let's take a look at what IMMR does. I got it. I told you what, a moment ago, I told you what they did, and I messed it up. It's not what they do. I confused it with another biopharmaceutical company. Immersion Corporation is the leading provider of touch feedback technology, also known as haptics. When you click the button on your MacBook and you feel, when you click the mouse pad and you feel it bounce, that's actually not bouncing and it's not depressing. It's actually an electronic impulse popping up to meet your finger, which is weird and cool. When you do the same when you type on a phone keyboard and it does that, you're not dipping into there and feeling that. That's an electronic impulse popping up. Haptics are a big deal. Haptics are going to go inside of rocket ship displays, Tesla displays, all kinds of displays, all kinds of stuff. They have 0 chance of diluting their shares. Institutions own 57% of the company. Look at the institutions that own percentages of IMMR. BlackRock, Vanguard, Geode is big, State Street is big, Morgan Stanley is big, American Century is big, Renaissance Technologies, that's gigantic, and it goes down the list. And these are not small percentages. These are full percent or more, hundreds of thousands of shares, Bank of New York Mellon, and so forth. So we got big institutional holders, an awesome, awesome line of business. They do make money, and they're going to probably raise more money. And I just love, I absolutely 100% love this stock. I own this stock. I'm already profitable on this trade. I bought it on the dip. I bought it around, I sold the $8 puts and I got assigned at $8 a share. I love this stock a ton. So you want to take a look at that, be my guest. These are my favorites. This one has a lot more ground to make up for. Let's talk about what I talked about a moment ago on Jazz. This is a monthly pivot. In Metastock, you can plot pivots on a daily, weekly, or monthly basis. And the middle level is the pivot point. A pivot point is last month's high, low, and close added together and then divided by 3. And it becomes a magnet for price. And in most months that a pivot is created, price will touch the pivot. You'll see the candles actually hit it. They might hit it a couple of days before the month and blah, blah, blah. Sometimes though, a pivot is not hit in the month that it was created. These vertical lines are just connecting the pivots. They're not useful. It's the horizontal line you want to focus on. So this is a missed monthly pivot on IMMR at just over $11 a share. I think I'm going to give you a percentage. I'm long the stock, so I'm putting my money where my mouth is. I think there's an 80% likelihood that it hits $11 a share before February 1st. So it's a well-run, well-managed, profitable company that's on the cutting edge of technology. We're going to look at a few of these. Craig Howard says, says, can he mention shorting these stocks? I can't mention shorting these stocks, Craig, because I wouldn't short any of these. Now, Craig, if you want to spend some time, we've got plenty of time. If you want to spend some time talking about shorting, I will show you what I do there. Also, if you go to robbooker.com/free course, you will see, I'll just type this in here. You will get access to the free course that will teach you how to do that. And I doubt you can see each other's comments, but there's a bunch of my friends here that short stocks together with me. Okay. So that's IMMR. So those are like a big 4 for me. I love those stocks, and I think those are Costco's too expensive to buy, but I think Checkpoint Software, Jazz Pharmaceuticals, and IMMR are totally, they're all still in an area or a price that is fair. All right, I'm just looking at the comments here. Do I like Snap? Let's pop up. Let's pop this up. I'll talk about Snap for a few minutes here. Okay, Snap.
Okay. Okay. Snap.k.
Snap.k. There we go. Thank you. Okay, so this one's interesting, and I'm glad you brought it up, William, because Snap has a really interesting situation going on. I'm not interested in buying Snap, but it's got a missed monthly pivot up just above $15 a share. And with the market being on fire and interest rates coming down, I actually think it's completely reasonable that it could go straight to that number. But I don't love Snap's prospects after that. So I wouldn't be a long-term buy and hold investor on Snap, and I'm not going to trade it at all. Like, under no circumstances am I going to trade it. However, I do think it's likely and possible that it will hit just over $15 a share. So if I think it's likely, why wouldn't I do it? And that's because I only trade ultra super cash flow positive, earnings positive companies. That's all. I don't, and Snap doesn't, it doesn't rise. It's not even close to being on that list. So Save is was another one. If any, Alvin or anybody else, you want to look at a stock, just let me know. I'm happy to look at whatever you want to look at. So do I do .n, .k? I'll do .k, since we did that a second ago. So Spirit Airlines, acquisition target, right? Right, didn't someone try to buy Spirit? I don't remember who it was. I don't trade airlines, but this has a missed monthly pivot up at like $9 a share. I think with the mergers and acquisitions climate, what it is, I would say $6, $7, $8 a share is a pretty easy to believe number. That wouldn't surprise me at all. Probably 5 is fairer, but it would not surprise me that somebody, if they didn't already, I thought there was already an acquisition kind of thing. Didn't JetBlue try to buy Spirit and then it got rejected, or who knows, whatever. I think it's all going to happen again. I think you're going to see other terrible, unsafe, uncomfortable, and dirty airline. You're going to see some other like Greyhound bus in the sky offer to buy Spirit Airlines. And if any of you work at Spirit and I've just offended you, I apologize. I shouldn't have even made that joke. Okay, so that would be Spirit. So what about MicroStrategy? What about Mara? What about the Bitcoin miners? Great question. I have proven to be the world's least intelligent Bitcoin trader. I'm just absolutely terrible at it. I've never gotten it right. I've never, ever, and I probably won't ever get it right. So I don't trade or own any Bitcoin. The crypto that I own is locked in a Coinbase account that I can't access because I've lost my two-factor authentication app for it. And all I have to do is upload a passport picture and some personal details and they'll let me back in. But I am purposefully keeping myself locked out of it because I own some Bitcoin and I own some Ethereum from a long time ago. And I don't want to touch it. And I don't even remember how much it is. It's as little as $1,000 and as much as $100,000. It's probably closer to the 100. I'm not touching it. And I'm terrible at timing the market on crypto. I'm absolutely horrible at it. With that said, I think you're in the golden age of crypto. If you thought the golden age was when it, this is the golden age of crypto. Bitcoin's probably going to hit, somebody said Bitcoin might hit $100,000 next year. I'm like, Bitcoin might hit $100,000 next week. Like, it's unbelievable. And there's a missed monthly pivot or a pivot up in the $30 a share range on Mara. That would be my target, but I'm not going to trade it. Just because when I say, oh, I love crypto, you can guarantee that it's going to crash. Like, I'm just so good at picking exactly when it's going to crash. How do I scan for cash flow positive companies? That's a really, really, really great question. I go through every major company, and I would say S&P 250, S&P 300 company. So 300 are the top market cap companies in the world. And then like if there was such a thing as the Russell 200, I read every single one of their 10Qs and filings. And here's how I do it, Grace. We'll stop there for a second and I'll show you how I do it. So I don't know if I'll be able to do it this way, but if we go to, let's take IMMR as an example. This is a great example. I go to filings here, and you can download the filings from any number of like a zillion different places, right? Edgar, the SEC website, and whatnot. So here on Dilution Tracker, I can go to the 10Q, and I can see here Immersion Corporation. I can click on PDF. and I can save this as a PDF. I think I can do Checkpoint Therapeutics. I always get this wrong. CHKP. Checkpoint Software Technologies. Here we go. There's the 20F. 20F is a filing from a foreign outside of the US company. So I'm going to download their 20F. Then what I'll do is I'll go to AI like Claude or ChatGPT. And what I will do is I will upload, oh, long prompts. Oh, that's fine. I don't care if it takes a minute. Can you please summarize this SEC filing for me and tell me the strengths and weaknesses of this company? This is a great way to do some first-party research, Grace. This is a way to simplify the process of actually doing a bunch of research. Okay, here we go. Total revenue, operating margins, financial strength, strong cash position, and there's what you get. There's where you get it. Strong $2 billion in cash and investments, 0 debt. So Grace, when you're asking me how I pick these companies, they have tons of cash in the bank and they have 0 debt. Like the less debt, the better. I mean, the debt picture on Checkpoint Software is so phenomenal. Think about that from the standpoint of acquiring a company that has no debt. I mean, they're cash flow positive and they're just spinning off cash. IBM could buy Checkpoint Software and just leave it alone and treat it as a Berkshire Hathaway kind of subsidiary that they just send money up the chain. So that's how I do it. And all you do is you go to the SEC website, you go to the latest 10Q, 10K, or 20F filing, save it as a PDF, upload it into ChatGPT or Claude or whatever, and ask it to summarize it and look for the debt position and the cash position. And I do that for like 400 companies. So if you're wondering what I do all day long, I read. I just finished Live and Let Die, and I just finished The Overstory, great book, by the way. And I just finished Demon Copperhead, that was great. So I just read these filings and other books all day long. So that's how I do it. Let's see what else. We have some other comments here. What are your thoughts about uranium sector? I don't have any thoughts on the uranium sector. It's something I've been meaning to look into just because I know it's so important. I keep wondering if other battery technologies are going to overtake that. Which is the best platform for crypto trades? I have no idea, CJ Shaw. I don't have any idea. I don't know. AAOI and IEX. I'm happy to look at a stock if you want me to look at it, friends. Let's go over here. AAOI. I'm going to have to look in to see what this company does. Wow, nice move there. What does this company do? AAOI. Okay, institutional ownership. Okay, friends, I want you to look at 2 numbers here. You can find these numbers on Dilution Tracker, Yahoo Finance, and other places. These are 2 really important numbers. Grace, when I'm evaluating a company that I want to buy and hold long-term, especially smaller cap companies like Russell 200 companies, small and mid caps, there's 2 numbers that I look at that I think most people ignore. Number 1 is institutional ownership. That means banks and other financial institutions and hedge funds that own the stock. The higher the number, the better. What you'll notice is terrible companies like a company I shorted today, GovX, institutional ownership 2.1%. No institutions care about GovX. They don't want to own it. They don't care about buying it. On the other hand, AAOI, this is very healthy. 64% of the stock is owned by institutions. They're not going to short that stock. They're not going to lend that stock out. They're not going to dump that stock if things go badly. So love that. I love a high institutional ownership, especially anything over 50%. And I love short interest above 10%. That means there's the possibility of a short squeeze. Just love that. I love, so just whoever brought up AAOI, Barry, love it. I love a market cap over $1 billion. I love that. This is really neat. Applied Optoelectronics is a leading developer and manufacturer of advanced optical products. Beautiful. BlackRock owns a piece of everything, but if BlackRock owns more than 5% of it, that's a big deal. BlackRock's expressing a huge amount of trust. This is Steve Cohen, 0.72. I love that he owns almost 3%. This is a nice group of holders. And then what I would do here next is, guess what? I'm going to save their latest 10F. I'm going to copy this. I'm now going to upload AAOI. And I'm going to ask it the same question. Revenue, net loss, cash position 41 million. I'll go back through this again. Okay, here we go. We'll summarize some of this. Gross margins 24%. They do have a net loss, so they're not cash flow positive. Their cash position is declining. I don't like that very much. Leading vertically integrated provider of fiber optic networking products, increased orders, financial performance, negative operating cash flow. So I can't buy and hold this stock. You could buy it maybe on a really short-term kind of trade, and I wouldn't yell at you. But that would, so hopefully, Barry, that helps sort of explain how I just immediately throw out an idea, right? Because otherwise, like, aren't you inundated with people that are telling you to buy a company, right? It's 50 times a day, someone like sends out a trade alert or some stuff. Like, there's just so many of them. How do you know what to buy? And I think you have to learn how to do this kind of analysis yourself. I'm going to turn the light on here. So for those of you that even care that my camera's on. Okay. So I think because there's such a giant flow of people telling you what to buy and this company's great, I think you have to learn how to see for yourself if the company's any good. You could subscribe to a service, or you can just do this. You can become your own service, and you can use AI to help you drill down into a filing, and you can see. And what's amazing about this is you very quickly learn what companies are worth something and what companies are not. So here's the 10Q for Costco, for example. And if you do this one, what's hilarious is it'll just be like super cash flow positive, and it will just be like a brilliant company. So your message will exceed the length limit for this chat. Why don't you suck it, Claude? It sounds like I'm using the free version, Claude. Geez, give me a break. So you very quickly learn what companies are worth something and which companies are not. Strong cash position, 11 billion in cash and short-term investments. Net income is increasing. Operating income is increasing. High renewal rates are increasing. Membership revenue is increasing. Paid members increasing. I mean, come on, right? I love it. What is Costco's debt situation? That's a really important thing for me. I hate debt personally, and I hate debt when looking at a company that I want to own. Long-term debt. So I'll show you how I track this. Long-term debt is $5.9 billion. If the company has more cash on hand, 11 billion, than they have debt, I love it. This for me, this is why I love Costco so much. It's a well-run company. They can survive any kind of market downturn. They could stay open, pay their employees. Like this company is in such a strong cash position, that it just makes me want to cry for happiness. Okay. Please comment on Palantir. I think it's AI and crypto. So Palantir is growing, profitable. It's just it's a magnificent company. Palantir is a takeover target, but that guy's never gonna sell that company. He's gonna grow that to be $1,000 a share company if he can. Palantir is a big election winner for two reasons. So I'm gonna put PLTR here. I'm not going out and buying PLTR, but I did trade Palantir the other day. That was one of my bigger wins. Yeah, 5,000. That was a $5,000 win. I sold puts on Palantir before earnings. I sold them for $2.43 and bought them back for 6 cents the next day and made $5,000. I love that. I think they're a huge winner because Peter Thiel, ultra super conservative. He's going to have a voice in the new administration because he's basically financially backed JD Vance. Once again, I'm not getting political. I'm just telling you the truth, and I don't have an axe to grind about anything, and I'm not mad at anybody about the election for or against. Okay, Palantir. So they're on the right side politically. They're on the right side technologically speaking, and they sell a ton to defense. They're gonna have gigantic additional defense contracts, homeland security contracts. They're gonna do great. So that's just my opinion, of course. But I love that you asked about it. Michael says, good presentation. Do you like the AI stuff? Is that fun? So let me make some notes here about what I do, and then we'll talk about the big hedge. So we'll talk about the big hedge next. How I research with AI. Download or print to PDF the 10Q or 20F SCC filing. Then upload, attach it to ChatGPT or Claude.ai, or Perplexity is good, although I can't spell it. And you ask it, can you summarize this filing and tell me the strengths and weaknesses of this company? Okay, I'm going to rant for a second here, and I apologize to everybody for doing this. And some of you just want me to shut my mouth. Hopefully, you'll just hear me out on this. There's just too much of an emphasis on, and there's too many people congratulating themselves about their great strategy when this squiggly line crosses this squiggly line and blah, blah, blah. And I just think that doesn't work for me, because there's only one reason that companies fail. They run out of money, period. It's the Bill Gurley, famous, maybe the most successful venture capitalist of all time, famously said, all companies fail for the same reason. They run out of cash. That is why I am obsessed with debt, cash flow, and earnings. And I think earnings per share is bull crap. So I don't really look at that. So I'm going to say that again. I think you have to, if somebody sends a trade idea or a trade alert or whatever, and it's a short-term trade, it's usually based on a strategy. I don't really like that very much. I think it's very difficult to short-term trade and buy stocks. So all of my stock buying is long-term stuff I would hold for between 1 month and 10 years. And I only do companies that are cash flow positive and have less debt than they do cash. Okay, that was my rant. It really wasn't that bad, right? Okay. Next, let's talk about the big hedge. The market will crash, period. I'm not predicting that Trump is bad or good for markets. That has nothing to do with it. Obviously, his election was bullish for the markets. Who cares? It's not what I'm interested in. I don't trade one-off events. In the big picture, all bull markets end, and they end suddenly, and they end badly, and nobody sees it coming except for one jackass who says later that he saw it coming, right? Nobody sees it coming. That's a bunch of crap, and we all know it. So we know, however, that the market will crash, period. So you should buy insurance every week. You should buy the cheapest insurance you can. What am I talking about? Here's what I'm talking about. The VIX, in particular UVXY, the ETF. Every week, I buy this Friday's expiration, next Friday's expiration. Really, it's just next Friday's, because once you do this Friday's, you're just always buying next Friday's expiration. Every week on Thursday, I make sure I already own this Friday's expiration or next Friday's expiration. I want you to write this down because I'm gonna finish this off and explain it, but you got to understand first the expiration dates on it, and I'll explain what I'm doing, and I'll explain why, and I'll explain where, and I'll explain how. I'll even do it. Okay, I'll even pull it up for you. This Friday's expiration and next Friday's expiration. Why do I do this? We'll come back around to it in a minute. A call option out of the money. In fact, right now it's the $35 strike, and they're very cheap. So I buy a call option that is very far out of the money, and it's very inexpensive because I'm not buying that much time. And I always have one for this Friday's expiration and next Friday's expiration. Why do I do that? That's so that if the market crashes over the weekend, I own next Friday's call option. Now, why am I doing this? When the market crashes, the VIX goes up, way up. It only happens once a year, and the big crash once every 4 years. So it doesn't happen very often. But these are really inexpensive, and I don't buy a ton of these, and I don't buy them like lottery tickets. I'll spend $100 at a time. Like, I'm not spending very much money. You can buy it so cheaply. Wait till you see how cheap these calls are. Why do I do this? Because when the market crashes, the VIX goes out of control. The VIX goes way up, and we've seen that before. And because the VIX goes way up, call options on the UVXY, which is a leveraged ETF that tracks the VIX, goes way, 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 way. It'll go from $10 to $100 in a day and a half. And these options pay off big time. Now this is the only time I'm gonna use non-Metastock charts because these charts have my trades listed on them. Back in August, in July, we bought the $35 strike, August 2 expiration, we bought them for 29 cents. And those options became worth, literally we bought them for 29 cents and they became worth $30. It was a giant, giant win because the market suddenly crashed and UVXY went up. So why do I pick the $35 strike? There's a missed monthly pivot at $36.22. The next time the market crashes, UVXY is going to $36. And these options are terribly inexpensive. So if I type in UVXY to my options chain and calls, the $35 calls that expire this Friday are 8 cents. You can actually get the 34s for 7 cents. Next week's are 18 cents. So it costs you $7 or $18 to buy one contract. I don't try to go out of control, and I don't try to I'm not trying to buy a lottery ticket or anything. Last of all, I will go to options profit calculator, and I will enter the information in options profit calculator so that I can track how much I would stand to gain if UVXY goes up by this Friday. Okay. Did we have a good time? Did we have a good time? I'm done. I'm done on time.
Are you waiting? Was that a question for me, Rob?
No, I just was kind of just asking myself.
I had a good time.
It was really nice to be here. Once again, everybody, I don't have anything for sale. If you sign up here, I'm not going to try to sell you anything. Eventually, sometime next year, I might sell access to my daily webinar. Probably not. So you can be reasonably confident I'm never going to ask any of you for money. And if you see anybody that says they're me on Facebook or Instagram, I don't have any social media, so they're not me, and you're not talking to me. Okay, Jeffrey, thank you so much for inviting me.
Thank you for coming in. Appreciate it. Great way to finish off the day.
Yeah, this was a lot of fun. Thanks so much. And bye, everybody. I'll send it back over to you, Jeffrey.
All right, sounds good. Seems like, okay, thanks a lot, Rob. Okay, let's go ahead and do this. We'll go ahead and wrap up for today. Seems like I need to adjust some of the settings. You're getting anyway, let's go ahead and kind of just let me do this. Let me make me the presenter. Let me show my screen. And let me make sure that, again, is the correct one. You should be looking at Rob.
I see a picture of Rob, Jeff. Yeah.
Okay, good. Thank you for that. Rob did actually create an add-on with us. It was called the Knoxville Divergence, and it looks for divergence. He actually came up with it in Knoxville, and it's a very, very cool little indicator that's available that you can get. It has an expiration. It'll help you find those. An expert advisor to help you find crystal clear entries and exits. It's normally 99 bucks. It's going to be 50 bucks if you want to get it today. Has a 30-day money-back guarantee on it. www.metastock.com/conf promo. metastock.com/salespchat, or 800-882-3040. All of those will actually get that for you. So, and of course, Metastock, if you want to get any of the offers that we talked about today, go to metastock.com/conf promo. I want to say thank you to all of our sponsors. So AAII.com, they did a real fantastic corporate company. They do a really good job of sponsoring the events. We appreciate all the work that they've done over the years. Stocks and Commodities Magazine, you can find them at www.traders.com. Should join our community. It's absolutely free, thetradersforum.com. You can live market chat with people that are sharing ideas, information, learn about markets. It's a community of traders built to help traders, and we're just getting started with it, and it's going really well. So thetradersforum.com. And then also Trade Thirsty, tradethirsty.com/free. You can get a new report published on November 5th, 2024. Talks about this hot sectors, the ETFs, that kind of stuff. Go up there and get it. And then, of course, the CMT Association, cmtassociation.org. We really do appreciate all of the sponsorships that we've got. Of course, we're Metastock. Been rated #1 31 years in a row. I want to say thank you for coming today. I appreciate it. I hope you had a good time. I hope you learned something. I want to thank you, all the sponsors, all the speakers, all the people that made this event happen. I want to see you again tomorrow. We have another really, really great lineup of people coming in. And for now, if you want to take a look at any of the offers that we offered today, metastock.com/conf promo. If you have questions, give us a call, 800-882-3040, or metastock.com/salespchat. So thank you very much for coming. It's good to see you. I'll see you again in the morning. Goodbye for now. That was quite the